Hi guys, this is CA Balakrishna. In this class we are going to revise Essay 200, overall objectives of auditor and conduct of audit in accordance with standards on auditing. Basically by November 2022 attempt, I will try to complete a revision of all the standards on auditing. Okay, in this class we will be revising Essay 200. Now first of all, before revising the standard, most of the students will feel difficulty to remember the standards. They will be easily able to understand the standard, but they will be feeling difficulty to remember the standard. In order to easily remember the standard, the only thing that you have to do is, first of all, you should get a brief idea of what the standard covers. Okay, once you see the name of the standard, you should get an idea of what the standard covers. Okay, you should get a brief structure of what the standard covers. That is the only way to easily remember the entire standard. Okay, so first of all, before discussing the standard, I'll explain you what will be covered in this Essay 200. Okay, what we are going to discuss in this Essay 200. Basically there are two aspects that we will be discussing in this Essay 200. Okay, by seeing name of the standard, you'll easily understand that the first one is objectives of the independent auditor. Okay, this is the first one that we are going to discuss in this standard. Okay, while conducting audit of financial statements, there are certain objectives that have to be achieved by the auditor. Okay, what are those objectives? That will be discussed by Essay 200. Now, for achieving these objectives, there are certain requirements that has to be possessed by the auditor. Okay, even these requirements will also be discussed in this essay. Okay, now what are the two aspects that we are going to discuss in this essay? First one is objectives that the auditor has to achieve during the audit. Now, to achieve these objectives, there are certain requirements that the auditor has to possess. What are these requirements? Okay, there are two objectives, there are 5 requirements. Once we discuss these objectives and these requirements, the standard gets completed. Okay, these are the two aspects that will be dealt by this standard. Okay, now let us enter into standard. See, this standard deals with what will be dealt in this standard. Objectives of independent auditor. Okay, the objectives that the auditor has to achieve while performing audit of financial statements. There are basically 2 objectives that we'll discuss. Okay, now to achieve these objectives, there are certain requirements that has to be possessed by the auditor. Basically there are 5 requirements that has to be possessed by the auditor that we'll be discussing. Okay, now for the purpose of easily understanding or for the purpose of easily remembering the requirements, I have divided it them into 2 types. Okay, those types we will discuss while revising the requirements portion. But basically there are 5 requirements. Okay, 2 objectives, 5 requirements. Once we complete these 2 plus 7 or 2 plus 5 7, our standard will get completed. Okay, hope this is clear. Now let us enter into objectives of auditor. Okay, objectives of auditor. First of all, auditor is conducting audit of financial statements. Why he is conducting audit of financial statements? Okay, he is conducting audit of financial statements. Why he is conducting? He is conducting audit in order to increase the confidence of intended users on financial statements. Okay, the financial statements of entity will be used by various third parties like banks, financial institutions, governments and various other authorities will use the financial statements of the entities. Okay, now the auditor wants to increase the confidence of those intended users on the financial statements of the entity. That is the reason why auditor is conducting the audit of financial statements. Now, in order to increase the confidence of those external users, first of all, auditor has to get confidence himself. Okay, first of all, auditor has to get himself confidence on the financial statements of the entity. Okay, only if he is able to get confidence on the financial statements of the entity, he will be able to give the report, and based on the report, the confidence of external users will be increased. Okay, thereby the first objective is to obtain reasonable assurance. Assurance means confidence. Okay, the first objective is auditor has to obtain reasonable assurance that financial statements as whole are free from material misstatements, whether due to fraud or error. Okay, what is the first objective? The objective is auditor has to obtain a reasonable assurance, that is a reasonable confidence, that financial statements of the entity as a whole are free from material misstatements, whether due to fraud or error. Basically, misstatements might occur due to two reasons. One is fraud and another one is error. What is the difference between these fraud and error? Basically, if misstatements occur intentionally, okay, if any person commits misstatements intentionally, that will be known as fraud. If any person commits misstatements unintentionally, that would be known as error. That would be the basic difference between fraud and error. Okay, now the auditor has to get reasonable assurance. Here you can observe the term reasonable is used. Basically, there will be two types of assurances. One is absolute assurance, another one is reasonable assurance. Absolute assurance means 100% assurance, 100% confidence. Auditor will not be able to get 100% confidence because due to inherent limitations of the audit. Okay, thereby auditor will always get only reasonable assurance. Okay, what is meant by reasonable assurance? Reasonable assurance means a high level of assurance, but not absolute assurance. Hope that is clear. Okay, now you are saying that auditor has to obtain reasonable assurance. How much of confidence the auditor has to get? Okay, how much of assurance the auditor has to get? The assurance that is sufficient in order to enable the auditor to express opinion on whether financial statements are prepared in accordance with applicable financial reporting framework or not. Okay, that means auditor has to get reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error. Okay, that is the first point. Now you are using the term reasonable assurance. How much of reasonable assurance? The reasonable assurance that is sufficient to the auditor to enable him to express opinion on whether financial statements are prepared as per applicable financial reporting framework or not. That much amount of reasonable assurance has to be obtained by the auditor. Okay, the reasonable assurance that is sufficient to enable the auditor to express opinion on whether financial statements are prepared as per applicable financial reporting framework or not. Okay, that much of reasonable assurance has to be obtained by the auditor. Hope this is clear. Now you here the term used is applicable financial reporting framework. What is meant by applicable financial reporting framework? Basically, the applicable financial reporting framework is the reporting framework that is used by the entity for the purpose of preparation of financial statements. Example would be our Ind AS or normal accounting standards. Those will be examples of financial reporting frameworks. Basically, if you see, there will be two types of financial reporting frameworks. One is fair presentation framework, another one is compliance framework. Now, what is this fair presentation framework? What is this compliance framework? Basically, compliance framework means the financial statements has to be prepared as per the framework. Okay, the financial statements has to be prepared as per this framework only. You need to completely comply with this framework. Okay, that would be known as compliance framework. Whereas in case of fair presentation framework, you have to prepare the financial statements as per the fair presentation framework only. But apart from preparing the financial statements as per fair presentation framework, management has to give acknowledgement or a disclosure, you can say. Okay, what type of disclosure management has to give? It has to give a disclosure stating that in case, okay, while preparing the financial statements, in case management feels that in order to increase the fair presentation of these financial statements, okay, in order to increase the fair presentation of financial statements, if we have to make additional disclosures, or if we have to deviate from the financial reporting framework, then we will make the additional disclosures, or we will deviate from the financial reporting framework for the purpose of increasing the fair presentation of the financial statements. That type of acknowledgement or disclosure has to be given by the management in case of this presentation framework. Okay, that is the main difference between these two financial reporting frameworks. Hope that is clear. Next, basically that would be the first objective of the auditor. Now, auditor has achieved his first objective. Okay, he has obtained reasonable assurance. Now, what would be the second objective? Once he has obtained the reasonable assurance, the next objective is to give report on the financial statements. Okay, that is the second objective, to report on the financial statements and communicate as required by the standards on auditing. Okay, these are the two objectives of the auditor. Hope this is clear. Now here I have given what is meant by a reasonable assurance. Reasonable assurance means high level of assurance but not absolute assurance. I have already explained this. Now assurance means confidence. What is meant by assurance? It is a confidence. Okay, those are the two objectives that the auditor has to achieve as per SA 200. Now, what if auditor fails to achieve these two objectives? Okay, SA 200 says that auditor, you achieve these two objectives during your audit of financial statements. Now, auditor asking, what if I fail to achieve these two objectives? Okay, if you fail to achieve these two objectives, you report in the audit report. Okay, the type of opinion that you give, what is that? Modified opinion. Okay, it would be either qualified opinion or disclaimer or withdrawal of opinion. Okay, in case the auditor fails to achieve the audit objectives as per SA 200, he has to give modified opinion in the audit report. Basically, there will be three types of modified opinions. What are they? First one is qualified opinion. When the auditor will give qualified opinion, there are two situations in which auditor will give qualified opinion. Basically, these types of opinions we will discuss detailedly while discussing SA 700. Here, just I will give an idea. Okay, auditor will give qualified opinion when he has obtained sufficient appropriate audit evidence, and based on this sufficient appropriate audit evidence, auditor feels that misstatements are material but not pervasive. This is the first situation in which auditor will give qualified opinion. Second situation, auditor not obtained sufficient appropriate audit evidence. Okay, auditor has not obtained sufficient appropriate audit evidence, but auditor feels that in case there are any misstatements, those misstatements will be material only but not pervasive. Okay, auditor not obtained sufficient appropriate audit evidence, but auditor feels that in case there are any misstatements, those misstatements will be material only but not pervasive. Okay, in these two situations, auditor will give qualified opinion. Next, adverse opinion. When will auditor give adverse opinion? There is only one situation. Auditor has obtained sufficient appropriate audit evidence, and based on this sufficient appropriate audit evidence, auditor feels that the misstatements are both material and pervasive. In this situation, auditor will give adverse opinion. Next, disclaimer of opinion. When will auditor will give disclaimer of opinion? Auditor has not obtained sufficient appropriate audit evidence. Okay, auditor has not obtained sufficient appropriate audit evidence, and auditor feels that in case there are any misstatements in the financial statements, those misstatements will be both material and pervasive. Okay, in this situation, auditor will give disclaimer of opinion. That means disclaimer means he will not give an opinion at all. Okay, hope this is clear. These are the three types of opinions. Okay, based on the situation, he will give the opinion that is applicable to the situation. In case he is not able to he is not able to achieve the objectives that are prescribed in SA 200. Hope this is clear. By that we have completed objective portion. Okay, 2 objectives we have completed. Now to achieve these 2 objectives, auditor need to have some requirements. How many requirements? There are 5 requirements that we have discussed while starting the SA 200. What are those 5 requirements? Okay, now for the purpose of easily remembering these requirements, I have divided them into 2 types. Okay, firstly, qualities of auditor. Secondly, duties of auditor. Okay, there are 3 qualities of auditor, there are 2 duties of auditor. Total there are 5 requirements. Okay, that means to achieve those 2 objectives, auditor need to have these 3 qualities and these 2 and has to perform these 2 duties. Okay, 3 qualities, 2 duties to achieve 2 objectives. Okay, now first of all, let us see what are the qualities that the auditor has to possess in order to achieve the objectives. First one, ethical requirements. Auditor need to comply with the ethical requirements. Now what will be included in these ethical requirements? There are 3 things that are included in these ethical requirements. What are they? First one, auditor need to comply with code of ethics. Code of ethics issued by ICAI. Next, auditor need to have all these fundamental principles. There are 5 fundamental principles. What are they? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. These are the 5 fundamental principles that the auditor should possess. Now we'll discuss them. Integrity. What is meant by integrity? Integrity means being truthful. Okay, the auditor should not give false information. He should always be truthful. Okay, next, objectivity. What is meant by objectivity? Basically, this objectivity is used in relation to decision making. Okay, there are 2 types of terminologies. One is objective decision making, another one is subjective decision making. What is the difference between these 2? Objective decision making means you are taking a particular decision based on the facts. Okay, if you are taking the decisions based on the facts, that would be known as objective decision making. Okay, that would be objectivity. In case you are making the decisions not based on facts, okay, as per your wish you are taking the decisions, okay, as per your feelings you are taking the decision, that would be subjective decision making. Okay, the auditor should always take objective decisions only. That means the decisions of the auditor must be based on the facts. That is objectivity. Okay, next, confidentiality. You know this, auditor need to maintain confidentiality. Next, professional behavior. Auditor need to behave professionally. And the last one is professional competence and due care. While performing his duties, auditor must exercise due care and he should always be updated with the latest updates. That would be professional competence. Okay, these are the 5 fundamental principles. And the next one is auditor must be independent. Independent means even this independence is also related to decision making only. That means the decisions that are taken by the auditor should not be dependent on a third party. Okay, mostly students will be confusing between this independence and objectivity. these two terms are relating to decision making only. What is the difference between these two? See, objective decision making means auditor must take decisions based on facts. That would be objective decision making. Next one, independence means the decisions that are taken by the auditor should not be influenced by a third party. Okay, that would be the difference between objectivity and independence. Hope this is clear. By this we have completed ethical requirements. That is the first requirement or the first quality that the auditor should possess in order to achieve the objectives that are specified under this standard. Okay, next requirement, professional judgment. What is meant by professional judgment? See, even this professional judgment is also used in relation to decision making. Okay, for decision making, auditor needs to apply his knowledge, his experience and his training. Okay, there are three terms. One is knowledge, one is experience and another one is training. Auditor need to apply these three things in order to take informed decisions. That would be known as professional judgment. Okay, let us see. Professional judgment, application of training, knowledge and experience in making informed decisions. Okay, this training, knowledge, experience relating to what? Relating to audit and accounting aspects. Okay, the training and the knowledge that the auditor has obtained relating to this auditing and accounting has to be used by the auditor for the purpose of taking informed decisions. That would be known as professional judgment. Auditor need to apply his professional judgment. Okay, now there are certain areas in which the auditor can use his professional judgment. What are they? While determining materiality. Okay, there is separate standard that will be dealt with the materiality, that is SA 320. There will be clearly understanding relating to this concept of materiality. And while determining audit risk, he need to apply professional judgment. And while determining nature, timing, extent of audit procedure, while drawing conclusion based on audit procedure, and evaluating sufficiency and appropriateness of audit procedure. These are the some of the areas in which auditor can use his professional judgment. Okay, that is the second quality or the second requirement that the auditor should possess in order to achieve the two objectives. Okay, moving to the third quality, professional skepticism. What is meant by this professional skepticism? Basically, in this professional skepticism, there will be two things. One is questioning mind. The auditor should have questioning mind. Okay, and another one is auditor should be alert. These are the two aspects that will be covered in this professional skepticism. See, professional skepticism, attitude of having questioning mind. The auditor must always have a questioning mind and being alert to condition which may indicate possible misstatement due to fraud or error. Okay, at all the times auditor must be alert in order to identify whether there are any misstatements due to fraud or error. Let's say, for example, auditor has obtained some internal evidence. Basically, this professional skepticism will be mainly useful while obtaining the audit evidences. Let's say auditor has obtained some internal evidence relating to some goods purchased by the entity. Okay, once the entity purchases the goods and the goods are received in the go down, the goods receipt note will be prepared in the entity. That will be a internal document. Okay, now in this goods receipt note, there are the quantity that is mentioned is 50 kg. Okay, this is the internal evidence that the auditor has obtained. Auditor will also obtain external evidence. Okay, he will cross check external evidence. Let's say purchase invoice. In the purchase invoice, it is 100 kgs. Now there is a difference. Okay, now auditor should become alert. Okay, auditor should become alert. He should use his professional skepticism, okay, to the situations indicating any misstatement due to fraud or error. Okay, that would be one of the area in which auditor can apply his professional skepticism. That would be the third quality or third requirement that the auditor should possess in order to achieve the two objectives. Okay, those were the qualities. Moving to the duties that the auditor has to perform in order to achieve the objectives. The first duty is auditor need to obtain sufficient and appropriate audit evidence. Okay, auditor need to obtain sufficient and appropriate audit evidence. Why auditor need to obtain sufficient appropriate audit evidence? In the objectives, we have discussed that the main objective of the auditor is to obtain a reasonable assurance. Okay, how the auditor will get reasonable assurance? Okay, he will get the reasonable assurance by collecting evidences. Okay, by collecting sufficient appropriate evidences, the auditor will get a reasonable assurances. Okay, based on the evidences that the auditor has collected, he will get a reasonable assurance on the financial statements of the entities. Okay, that is the reason why auditor will obtain evidences during the audit. Now, these evidences must be sufficient and appropriate. Okay, sufficient and appropriate for what? Sufficient and appropriate for reducing the audit risk to acceptably low level. Okay, the auditor has to obtain that much of evidences which are sufficient and appropriate in order to reduce the audit risk to a acceptably low level. Hope this is clear. Okay, auditor has to obtain sufficient appropriate audit evidence to reduce audit risk to acceptably low level. Hope this is clear. Now, while obtaining sufficient while obtaining audit evidences, auditor need to utilize his professional judgment to determine whether these evidences are sufficient and appropriate or not. Okay, to determine whether the audit evidences that the auditor has collected are sufficient and appropriate or not, he will use his professional judgment. Okay, auditor will exercise his professional judgment. Now, once the evidences are collected, while analyzing the evidences or while going through the evidences, auditor will again use his professional skepticism. Okay, that is, he will question the evidences to determine whether the evidences collected are sufficient and appropriate or not. Hope this is clear. That is relating to obtaining sufficient and appropriate audit evidence. That is the fourth requirement that the auditor should possess, or the duty that the auditor has to perform in order to achieve the objectives that are specified under this standard. Next, and the final duty is conduct audit in accordance with standards of auditing. That means he need to understand the entire text of the standards on auditing. Okay, he need to have an idea of entire text of the standards on auditing. Okay, what the standard says, he need to have an idea. And in case while performing an audit, in case there is any non-compliance with the standards on auditing, he need to report the same in the audit report. Hope this is clear. And another important point is these standards on auditing are applicable to the auditor but not to the management. Okay, by this we have completed revision of SA 200. Okay, in the next class we will revise another standard. Hi guys, this is CA Balakrishna. In this video we will be revising SA 210, agreeing to the terms of audit engagement. Now, before discussing the standard, first of all I'll explain you what are the aspects that will be dealt by this standard. Okay, the brief structure of this standard. Basically, I have divided this standard into three parts. The first part deals with when to accept or continue the engagement. Now, I am an auditor. A client approaches me and offers me an audit engagement. Now, whether I have to accept this audit engagement or reject this audit engagement, this decision will be taken by the auditor based on certain conditions. Okay, we will be calling it as preconditions. Okay, if the preconditions are existing, then the auditor will accept the audit engagement. If the preconditions do not exceed, auditor will reject the audit engagement. These preconditions will be discussing. That is the first aspect that will be dealing in this standard. Okay. Second aspect, audit engagement letter. Now, auditor feels that the preconditions are present, then he will take a decision to accept the audit engagement. Once he accepts the audit engagement, he need to issue an audit engagement letter to the client. Okay. Now, what are the contents that should be included in this audit engagement? Okay, and what is the form of this audit engagement? These aspects will also be discussed by this standard. Okay, that is the second part. Next, there are certain special cases. Even these special cases are also related to audit engagement letter only. Okay, that is whether audit engagement letter has to be issued in case of recurring audits, that will be discussed by this standard, and whether audit engagement letter has to be issued in case of audit of components. Even this will also be discussed in this standard. Okay, this is the brief structure of this standard SA 210. Now, first of all, let us start with the first aspect, that is when to accept or continue the audit. Okay, the decision of accepting or continuing the audit will be taken by the auditor based on whether preconditions exist or not. What are the preconditions? Okay, preconditions to accept the audit engagement. That means before accepting the audit, the auditor will check whether these conditions are present or not. Okay, now this standard specifies what are these conditions. Okay, there are some list of 4 conditions that has to be verified by the auditor. Let us see those conditions. First one, acceptability and suitability of financial reporting framework. What is meant by a financial reporting framework? We have already discussed in SA 200. Financial reporting framework is a framework that is used by the management for preparation of its financial statements. Now, auditor has to check whether this financial reporting framework that is followed by the management is acceptable and suitable to the entity. Now, let's say entity is a banking company. Okay, client is a banking company. Now, banking company has to prepare its financial statements as per the guidelines issued by RBI. Okay, but the client is following Schedule 3 format. Here, the financial reporting framework is not suitable and acceptable. In this case, auditor will not accept the audit engagement because the financial reporting framework that is being followed by the client is not suitable and not acceptable. Okay, that is the first precondition auditor will check. Okay. Next precondition the auditor will check is he will confirm with the management whether management knows and acknowledges its responsibility to prepare financial statements. That means auditor will get a confirmation from the management stating that management knows its responsibility to prepare financial statements and management also acknowledges to prepare its financial statements. That is simply preparation of financial statements is a responsibility of management that should be acknowledged by the management. Okay, that is the first thing that has to be acknowledged by the management. Next, establishment of internal controls. Okay, even establishment of internal controls in the entity is also responsibility of the management. Thereby, management should understand and acknowledge its responsibility to establish the internal controls in the entity. Okay. Next, auditor will also get a confirmation from the management. Okay, stating that management allows the auditor or management gives the auditor whatever the documents, whatever the reports, whatever the information, whatever the additional information that has been asked by the auditor, and also management gives auditor unrestricted access to all the persons in the entity for the purpose of obtaining audit evidence. Okay, these 3 aspects has to be understood and acknowledged by the management. What are the 3 aspects? First one, preparation of financial statements. Next one, establishment of internal controls. Third one, giving the auditor all the information, reports, documents, additional information and unrestricted access to the persons. Okay, basically these are the 4 preconditions. See, let us see it. Management understands and acknowledges its responsibility to prepare financial statements, to establish internal controls, to provide the auditor with access to all information, documents and records, additional information requested by the auditor, and unrestricted access to persons in entity to obtain audit evidence. Okay, these are the 4 preconditions. First precondition, second precondition, third precondition, fourth precondition. Hope this is clear. These are the 4 preconditions that has to be verified by the auditor before accepting the audit engagement. If these preconditions exist, auditor accept the audit engagement. If these preconditions doesn't exceed, auditor will not accept or will not continue the audit engagement. Okay. Now, apart from these preconditions, auditor should also check whether there is a common understanding of terms of audit between auditor and the management or those charged with the governance. That means the terms of audit engagement are understood in same way by both auditor and management or those charged with governance. Okay, these 2 conditions, if these 2 are present, auditor will happily accept the audit engagement. Okay, preconditions must be present and there should be common understanding of terms of audit engagement. Okay, by this we have completed the first part of the standard. Moving to the second portion, that is audit engagement letter. Okay, client approached the auditor, auditor checked for the preconditions, preconditions are present. Now, once the preconditions are present, auditor will decide to accept the audit. Once he decides to accept the audit, he will give a audit engagement letter to the client. Okay, previously client would have issued a appointment letter to the audit. Okay, in response to that, auditor will give a audit engagement letter to the client. Now, what should be included in this audit engagement letter? Okay, and what should be the format of this audit engagement letter? These aspects will also be dealt in this essay 210. Let us see. Audit engagement letter contents. What are the contents that should be included in this audit engagement letter? The first aspect that should be included in this audit engagement is what is the objective and what is the scope of the audit. Okay, basically in case of a statutory audit, the scope will be very wider. Okay, whereas let's say in case of a stock audit, the scope will be very limited. It would be confined only to the stock. Okay, this scope and objective of the audit must be included in the audit engagement letter. Okay, you can simply say that this audit engagement letter is like a contract between auditor and the client. Okay, now that is the first aspect that should be included in the audit engagement letter. Next, audit engagement letter should also contain responsibilities of management. Okay, what are the responsibilities of the management must be included in this audit engagement letter, so that in future there will not be any disputes between the auditor and the management in relation to the responsibilities of the management. Okay, basically what would be the responsibilities of the management? To prepare financial statements, to establish internal controls, and to give the auditor whatever the information he has asked for. Okay, and if at all there are any additional responsibilities, even those responsibilities of management should also be included in the audit engagement letter. Okay, next, responsibilities of the auditor. Okay, even the responsibilities of the auditor should also be included in the audit engagement letter. What would be the responsibilities of the auditor? First responsibility will be to conduct the audit in accordance with standards on auditing. Next, to issue the audit report based on the audit that he has conducted. Okay, basically these will be the responsibilities of the auditor. And identification of applicable financial reporting framework. That means the client has been following a particular financial reporting framework for the preparation of financial statements. Now, which financial reporting framework is being followed by the client? Even this has to be included in the audit engagement letter. Okay. Next, basically it would be the duty of management to determine the financial reporting framework that is applicable to it. Okay, and that applicable financial reporting framework has to be included in the audit engagement letter. Next, what would be the expected form and content of audit report? Okay, these are the 5 contents 1, 2, 3, 4, 5. Okay, these 5 contents has to be included in the audit engagement letter. Now the question is, apart from these 5 contents, whether additional terms can also be included in the audit engagement letter, or only these 5 terms has to be included in the audit engagement letter. See, apart from these 5 terms, any other terms that the auditor and management feels that has to be included in the audit engagement letter can be included in the audit engagement letter. Hope this is clear. Next, format. What should be the format of this audit engagement letter? It must be mandatorily in a written format. Okay, oral audit engagement letter is not accepted. Okay, it must be in a written format. Next, change in the terms of audit engagement letter, audit engagement that results into lower assurance. See, auditor has given audit engagement letter and he started conducting the audit. Okay, he started conducting the audit, and during the audit, management approaches the auditor and requests the auditor to change terms of audit engagement letter. Okay, auditor started the audit, and during the audit, management requested the auditor to change the terms of audit engagement letter. Whether this type of request can be accepted by the auditor or should not be accepted by the auditor, let us see that. Now, once management requested, the first thing the auditor will have to check is whether there is a reasonable justification. Okay, this term reasonable justification is important. Okay, the auditor should check whether there is reasonable justification for the changes that are requested by the management. If the auditor feels that there are reasonable justification, then the auditor can accept the changed terms and he can include them in the audit engagement letter. Okay, that would be the first case when there is a reasonable justification. Now let's say there is no reasonable justification. Okay, auditor finds that there is no reasonable justification for the changed terms that are requested by the management, and management does not allow the auditor to continue the audit as per the original engagement letter. Okay, management saying that you accept these terms of engagement, changed terms of engagement. In case you don't accept these changed terms of engagement, we will not allow you to conduct the audit as per the original engagement letter. Okay, in this case, what the auditor has to do? In this case, auditor has to straight away withdraw from the engagement. Okay, because he doesn't find any reasonable justification for the changed terms, and he is not allowed by the management to conduct the audit as per the original engagement letter. Okay, these two conditions must be seen. Okay, if these two conditions are satisfied, auditor can straight away withdraw from the audit engagement letter, audit engagement. Once he withdraw from the audit engagement, he should also determine whether there is any responsibility on him to communicate this type of withdrawal to the management or those charged with governance or any other authority. Okay, as per the law, in case there is any responsibility on him to communicate this matter, he has to communicate that he has withdrawn from the engagement to those respective people as per the requirement. Hope this is clear. Now here you can get it out that what is meant by a reasonable justification. Okay, what is a reasonable justification? Now let's say at the time of entering original audit engagement, letter, management misunderstood some of the terms of audit engagement. That is the reason why management requested for change in the terms of audit engagement. That would be a reasonable justification. Now let's say auditor conducting the audit, and auditor requested the management to provide physical access to the stock or to provide physical access to some of the assets, but management doesn't want to provide that physical access. Okay, thereby this is the reason why management wants to change the terms of the audit engagement, thereby not allowing the auditor to access the stock physically. This would not be a reasonable justification. Okay, basically the auditor has to decide, the auditor has to apply his professional judgment to determine whether there exists a reasonable justification or there doesn't exist a reasonable justification. Okay, that has to be decided by the auditor based on his professional judgment. Okay, next, that is the second aspect that we have covered relating to audit engagement letter. Okay, next, moving to the special cases, that is audit engagement letter in case of recurring audits. Let us see. Now let's say first year I have been appointed as auditor of, let's say, some A Limited. Okay, in the first year I have given the A Limited the engagement letter. In the second year also, again I am only appointed as the auditor. Third year also I am only appointed as the auditor. Whether auditor should mandatorily give another engagement letter in the second and third years also. Okay, in case of recurring audits also, that we will be discussing. Generally speaking, okay, generally speaking, a new audit engagement letter is not required in case of recurring audits. Okay, this is generally speaking, a new audit engagement letter is not required in case of recurring audit, but there are some exceptional situations. In case of these exceptional situations, auditor has to give a new engagement letter in case of recurring audits. What are they? Let us see. Exceptions. What are the exceptions? The first exception, change in the terms of audit engagement. Okay, it is obvious that if there is any change in the terms of audit engagement, auditor has to give a new engagement letter. Okay, thereby in case there is any change in the terms of the audit engagement, even for the recurring audit also, the auditor has to give the new engagement letter as per the changed terms. Okay, next, change in senior management. Okay, now let's say in the first year auditor has issued a audit engagement letter. At that time there were certain management present. Okay, now in the second year there is a change in the management. Okay, the management that is present in the first year is not present in the second year. Even in this case also, auditor has to give a new engagement letter for the recurring audit, since there is a change in the management. Okay, for the new management, the auditor has to communicate the terms of the audit engagement. That is the reason why he has to issue a audit engagement letter. Next, change in the ownership. Okay, in case there is any change in the ownership, even then the auditor has to give a new engagement letter for recurring audits. Change in regulatory requirements or financial reporting framework. Now let's say the entity was following accounting standards for preparation of financial statements in the first year. Now suddenly entity has shifted its financial reporting framework from accounting standards to Ind AS as per the requirements of law. Now there is change in the regulations or change in the financial reporting framework. In this case also, auditor should give a new engagement letter for the recurring audit. Hope this is clear. Next, change in nature and size of the entity's business. Now let's say in the first year when the auditor was appointed, entity was carrying on manufacturing business. Okay, during the first year auditor has given some engagement letter. In the second year also auditor was appointed as auditor. The same auditor was appointed, and in the second year the company has closed its manufacturing business and started a new business. Let's say banking industry. Okay, banking business. It has started banking business. Now there is a huge shift in the nature of business from manufacturing entity to a banking entity. This requires the auditor to give a new engagement letter as per the change in the nature of the business of the entity. Hope this is clear. Next, indication that entity misunderstood the objective and scope of the audit. Okay, if the auditor feels that in the first year I have given some engagement letter, but I feel that in the first year entity has misunderstood the scope of the audit or objective of the audit or the terms of the audit engagement letter. Okay, thereby I need to give more clarity to the entity. Okay, thereby in the second year, that is in the recurring audit, I will give a new engagement letter with a more clarity to the entity. Okay, thereby if auditor feels or auditor gets any indication that entity has misunderstood the scope or objective of the audit, he will give a new engagement letter. Hope this is clear. Next, audit of components. See, components means let's say the entity is having a branch or entity is having any subsidiary or associate. Those will be known as components. Now, there is A Limited. There is A Limited. Now, I have been appointed as auditor of A Limited. Okay, and I have also been appointed as auditor of some, let's say, subsidiary of A Limited, associate of A Limited, or some branch of A Limited. Now, whether I have to issue a separate engagement letter to the subsidiary or one engagement letter for both A Limited and subsidiary would be sufficient. Okay, that is, one engagement letter for both component and entity would be sufficient. For this question, we cannot straight away tell that yes, auditor has to issue separate audit engagement letter, or no, auditor should not issue separate audit engagement letter. This can't be said straight away. Auditor has to decide based on certain conditions. Okay, what are those conditions? Okay, based on certain criteria. See, it depends on who appoints component auditor. Okay, this is one of the criteria that the auditor has to check in order to determine whether he has to issue a separate audit engagement letter for the component. Okay, that is, who appoints the component auditor. If parent entity itself appoints the component auditor, in that case there will not be any necessary to give another engagement letter to the component, because the parent entity itself has appointed the auditor. Okay, but it is not final that if the parent entity only appoints the auditor should not issue the audit engagement letter. Auditor has to decide it based on the situation. Okay, but the standard says that before deciding, you consider this point. Okay, whether you have been appointed as auditor of component by the parent entity itself, you consider this. Okay, based on these factors, you determine whether to give audit engagement letter or not to give audit engagement letter. Okay, standard doesn't straight away tells the auditor to either give or not to give the audit engagement letter to the components. It is left to the auditor whether to give or not to give the audit engagement letter based on these conditions. Okay, by considering these criteria. Okay, next criteria, legal requirements. Okay, standard asks the auditor to check whether there are any legal requirements to give separate audit engagement letter to the component. Okay, you check this factor also. Okay, auditor will check. Next, degree of ownership by the parent. Okay, whether the parent entity holds almost 90% of the component, or parent entity holds only a small portion of the component. Okay, you also consider this aspect in determining whether to issue separate audit engagement letter or not. Next, whether separate audit report is to be issued. Okay, whether you have to issue separate audit report to the component also. Okay, if you have to issue separate audit report to the component, then it might be necessary to issue separate engagement letter also. Okay, you consider this factor also. Next, degree of independence of a component from the management of the parent. Okay, you consider all these 5 factors and determine whether you should give a separate engagement letter to the component or a single engagement letter to both parent entity and the component. Hope this is clear. Next special aspect, limitation on scope prior to audit engagement acceptance. Okay, before auditor accepted the engagement only, the management has put some restrictions on the auditor. Okay, auditor has not yet accepted the engagement. Okay, client has approached auditor. Okay, now auditor is checking some preconditions. Okay, auditor is verifying whether preconditions are existing or not. During this stage only, the management puts some restrictions on the auditor. Okay, if management puts some restrictions on the scope of auditor, what the auditor should do? If the auditor feels that these restrictions that has been put on me will result in disclaimer of opinion. Okay, management has put these restrictions on me and I accept the engagement and I conduct the audit, and while giving the report I give a disclaimer of opinion. Okay, if that is the situation, then why to accept the audit in the first case? Okay, if there are any limitations that has been put on the auditor, it would be better not to accept the engagement at all. Okay, not to accept. Same has been said by the standard. Auditor shall not accept unless required by law or regulation. Hope this is clear. By this we have completed revision of essay 200, essay 210. In the next class we will be meeting with another standard. Hi guys, this is CA Balakrishna. In the previous video we have revised essay 210. Now we will be revising essay 230, audit documentation. In between we have essay 220 that we will be revising along with SQC 1. Okay. Now in this video we will just revise essay 230 audit documentation, which is a very small standard and also a very easy standard. Now basically this standard has is been effective from 1st April 2009. Now before entering into the standard, first of all let us discuss what is present in this standard, the structure of the standard. See, I have divided this entire standard into 5 parts. Okay, you can consider it 4 parts because 2 parts are together. Let us see. Firstly, purpose of audit documentation. What is the purpose of audit documentation and benefits of audit documentation? What is the benefit of audit documentation? The points that are covered under these 2 aspects are same. Okay, we can write same points for these 2 aspects, that is need and purpose of audit documentation or benefit of audit documentation. Okay, this is the first aspect that will be dealt by this standard. Next, form, content and extent of audit documentation. This is a very important concept. Frequently ICI might ask question on this form, content and extent of audit documentation. At CA final level it is important. Next, assembly of final audit file and ownership of audit documentation. These are the 4 aspects that we will be dealing with in this standard. What are they? Need, purpose or benefit of audit documentation. Second one, form, content and extent of audit documentation. Next, assembly of audit file. Next, ownership of audit documentation. Once we cover these 4 aspects, the standard essay 230 will get completed. Now, the name of the standard itself says that it deals with audit documentation. Now, what is meant by audit documentation? Basically, audit documentation is record of 3 things. What are these 3 things? See, audit documentation is record of audit procedures performed. Okay, and audit evidences obtained and conclusions reached. Okay, the record of these 3 aspects will be known as audit documentation. See, audit documentation is a record of audit procedures performed. Okay, by performing audit procedures you will be obtaining what? You will be obtaining audit evidences. The next point is that only audit evidences obtained, and based on the audit evidences what you will do? You will reach to a conclusion, that is conclusions reached. The record of these 3 things will be known as audit documentation. Hope this is clear. Okay, these 3 are linked to each other because first of all, basically what is the objective of the auditor? The objective of the auditor is to obtain reasonable assurance that financial statements are free from material misstatements. How he will obtain reasonable assurance? He will obtain reasonable assurance by performing audit procedures. Okay, based on audit procedures performed, what he will gather? He will gather audit evidences. Based on audit evidences he will reach the audit conclusions. Okay, based on audit conclusions he will give the report. Okay, now the audit documentation is record of these 3 things. Next, moving to benefits, purpose or need for audit documentation. Okay, what is the benefit for what is the benefit of maintaining audit documentation, or what is the need or purpose of audit documentation? Firstly, audit documentation provides evidence that audit was planned and performed. See, audit documentation will be prepared by the auditor at all the stages, that is at planning stage, at execution stage and at reporting stage. At all these stages auditor will prepare audit documentation. Now what is the proof that auditor has actually planned the audit and performed the audit? The audit documentations that the auditor has gathered at these stages will act as a proof or will act as evidence that auditor has actually planned how to conduct the audit and has actually conducted the audit. Okay, the first benefit or the first need of audit documentation is to act as evidence that audit was planned and performed. Okay, that is the first benefit. Next benefit, what is the next benefit of audit documentation? It acts as evidence of auditor's basis, just a second, of auditor's basis for achievement of overall objectives. What are the overall objectives of the auditor? The objective of the auditor is to obtain reasonable assurance that financial statements are free from material misstatements. Now, whether auditor has achieved his objective or not, okay, this will be proved by the audit documentation. Okay, with the help of audit documentation, auditor will be in a position to prove whether he has obtained or whether he has achieved overall objectives or not. Okay, the audit documentation will act as a evidence of auditor's basis for achievement of overall objectives. Hope that is clear. These are the first two benefits of audit documentation. Next, audit documentation will also assist in planning and performing the audit in future. That means in the current year, while performing the audit, auditor has obtained audit evidences and he has documented. Okay, basically he has performed audit documentation in the current year. Now in the next year also he will be conducting the audit. Now to plan the audit for next year, the audit documentation that has been done during current year will be useful. Okay, based on the audit documentation of the current year, the auditor will be able to plan the audit for the next year. Okay, that would be the third benefit or third need or purpose of audit documentation. Next, discharge of review responsibilities. See, as per SA 220, there will be quality review will be conducted. To conduct this quality review, the audit documentation that the auditor has obtained or auditor has prepared will be useful during the quality review process. Okay. Next, fixing accountability for work performed. See, if auditor doesn't maintain audit documentation, he will not able to assess who has performed which work. Okay, thereby in future, if there are any deficiencies or if there are any mistakes in the work performed, the auditor will not be able to fix the responsibility or fix the accountability on the persons who has performed that work. Okay, thereby maintaining audit documentation will also help the auditor to fix accountability of the person for the work that he has performed. Next, retaining records for the future. Okay, audit documentation will help the auditor to retain the audit. Okay, proofs relating to the audit that has been conducted by the auditor. Basically, he has to retain these records for a period of 7 years from the date of audit report. Okay, next, conduct of quality control review. This point we have already discussed here. Okay, next, conduct of external inspection by authorities. Sometimes external authorities will also conduct inspections. During these inspections, the audit documentation that the auditor has prepared will help him to prove the work that he has performed. Okay, these are the benefits of audit documentation. Next, form, content and extent of audit documentation. Basically here there are three aspects. Form, that is what is the format of audit documentation that has to be maintained. Content, okay, what should be included in this audit documentation. And extent of audit documentation. Extent means you are saying to maintain audit documentation, how much of audit documentation has to be maintained. Okay, that will be dealt by this extent. Now we will discuss each of these 3 points. Let us start with the extent of audit documentation. Okay, let us start with this third point, extent of audit documentation. See, extent of audit documentation means how much of audit documentation has to be maintained. The standard says that the audit documentation that is sufficient to enable an experienced auditor to understand the audit procedures performed, the audit evidences obtained, and audit conclusions reached. Okay, that much of documentation must be maintained. Okay, how much of audit documentation must be maintained by the auditor? The audit documentation that is enough to enable another auditor, okay, another auditor who is not at all concerned with this work will be able to understand the work that has been performed by the auditor. Okay, that much of audit evidence must be, audit documentation must be maintained by this auditor. Okay, see, that is sufficient to enable experienced auditor who is not related to this work is able to understand audit procedures performed, results of audit procedures and audit evidence obtained, and conclusions the auditor reached. Okay, the other auditor, by seeing the audit documentation, should be able to understand the audit procedures that has been performed by this auditor, audit evidences that has been obtained by this auditor, and audit conclusions that have been reached by this auditor. Okay, that much of audit documentation must be maintained. Next, that is the third aspect, extent of audit documentation. Now we will see these two aspects, form and content of audit documentation. We will see these both aspects together, because if you know what is the content to be included in the audit documentation, as per the content you will plan the format of the audit documentation. Thereby we will see these both points together. Let us see form and content of audit documentation in respect of audit procedures performed. Okay, in respect of audit procedures performed, what has to be included in the audit documentation? First of all, you have to include nature, timing, extent of audit procedures performed. Okay, next, characteristics of items or matters tested. Okay, during the audit procedures, what are the items that you have tested, or what are the matters on which you have applied this audit procedures? Okay, the characteristics of those items must also be documented. Next, who performed the audit procedures and the date on which such person has performed the audit procedures. Okay, even that has to be documented. Even that aspect has to be included in the documentation. Next, after performing the audit procedure, there will be certain person to review the audit procedure that has been performed. Okay, who reviewed the audit procedure and the date on which such other person has reviewed the audit procedure. Okay, these four aspects has to be included in the audit documentation relating to audit procedures performed. Hope this is clear. Next, in respect of communication with the client or regulatory body or the management. Okay, in respect of communications that you have made with the management or the other regulatory bodies, what are the aspects or what is the content that has to be included in the audit documentation? You have to include, see, document significant matters discussed with management to those charged with other parties. Okay, you have to document what are the important aspects that you have discussed with the management or those charged with governance. Okay, relating to that, what is the nature of such discussion that you have made, and who is the party with whom you have discussed. Okay, whether it is management, those charged with governance, or any other regulatory body. Okay, these aspects has to be included in the audit documentation. Next, there is one point, audit documentation must be done in a timely manner. Timely manner means within 60 days from the date of audit report. Generally, it is prescribed, or it will be a good practice to document or to conduct the audit documentation during the audit only. Okay, in case there are any documentation that is left over after audit has been performed, you need to complete the audit documentation within 60 days from the date of audit report. Hope this is clear. Okay, generally it is prescribed, or it is a good practice to perform the audit documentation along with the audit only. In case any audit documentation is left over, you need to complete that audit documentation within 60 days from the date of audit report. Hope this is clear. Next, matters arising after date of auditor's report. That means significant events that are arising after the date of auditor's report, that is subsequent events. When subsequent events arise as per SA 560, which deals with subsequent events, if the management modifies the financial statements or changes the financial statements, then auditor should also change his auditor's report based on the changed financial statements. Now in this case, if management has changed the financial statements due to subsequent events, then what should be included in the auditor's documentation, in the audit documentation? Let us see. Auditor shall document circumstances encountered. Okay, what are the reasons why management has issued or prepared a new financial statements or changed the financial statements? Okay, what are the circumstances that made the management to modify the financial statements? Okay, that has to be documented. Next, additional audit procedures performed, evidence obtained, and conclusion reached. Okay, if management prepares or modifies the financial statements, then auditor will need to apply additional audit procedures on those modified financial statements. Okay, those has to be documented by the auditor, and after performing the additional audit procedures, he will obtain additional audit evidence. Even such additional audit evidence has to be documented, and based on that additional audit evidence, he will reach audit conclusions. Even those conclusions has to be documented. Okay, and when and who made the changes to the documents? Okay, who is the engagement team member who has performed these audit procedures and changed the audit documentation? Okay, his name, and when he has changed these audit documentation has to be documented, and after changing there will be some person to review, who has reviewed and when he has reviewed. These has to be documented in respect of matters that are arising after the date of auditor's report. Okay, next, factors affecting form, content, and extent of audit documentation. This is important question for intermediate students. Okay, what are the factors that affect the audit documentation? Size and complexity of the entity. If the entity is huge, the audit documentation will be huge. Next, identified risk of material misstatement. Okay, the identified risk of material misstatement will also affect the amount of audit documentation that the auditor will gather. Next, nature of audit procedure performed, significance of audit evidence obtained, nature and extent of exceptions identified, need to document conclusions not readily determinable. All these 6 factors affect the amount of audit documentation that the auditor need to obtain. Next, assembly of audit file. Basically, audit file includes all the audit documentations that the auditor has prepared. Generally, this audit file must be prepared within 60 days from the date of auditor's report, and this audit file must be retained by the auditor for a period of 7 years from the date of audit report. And in case there is any modifications that were made to the audit file, the auditor need to maintain documentation relating to why such modification has been made, when such modification has been made, and who has made such modification. Hope this is clear. Next, ownership of the audit documentation. Even this is also important question at the final level. ICI frequently asks this question also. Basically, as per SQC1, the audit documentation is the auditor is the owner of the audit documentation, and he may at his discretion share this audit documentation with other parties. Okay, at his discretion, but there is no mandate, or it is not mandatory on the auditor to share his audit documentation with others. Okay, see, it is as per SQC1, not as per SA 230. Most of the people will think that the audit documentation is a property of the auditor as per SA 230. No, SA 230 doesn't speaks about it. SQC1 says that audit documentation is the property of the auditor. Okay, auditor is the owner of the documentation. As per SQC1, audit documentation is the property of auditor unless otherwise specified by law and regulation. He may at his discretion make portion or extract from the audit documentation available to the client or any other regulatories. Hope this is clear. By this, essay 230 audit documentation has been completed. Hi guys, this is CA Balakrishna. In the previous video we have discussed essay 230. Now in this video we will be revising essay 240, auditors responsibilities relating to fraud in an audit of financial statements. Basically this is the most favorite standard of ICAI. Literally the institute will twist the students with its questions in the examination. Okay, basically in the examination the type of difficulty that the students faces from this standard is that mainly they will not be able to identify the question in the exam. Okay, once they see the question in the examination, they will not be able to identify whether that question is related to essay 240 or not. Okay, that is the type of difficulty that people will face in the examination, particularly relating to this standard. So what I recommend is to go through to solve the questions that are present in the question bank related to this standard. Okay, that would help you to some extent. Now with that, let us start with the revision of essay 240, auditors responsibilities relating to fraud in an audit of financial statements. If you read this name of the standard, you can come to a conclusion that this standard mainly focuses on fraud. Now in the financial statements, misstatements can arise due to two reasons. One is fraud and the another one is error. What is the difference between this fraud and error? Basically error is a unintentional act, whereas fraud is a intentional act. Therefore the major difference between fraud and error is the intention of the person who is committing that. Okay, fraud is an intentional act, whereas error is a unintentional act. Hope that is clear. Now whose primary responsibility it is to identify and prevent frauds? Okay, whether it is responsibility of auditor or it is responsibility of management to identify and prevent frauds. Basically it is a primary responsibility of the management and those charged with governance to identify and prevent the frauds in the financial statements. Okay, primary responsibility to prevent and detect fraud is of management and those charged with governance. That means auditor is not having any responsibility to prevent and detect fraud. No, it is not that auditor is not having any responsibility in relation to fraud. He is having responsibility, but he is not having primary responsibility. Okay, primary responsibility is of management only. Okay, auditor is also having responsibility, but his responsibility is not of primary one. Okay, if you see the objective of the auditor as per essay 200, the overall objective is to obtain reasonable assurance that financial statements as a whole are free from material misstatements, whether due to fraud or error. If you observe here, the primary objective is to obtain reasonable assurance whether that financial statements are free from material misstatements, whether due to fraud or error. Here the main objective is to obtain reasonable assurance. In order to obtain reasonable assurance, the auditor will check that no fraud has taken place. Okay, thereby the primary responsibility of the auditor is to obtain reasonable assurance, but not to identify fraud or error. Okay, in order to obtain reasonable assurance, the auditor may by performing audit procedures will identify fraud or error, but the primary responsibility relating to detection and prevention of fraud is of management and those charged with governance. Hope this is clear. Next, if you see auditor, there will be many types of frauds that can take place, but auditor is not concerned with all those types of fraud that takes place in the organization. auditor is concerned with only those types of frauds that will affect the financial statements. Okay, auditor is concerned only with these types of frauds. Now we can divide these types of frauds into two types. See, types of frauds auditor is concerned with, we can divide them into two types. One is fraudulent financial reporting and another one is misappropriation of assets. Now first of all, let us understand what is meant by fraudulent financial reporting. Basically, this type of fraud will be committed by or will be related to management level. Okay, management level. Okay, majorly management will be involved in this type of frauds, whereas this type of fraud, misappropriation of assets, this is employee level fraud basically. Okay, employees will be involved in these types of frauds. Now what are the ways in which this fraudulent financial reporting can take place? See, management might record fictitious journal entries, okay, or it might inappropriately use the assumptions and judgments, okay, in order to arrive at estimations. The judgments that the management takes might be inappropriate. Okay, this is also one of the way through which fraudulent financial reporting can take place. Or omitting, advancing or delaying recognition of certain items. Okay, management might omit to recognize the accrued interest. Okay, by omitting to recognize the accrued interest, the management will be able to increase the profitability of the entity. Okay, through this type of omitting or advancing or delaying in recognition of certain items also, management can commit fraudulent financial reporting. Or engaging in complex transactions. Okay, management might have committed certain fraud. In order to cover up this fraud, okay, in order to hide this fraud, management will enter into complex financial transactions. Okay, it will fill up its books with all the journals, okay, linked to each other in such a way that it will be difficult for the auditors to find out the fraud that the management has committed in the books of accounts. Okay, through these types of techniques, management can fraudulently report the financial statements. Okay, that would be fraudulent financial reporting in which management will be involved. And another one is misappropriation of assets. Best example would be theft of cash. Okay, we can classify the frauds under this chapter into these two types. Okay, under this standard into these two types. Now the standard, the name of the standard is responsibility of the auditor relating to fraud. Okay, what is the responsibility of the auditor relating to fraud? You can call it as either responsibility or objective of the auditor. Okay, or objective of the auditor relating to fraud. Now once the auditor is appointed and the auditor starts doing his audit, the auditor will try to identify whether there are any frauds that have taken place in the entity. Okay, now in order to identify the frauds, he will not directly jump into the situation and will search for the frauds. There is certain procedure through which auditor will come to a conclusion whether frauds has taken place or not. Okay, now if you see the procedure that the auditor follows is, first of all, what the auditor will do is, auditor will identify the risk of material misstatements due to fraud. That means auditor will not straight away search for the frauds. Instead, what the auditor will do is, auditor will try to find out the areas in which fraud might take place. Okay, fraud has, it is not necessary that in those areas fraud must be present, but those areas are prone to fraud. Okay, most of the cases in those areas fraud will be present. Okay, so auditor will identify the areas in which there is a possibility of occurrence of fraud. Okay, simply we can call that auditor will identify and assess risk of material misstatement in financial statements due to fraud. Okay, what is the risk of material misstatements in the financial statements due to fraud? That risk will be calculated by the auditor. Okay, once he will identify the areas, or once he has calculated the amount of risk that is present in the organization relating to material misstatements in the financial statements, what the auditor will do is he will obtain audit evidences. Okay, audit evidences of what? Whether fraud has actually taken place or whether there are any indications of fraud. Okay, he will obtain evidences relating to that. Okay, evidences relating to what? Evidences relating to whether fraud has actually taken place or whether there are any indications of the fraud. That would be the second step of the auditor. Okay, obtain sufficient appropriate audit evidence about assessed risk of material misstatement due to fraud. Once he has obtained sufficient appropriate audit evidences relating to whether fraud has taken place or there are any indications of the auditor, based on these evidences, auditor will respond. Okay, respond appropriately to identified or suspected fraud. Okay, this is the procedure that the auditor will follow in order to identify the fraud. Okay, what he will do? First of all, he will identify and assess the risk of material misstatement in the financial statements due to fraud. Okay, once he identifies the risk of material misstatement, then what he will do? He will obtain sufficient and appropriate audit evidences relating to whether the fraud has actually taken place or there are any instances or indications of fraud. Once he has obtained these evidences, based on these evidences, he will respond accordingly. Okay, these are the procedures or this is the flow that will be followed by the auditor. Now, once we discuss each of these steps, our standard gets completed. Okay, now first step number 1. Moving to the first step, how to identify and assess risk of material misstatement due to fraud. Okay, in order to identify and assess the risk of material misstatement, auditor need to maintain a quality of professional skepticism. That means he need to question everything. Okay, he need to question whatever the audit evidence that he finds in the during the course of audit. Okay, he need to maintain a questioning mind in order to identify the areas where the fraud might occur. Okay, next he need to discuss among his teammates. Okay, he needs to discuss among engagement team. Basically, by process of this discussion, they will identify some of the areas in which fraud might taken place. Let's say in the audit engagement team, there are some 5 people in this audit engagement team. Now, out of these 5 people, 2 people have already conducted the audit in the previous year also. Okay, in the previous year's audit engagement team, these 2 people are also present, and presently there are additional 3 new people that are present in the audit team, and there are 5 people in the audit team. Now, based on the experience that these 2 people have gained in the previous audit, okay, they can discuss among these team members. Okay, they can share their knowledge of how or the areas in which the fraud might take place based on the experience of previous audit. Okay, this way discussion among the engagement team will help to identify the areas in which fraud might take place. Okay, basically in order to identify risk of material misstatement. Next, auditor has to perform risk assessment procedures in order to identify risk of material misstatement. Now, what will be included in this risk assessment procedure? Firstly, he will inquire who whom? He will inquire whom? He will inquire management, those charged with governance, and other people who are present in the entity. Okay, he will inquire with management what? Okay, what he will inquire with management? See, let us see. Inquiries of management involves what? First of all, he will ask the management. Management, it is your primary responsibility to identify, okay, to detect and prevent fraud. Okay, whether you have performed any procedures, okay, whether management has performed any procedures in order to assess the risk. Okay, whether you have assessed any risk in your organization, the auditor will ask the management. If management has assessed the risk, then what are the procedures that the management has followed for assessing that risk? Okay, management will the auditor will ask that. Now, based on the assessment, whether management has found any frauds, okay, management, whether you have found any frauds in your organization, like this the auditor will ask. Now, if the management has found any frauds in the organization, whether they have communicated the same to those charged with governance or any of the employees of the organization. Okay, communication if any to those charged with governance or employees, and whether they have communicated with the internal auditors of the organization. Okay, whether management you have communicated the same to the internal auditor. Okay, these are the inquiries that the auditor will make with the management in order to identify the frauds that have taken place in the organization or any indications of fraud. Okay, during this procedure or with the help of this process of inquiry with the management, the auditor will assess the risk of material misstatement. Next, he will also make inquiries with those charged with governance. Okay, he will ask those charged with governance whether you have found any frauds in your organization during the year. Okay, or whether there are any instances of fraud. Okay, or how you are overseeing the responsibility that is placed on the management. Okay, all these types of questions the auditor will ask to those charged with governance, and he will try to identify the frauds, or he will try to identify and assess risk of material misstatements due to fraud. Okay, next, he will make inquiries of management, those charged with governance, and other people who are present in the organization as a part of risk assessment procedure. Okay, next step. Okay, next step as a part of risk assessment procedure is he will evaluate what happened. Yeah, he will evaluate unusual or unexpected relationships identified during analytical procedures. Basically, what are these analytical procedures? The best example of analytical procedure would be, let's say, in the organization there are 10 employees in the organization. Okay, there are 10 employees in the organization, and auditor found that in the profit and loss statement the salaries has been reported as 10 lakh. Okay, and auditor has obtained information that on an average the salary of each of these employees is 20,000 on an average. Okay, and 12 months. If you calculate this, what would be the figure that you arrive at? It would be 24 lakh. Okay, based on the analytical procedure that has been performed by the auditor, he got the salaries figure as 24 lakh, but in the financial statement it shows, let's say, not 10 lakh, it's 20 lakh. Okay, in the financial statements it shows 20 lakhs. Okay, there is a deviation between the analytical procedures that the auditor has performed and the amount that is being shown in the financial statements. Now, what he will do? He will perform further audit procedures to identify what are the reasons for this deviation. Okay, whether any of the employees have left the organization during the year, or any of the employee has joined the organization in the middle of the year. Okay, due to that the amount of salaries will decrease. Okay, now auditor will try to identify whether there are any these type of instances by performing further audit procedures. Okay, Now, in case auditor identifies any of the unusual indications, okay, unusual or unexpected relationships during the analytical procedures, he will also inquire them further to identify whether that unusual situation is due to fraud, okay, whether any fraud is involved in this type of deviation, okay. Next, evaluate fraud risk factors. What are fraud risk factors? Okay, what is meant by fraud risk factors? Let's say there is a particular student, okay, he is preparing for CA, chartered accountancy examination. Now, in order to qualify the examination, there are certain factors, okay, that will favor him, or there are certain factors that should be present in him. What are they? He must complete his classes, okay, all the classes, and he must study rigorously, okay, like this. There are certain factors. If these factors are present, then there is a high chance, high probability that he will clear his examination, okay. In the same way, if these fraud risk factors are present, there is a high chance that there might be fraud in that area, okay. Now, first of all, let us see what are the fraud risk factors. Basically, there are 3 fraud risk factors. First one, incentive or pressure to commit the fraud. Incentive means if you commit that fraud, you will receive some benefit. And pressure, let's say the organization is a listed entity, okay, it has been incurring losses from the last 5 financial years. Due to this, the share price of the organization has drastically fallen. Now, there is a huge pressure on the management of this organization to earn profits so that the market situation will improve, okay. Due to this pressure on the management might commit fraud, okay. This would be a fraud risk factor, okay. If this factor is present, then there is a high probability that fraud might arise, okay. It is not compulsory that if this factor is present, fraud will also be present, okay. There will be high probability that fraud will be present. Next, perceived opportunity to commit fraud. Let's say the internal controls in the organization are very weak, there are loopholes in the internal organization, then this gives an opportunity to commit the fraud, okay. This is one of the fraud risk factor. Next, rationalization of acts, okay. Basically, rationalization of act means, just a second, yeah, rationalization of act. Basically, rationalization of act means it is the character of the person, okay, character of a person. The character of the person is such that he is addicted to committing frauds, okay, and he is not having any seriousness towards this fraud, okay. He is having a character of rationalizing the act of committing fraud, okay. His character itself is such that he will commit the fraud, and he is not having any guilty towards such fraud, okay. He is having such a character of rationalizing his act of committing fraud, okay. That means he is in one way or the other is in a situation to support his fraud only, okay. He is not feeling any guilty of his fraud, okay. His character is such that, okay. Even this is also one of the fraud risk factor, okay. If any of the employees in the organization is having this type of character, then there is a high chance that the fraud might be committed in the organization, okay. These are the 3 fraud risk factors which will be evaluated by the auditor, okay. And other information obtained by the auditor, okay. Let's say at the time of accepting the audit, okay, at the time of accepting the engagement, auditor has conducted a background check of the management, okay. based on his background verification, auditor came to know that the management have previously committed a lot of frauds. Okay, they have also filed some insolvency in the past. Okay, now this type of behavior of the management in the past will raise some of the doubt in the auditor about the integrity of the management. Okay, this is the based on other information that the auditor has obtained. Okay, he will come to a conclusion, or he will try to identify whether there are any chance of occurrence of fraud in the organization. Okay, based on this also he will determine risk of material misstatement in the organization in the financial statements. Okay, through all these he will identify and assess the risk of material misstatement due to fraud. Okay, he has arrived, or he has identified and assessed the risk of material misstatement. Then what he will do is he will obtain sufficient and appropriate audit evidence. Okay, as of now he just identified the areas or the risks of occurrence of fraud. Okay, having a risk of occurrence of fraud doesn't mean that fraud has occurred. Okay, based on this risk, auditor will obtain evidences to determine whether fraud has actually occurred or not. Okay, he will obtain the evidences. After obtaining the evidences, based on the evidences, he will respond. How he will respond? Let us see what could be the responses of the auditor. See, responses of the auditor to the assessed risk. Basically, here, while responding to the risk, auditor will classify the type of risk into two types. Basically, one is at overall level and another one is at assertion level. Okay, risk of material misstatement at overall level and risk of material misstatement at assertion level. Let me tell you an example for this overall level and assertion level. Let's say stock. Okay, stock. Now auditor has obtained the valuation of this stock from the management. Okay, valuation of the stock. Okay, and based on the audit procedures that are performed by the auditor, auditor came to conclusion that the valuation of the stock is not correct. Okay, management has not correctly valued the stock. Now, due to this type of this type of situation, the material misstatement that occurs in the financial statement would be overall level, because if the stock valuation is not correct, then the profit that is shown in the P&L is not correct. If the profit that is shown in the P&L is not correct, the reserves and surplus amount that is shown in the balance sheet is not correct. Okay, this affects the entire financial statements. Okay, let's say this is due to fraud only. Okay, with an intention to commit fraud only, let us assume that the intention of management here is to commit fraud only. Okay, now due to this type of fraud which affects entire financial statements, this would be known as financial statement level. Now let's say auditor has taken valuation of the stock. Okay, he found that valuation of stock is correct only. Okay, valuation of stock is correct only. Okay, there is nothing wrong in this valuation of stock. It is correct only. It is correct only. But auditor has also physically verified the stock. Okay, let's say in the balance sheet the stock was shown as some 20 lakhs. Okay, some 20 lakhs was a stock shown in the balance sheet. Now when auditor has physically verified the stock, he found the stock of value only 18 lakhs. Okay, balance 2 lakh stock is missing. Okay, that means there is a assertion, the assertion of the auditor is affected. Okay, which type of assertion? Assertion relating to existence of the stock. Okay, the assertion relating to existence of the stock is affected. Okay, the stock is physically not present. This will not affect the financial statements as a whole. Okay, it will just affect the stock, the item of stock only. Okay, this would be known as at assertion level. Hope this is clear. Now, how the auditor will respond? Okay, if the fraud is at a financial statement level, then how the auditor will respond? If the fraud or the indication of the fraud is at a assertion level, how the auditor will respond? Let us see. If the indication of the fraud or risk of material misstatement due to fraud is at a financial statement level, okay, based on the audit evidence obtained, the auditor confirmed that yes, there is a indication of the fraud in this area. Now what the auditor will do is, auditor will assign and supervise personnel as per their knowledge, skill and ability. That means he will include in the engagement team. Okay, the engagement team members will be of most knowledgeable person. Okay, the auditor will take care that the people who are involved in this audit will be of more knowledgeable and more skillful persons will be involved for conducting the audit of this entity. Okay, that would be one type of the response that the auditor can take if he identifies that there is an indication of the fraud in the organization, and this is the first type of response at an overall financial statement level. Next type of response, evaluate whether selection of accounting policies by entity are indicative of fraudulent financial reporting. See, entity has committed certain fraud. Okay, it has committed certain fraud, the management of the entity, and now while preparing the financial statements, the management has selected such type of accounting policies which are or which will enable the management to cover up these frauds that the management has committed. Okay, the auditor has to verify whether the accounting policies that are adopted by the management are conducive or helpful for the management to hide the frauds that the management has committed. And finally, auditor has to incorporate unpredictability in the nature, timing, extent of his audit procedures. That means he should conduct surprise checks. Okay, these are the responses that the auditor will give based on the assessed risk of material misstatements at overall financial statements level, and responses of the auditor for the risk of material misstatements at assertion level. Okay, let's say in this case stock, where we have discussed that there is a difference between amount of stock that is physically present and the amount of stock that is shown in the financial statement. The existence, the assertion relating to existence is affected. In this situation, what the auditor will do is he will perform further audit procedures. Okay, further audit procedures like the auditor will check whether the entity has sold goods on sale or approval basis. Okay, in case of sale or approval basis, the goods will be the items that are sold on sale or approval basis will be shown in the balance sheet of the entity only till the time the sale is confirmed. Okay, in that case the physically goods will not be present, but in the balance sheet the closing stock they will be included. Okay, by performing further audit procedures, the auditor should determine whether there are any these types of situations or there is really fraud. Okay, at the other level, what the auditor will do? Design and perform further audit procedures whose nature, timing, extents are responsive to assess risk of material misstatement. Okay, Next, response of the auditor. Response to risk related to management override of control. See, management override of control means this is related to fraudulent financial reporting. Okay, management will fraudulently report the financial statements by overriding the controls, because the controls in the organization will be implemented by the management. Thereby management is having full authority to override the controls, because those controls are implemented by management only. Now in this case, the auditor, irrespective of auditor's assessment of risk of management override of controls, what the auditor will do is, okay, irrespective of auditor's assessment of risk of management override, okay, overriding the controls, auditor will not determine risk of material misstatement due to management override of control, because since it is the management who has implemented the controls, the management is having the utmost power to override the controls. Thereby in this situation, the auditor will, without having any regard to the identified risk of material misstatement, he will compulsorily check or compulsorily perform following. What are they? Test appropriateness of journal entries. Why only journal entries? Not payment entries, not receipt entries, not purchase entries, not sale entries. The auditor will specifically test appropriateness of journal entries. Why? Because the adjustments will be made through journal entries only. Okay, if at all management wants to make any adjustments relating to the frauds that it has committed, the adjustments will be made through journal entries only. Thereby auditor will specifically test the appropriateness of the journal entries that the entity has passed. Okay, relating to this, what the auditor will do? Auditor will make inquiries of individuals involved in financial reporting process. Okay, and auditor will check the select journal entries made at the end of the year. Okay, auditor will specifically verify the journal entries that are passed at the end of the year, because all the adjustments that the management wants to make will be made generally at the end of the year only. Okay, and based on this, auditor will also determine whether there is any need, okay, consider need to test journal entries throughout the year. Okay, whether there is any necessary to test the journal entries that have been passed throughout the year, this will also be determined by the auditor. Okay, next, auditor will review accounting estimates and the judgments. This point we have already discussed previously. Next, evaluate significant transactions outside normal course of business. That means, let's say the entity is in the industry of software. Okay, basically the entity is a software company. Now suddenly this company started giving huge amount of loans to various people, and all these people are somehow related to the directors of the entity, of the management. In this case, this type of transaction is outside the normal course of business of the entity. In this case, the auditor will evaluate these type of transactions which are outside the normal course of business of the entity. Next, evaluation of audit evidence. See, while evaluating audit evidence, the auditor will be able to find out whether there is any fraud that has taken place. Okay, based on evaluation of the audit evidences only, auditor will be able to find out whether any fraud has taken place. Thereby, while evaluating the audit evidences that the auditor has obtained, what he has to do is, he has to specifically evaluate he has to specifically evaluate whether analytical procedures consistent with understanding of entity and whether there is any previously unrecognized risk of material misstatement. This point similar to the one that we have discussed relating to analytical procedures. The employees example, there are 20 employees in the organization and the amount of salaries that is shown in the profit and loss is 20 lakh. Based on the analytical procedure, auditor arrived at 24 lakh. Then the further audit procedure that the auditor will conduct. The same explanation suits here. Next, based on the evaluation of the audit evidence, the auditor concludes that yes, there is a misstatement. Okay, there is a deviation in the profit and loss. Salary shown as 20 lakh. Based on the analytical procedure, salaries arrived is 24 lakh. There is a misstatement of 4 lakh. Now, when misstatement is identified, what the auditor will do, whether such a misstatement is indicative of fraud. Okay, whether such misstatement is indicative of fraud, whether this amount of 4 lakh difference between these two items is indicative of fraud. Okay, whether this difference is due to conducting of any fraud, and evaluate impact on other aspects in case it is due to fraud only. Okay, the difference, the deviation of 4 lakhs is due to committing of a fraud only. In that case, the auditor will analyze impact of this fraud on the audit evidences that the auditor has previously obtained. Okay, before the auditor has knowledge of this fraud, he could have obtained some other audit evidences. He would have verified some other items. Okay, while verifying those some other items, he would have relied on the management. Okay, now since he found a fraud that has been committed by the management, now he will get a doubt on the management itself. Okay, thereby he will also get a doubt on the representations that the management has previously given to him in respect of other matters. Thereby he will evaluate impact on other aspects, and he will re-evaluate assessment of risk of material misstatement and its impact on nature, timing, extent of audit procedures. Okay, then let's say auditor is unable to continue audit engagement due to some unusual or unexpected factors. Let's say auditor has identified some fraud and he has communicated this fraud to the management, and management is not at all responding to this situation, or auditor found that management itself is involved in this in the commitment of fraud. In this case, these are some unusual situations where the auditor will be not in a position to continue the audit engagement. In that case, what the auditor will do is he will determine whether there is any legal or professional responsibility to report to the person who made his appointment, and whether it is appropriate to withdraw from the engagement. Just a second. Yeah, he will consider whether it is appropriate to withdraw from the engagement. If he withdraws from the engagement, okay, if the auditor withdraws from the engagement, he has to discuss with management and those charged with governance the reasons for withdrawal. Okay, why the auditor has decided to withdraw from the engagement, he has to discuss these reasons with the management and those charged with governance, and he should also determine whether there is any legal or professional responsibility to report to persons who have made his appointment. Okay, whether he is having any legal responsibility to report to the person who has made his appointment about his withdrawal. Let's say C&AG has made his appointment. In this case, if the auditor wants to withdraw from the audit engagement, he might have to report to the C&AG that he is withdrawing from the engagement, and these are the reasons why he decided to withdraw from the engagement. Next, communication to management or those charged with governance. Whenever the auditor finds any fraud, auditor has to communicate the same to the management or those charged with governance. See, auditor has identified a fraud or any indication of fraud, then he has to communicate to management and also to those charged with governance. Next, regulatory requirement. Whether there is any regulatory requirement on the part of auditor to report to the fraud. There are basically two regulatory requirements. Basically in the examination, 90% of the questions, okay, 90% of the questions that you get in the examination, you can quote these 2 points in the answer relating to the question that is asked from the standard. Okay, for 90% of the questions, you can quote this point at the end of the answer. Okay, now a regulatory requirement. There is a responsibility on the auditor to report the fraud under Companies Act. Okay, under section number 143 subsection 12. In case amount of fraud is less than 1 crore, then he has to report to audit committee or the board of directors respectively. And in case amount of fraud is more than 1 crore, then he has to report to central government. Okay, this requirement is as per section number 143 subsection 12 of the Companies Act 2013. Okay, you can quote this point in almost all the answers relating to SA 240. And there is also responsibility under CARO clause 10, wherein any fraud by company or on the company has been occurred during the year, then the nature of fraud and the amount involved in the fraud has to be reported as per CARO. Okay, these 2 points you can quote or you can mention in almost all the answers relating to SA 240. Okay, by this we have completed revision of SA 240. In the next class we will meet with another standard. Hi guys, this is CA Balakrishna. Till now we have revised SA 200, SA 210, SA 230 and SA 240. Now in this video we will be revising SA 250, consideration of laws and regulations in an audit of financial statements. Now before entering into the standard, let us understand a small point. Basically, for the purpose of this standard, all the laws are divided into 2 types. Okay, the first type is laws that are having direct effect on the financial statement, and the second type would be all other laws. Now, how to identify whether the law is having direct effect on the financial statements or not? Now, if you comply with that particular law, it will affect the amounts that are reflected in the financial statements. Okay, if you comply with any law, that will affect the amounts that are reflected in the financial statements. And also, even though you don't comply with any law, it will also affect the amounts that are reflected in the financial statements. Okay, how? Let us take an example. Income Tax Act. Let's say you have complied with all the provisions of Income Tax Act. Okay, by complying with all the provisions of Income Tax Act, you have arrived at provision for income tax. Okay, you will be showing this provision for income tax in profit and loss statement. Okay, if you comply with all the provisions of Income Tax Act, then you will arrive at correct provision for income tax. That means, even though you are complying with Income Tax Act, the amount that is reflected in the financial statement is being affected. Okay, even though it is being affected positively only, but the amount is being affected. Okay, it is secondary whether it is being affected positively or negatively, but primarily the amount is being affected. Okay, if you comply with the provisions of Income Tax Act, you will arrive at correct provision for income tax in the profit and loss statement. That means, you complying with income tax, the amount that is reflected in the financial statement is being affected. Now let's say you don't comply with the Income Tax Act. Okay, you have arrived at provision for Income Tax Act, of provision for income tax, without complying with the provisions that are stated in the Income Tax Act. In that case, you will arrive at wrong provision for income tax. Okay, in the financial statements, you will be reflecting wrong provision for income tax. Here, if you don't comply with Income Tax Act, the provision for income tax is affected negatively. Okay, even though you don't comply, some amount that is reflected in the financial statement is being affected. Okay, now this type of loss will be known as laws that are having direct effect on the financial statements. Hope you are clear with this. Now, other laws. In case of other laws, if you comply with the other laws, it will not affect the amounts that are present in the financial statements. Okay, if you have complied with other laws, that complying with other law will not affect the amount stated in the financial statements. But if you don't comply with other laws, it will affect the amount stated in the financial statements. How? Example, let's say environmental laws. Okay, environmental laws. Now let's say you are some vehicle manufacturing companies. Now the vehicle manufacturing companies have to comply with BS6 norms. Okay, in case they have complied with all the BS6 norms, okay, they have complied with this law. If they have complied, it does not affect any of the amount that is present in the financial statements. Okay, following the provisions of BS6 norms doesn't affect any of the amounts that are stated in the financial statements. But let's say the company has not complied with the provisions of these BS6 norms, in that case company might have to pay penalties. Okay, in that case the amount of penalties that is reflected in the financial statements will get affected due to non-complying of the BS6 norms. Okay, thereby since complying with this law will not affect the amounts that are reflected in the financial statement, but not complying with the law will affect the amounts stated in the financial statements, these types of laws will be covered under this other laws. This is a major classification of laws for the purpose of SA 250. Hope you understood this classification. Now we'll enter into the standard. What will be dealt by this standard? Basically I have divided this entire standard into 4 parts. First part deals with what is the responsibility of management with respect to laws and regulations. Okay, that will be first part. Second part deals with responsibility of auditors relating to laws and regulations, and third part deals with indications of non-compliance. Okay, what are the indications that will give, or what are the indications in which there is a probability or possibility that non-compliance of law might have taken place. Okay, what are those indications that we'll be discussing. And finally reporting part. Okay, once we complete these 4 parts, our standard gets completed. Now first of all, management responsibility to comply with laws and regulations. Firstly, okay, the primary responsibility to comply with laws and regulations and to prevent non-compliance with laws and regulations is of management. Okay, auditor is not responsible to prevent non-compliance of laws and regulations by the entity. Okay, auditor is just responsible to check whether the entity has complied with all the laws and regulations. Okay, this is the first point that you have to remember. It will be responsibility of the management to comply with laws and regulations. Now for the purpose of complying the laws and regulations, what the management will do? First of all, management can maintain a register. Okay, it can maintain a register, and in this register it can list all the laws and regulations that are applicable to it. Okay, so that it will be easy for the management to comply with all those laws. Okay, if it is having an idea of what are the laws and regulations that are applicable to it, it will be easy for the management to comply with all those laws and regulations, thereby maintain a register of significant laws and regulations that are applicable to the management. Okay, it has to be maintained by the management. Next, engage legal advisors. Okay, management has to engage legal advisors for taking advices relating to compliance with laws and regulations, and for taking advices relating to the types of laws that are applicable on the entity's business area, and develop a code of conduct. Okay, management has to develop a code of conduct. Let's say in order to avoid or in order to prevent women harassment in the working area. Okay, there will be a particular law to prevent women harassment in the working area. Now to comply with this law, management can develop a code of conduct. Okay, and it can implement in the company. Okay, that would be example of developing and publicizing a code of conduct. Now once the code of conduct is developed and publicized, it is not enough. Management also should train the employees. Okay, employees are properly trained to understand the code. Okay, just implementing the code is not sufficient. Management should take care that the employees have actually understood what is the requirement of the code of conduct. Okay, management should also train the employees on that code of conduct, and after training, management should also monitor compliance with code. Okay, management has to check whether the employees are following this code of conduct or not. Okay, around this code of conduct only there are 3 points. First one, develop and publicize code of conduct. Next one, employees are properly trained to understand this code of conduct, and third one, monitor compliance with code of conduct. Okay, Next, constitute an appropriate system of internal controls. Okay, the management can develop internal controls in the entity in order to comply with laws and regulations. Okay. Next, monitoring legal requirement and ensuring that operating procedures are designed to meet this requirement. See, now first of all, entity should understand what are the requirements of particular law. Okay, what should be the compliances that the entity has to follow in relating to particular law, and the entity should design its operational procedure in such a way that once this procedure is followed, the law will be automatically complied. Okay, the requirements of this law has to be implemented in the operating procedure of the entity. Okay, basically operating procedure is the procedure that will be internally followed by the entity to perform the tasks. Okay, now the requirements of the law has to be implemented in this operating procedure only. Okay, thereby once the employees follow this operating procedure for performing the tasks, the law will be automatically get complied with. Okay, in such a way the operating procedures must be prepared by the management. Hope this is clear. Next, auditor's responsibility. Okay, we have seen the responsibility of the management for complying with laws and regulations. Now the responsibility of the auditor to detect non-compliance with laws and regulations. Let us see. First of all, basically auditor is not responsible for preventing non-compliance. Okay, auditor, it is not in the hands of the auditor to see that management will comply with the laws and regulations. Okay, auditor is having nothing to do with whether management will comply or will not comply the law. Okay, auditor is concerned only with checking whether the management has complied with the law or not. Okay, but he cannot force the management to comply with the law. Okay, now the auditor is not having any responsibility for preventing non-compliance. Okay, he is having only responsibility to check whether the management has complied with the law or not. That's it. His responsibility is confined to that. Now instead what he can do is, first of all, now the auditor responsibility is to detect whether there are any non-compliances of law. Now for this, if he wants to detect, first of all he has to understand the requirements of law. Okay, and he should also understand what are the laws and regulations that are applicable on the entity. Thereby auditor has to first of all understand legal and regulatory framework applicable to the entity and how entity is complying with it. Okay, this is a self-explanatory point. Next, in case of directly related laws. Okay, in case of directly related laws, what is the responsibility of the auditor? Okay, in case of directly related laws, the auditor has to obtain sufficient and appropriate audit evidence that the entity has complied with that law. Okay, in case of laws that are having direct effect on the financial statements, auditor need to get a sufficient appropriate audit evidence that management has complied with such type of law. Okay, that is relating to laws having direct effect on financial statements. In case of other laws, okay, in case of laws that are not having direct effect on financial statements, what will be the auditor's responsibility? In that case, auditor's responsibility is to inquire with management, those charged with governance and regulatory authorities to identify whether there are any non-compliances. Okay, if you see, in the first case, auditor will check for the compliance of the law. In the second case, auditor will check for the non-compliance of the law. Okay, in the first case, auditor requires that management must comply with law. That is the reason why he checks whether the management has complied with law or not. Whereas in the second case, auditor will just check whether there are any non-compliances. Okay, in case there are any non-compliances, then auditor will see whether the entity has made sufficient provisions for the penalties relating to such non-compliances. Okay, hope this is clear. Next, and auditor must remain alert to the possibility that other audit procedures may bring instances of non-compliances. Okay, this would be example of professional skepticism. Okay, he need to be alert throughout the audit in order to identify whether there are any instances of non-compliances. That would be a professional skepticism. Auditor needs to maintain the quality of professional skepticism in order to identify whether there are any non-compliances of laws and regulations. Hope that is clear. Next, auditor needs to obtain written representation from management. Okay, written representation of what? That all known instances of non-compliances have been disclosed to the auditor. Okay, the auditor has to obtain a written representation from the management stating that management has disclosed to the auditor all the instances of non-compliances that were known to the management. Hope this is clear. Next, indicators of non-compliances. Okay, what are the indications that may show or that will indicate the possibility of non-compliance with laws and regulations? Basically, this question has been asked quite many times in the examination. Let us see. Investigations by regulatory or government organizations. Okay, some regulatory or government organizations have conducted investigations on the organization quite frequently in the year. Then this will indicate that the management or the entity might not have complied with some of the laws or regulations. That is the reason why there were some investigations against the entity. Okay, this is the first factor or first indicator of non-compliance with laws and regulations. Next, payment for unspecified services. Okay, in the bank statement of the entity, there are certain payments that were made, but the reason why those payments are made is not being specified by the management. Even this also indicates some non-compliance with any law or regulation. Next, sales commission or agent fee appears excessive. Okay, sales commission means for selling the products of the entity, the entity will pay commission to the agents. Now, this commission which is being paid to the agents is very excessive when you compare it with the normal market rates. Okay, even this might be a possible indicator of non-compliance with laws or regulation. Next, purchases at above market price. Okay, entity is purchasing the goods at a price which is higher than the market price. Next, unusual payments towards legal and retainership fees. Okay, there are unusual huge amounts of payments to the advocates and to the legal representatives. Okay, it might indicate that entity has appointed these advocates or legal representative to represent the entity in relation to any pending suits against the entity. Okay, even this will be one of the indicator of non-compliance with laws or regulations. Next, unusual transactions with companies registered in tax havens. Okay, entity is conducting unusual transactions with companies which are incorporated in tax havens. That means like countries like Cuba, which is a tax haven. Next, adverse media comments. Okay, there are adverse comments against the entity that are being circulated in the media. Even this shows non-compliance with laws and regulations. Next, payments without proper exchange control documentation. Okay, that means for the foreign payments are not being made through authorized dealers. Okay, you are using hawala transactions for paying the foreign payments. This might also indicate some of the non-compliances with laws or regulations. Next, unauthorized or improperly recorded transactions. Okay, transactions are not being properly recorded. Payment for goods or services made other than to the country from which goods or services originated. Okay, you are purchasing the goods or services from one country and the payment relating to these goods or services is being made to some other country. Okay, these are the indications of non-compliance with laws or regulations. Okay, next, the final part, reporting of non-compliance. Okay, if auditor finds any non-compliance with laws or regulations, how he need to report? Basically, he need to report within the entity. Okay, how he has to communicate within the entity, how he has to report in the audit report, and how he has to communicate with the regulatory bodies. There are three aspects. First of all, within the entity, if auditor finds any non-compliance with laws or regulations, then to whom he has to communicate within the entity? First of all, he has to communicate to those charged with governance. Okay, immediately if he finds any non-compliance with laws or regulations, he has to immediately communicate with those charged with governance. And if those charged with governance are involved in that non-compliance, okay, auditor finds that this non-compliance with law or regulation is intentional. Okay, those charged with governance have intentionally not complied with this law or regulation. In that case, the auditor has to communicate this matter to next higher level authority that is present in the organization. Example would be audit committee. Okay, in case there is no audit committee in the organization, in that case the auditor has to seek legal advice of how to go ahead with this matter. Okay, that is within the entity. Now, how he has to report in the audit report? Now, if the non-compliance, the auditor has obtained sufficient and appropriate audit evidence relating to non-compliance. Okay, he is having audit evidence that the entity has not complied with particular law, and he finds that such non-compliance has been not adequately reflected in the financial statements. Okay, let's say entity has not complied with some particular law, let's say some child labor law. Okay, child labor law, if it is not complied with child labor law, penalty has to be paid. The entity has made provision for penalties in the financial statements. In that case, the entity not complied with law, but such non-compliance has been adequately disclosed or provided for in the financial statements. In this case, the auditor will not be having any problem. Okay, the auditor is completely okay with this. Okay, even though entity not complied with the law, it has made sufficient provision in the financial statements for the penalties, then the auditor is not having any problem. But let's say in the second case, the entity has not made sufficient provision in the financial statements for the penalty. Okay, entity has not made sufficient provision. In this case, the auditor has a problem. Okay, because entity has not complied with some child labor law, but this non-compliance has not been appropriately disclosed in the financial statements. In that case, auditor will give either qualified or adverse opinion in his financial statements. Okay, when the qualified opinion will be given? When the non-compliance is material but not pervasive, in that case qualified opinion will give. When the non-compliance, the misstatement due to non-compliance is both material and pervasive, in that case he will give adverse opinion. Hope this is clear. Next, now in the first case, okay, in this case the auditor is having audit evidence that management has not complied with certain laws, but in the second case the auditor is not having any audit evidence that the management has not complied with the laws or regulation. Okay, the management has put limitation on the auditor. Okay, due to this limitation, auditor is not in a position to obtain audit evidence of whether management has complied with any law or not, or has not complied with any law. In that case, what the auditor will do is he will either give disclaimer of opinion or a qualified opinion. Okay, when he will give disclaimer of opinion? When the misstatements due to non-compliance are both material and pervasive, in that case he will give disclaimer of opinion. When the misstatements due to non-compliance is material but not pervasive, in that case he will give qualified opinion. Hope this is clear. That is the reporting part in the audit report. Next, regulatory bodies. In case of communication to regulatory bodies relating to non-compliance with laws or regulation, auditor has to determine whether there is any specific responsibility that has been placed on the auditor to report to the regulatory authorities. Okay, in case there is any specific responsibility, only then he will report, otherwise he will not report. Basically, he will not communicate. Okay, by this we have completed revision of essay 250. In the next class we will be revising essay 260. Hi guys, This is CA Balakrishna. In this class, we'll quickly revise Essay 260, communication with those charged with governance. Basically, a very small standard. Now, basically, this standard is effective from 1st April 2017. It was revised in 2017. Now, first of all, let us understand the basic difference between those charged with governance and management. Okay, how to identify who is management and who is those charged with governance. The basic difference is in the type of functions that they perform. Okay, auditor will be able to identify who is management and who is those charged with governance based on the type of functions that they perform. Okay, so first of all, we have to understand what are the functions performed by those charged with governance and what are the functions performed by management. If we understand these functions, we will be able to easily identify who is those charged with governance and who is management. Now, what are the functions that are performed by those charged with governance? Basically, those charged with governance is responsible for overseeing strategic direction and accountability of the entity. Basically, this is decision making function. Okay, decision making and overseeing function will be performed by those charged with governance. Example of those charged with governance would be audit committee. Okay, those charged with governance will be responsible for decision making and overseeing the strategic direction and accountability of the company. This is the function that is performed by those charged with governance. Okay, in the entity, the person who is performing this function will be known as those charged with governance. On the other hand, management will be responsible for executive responsibility to conduct entities operations. That means the decisions that are taken by those charged with governance will be executed by management. Okay, management is having execution function. Okay, example of management would be CFO. Now, it is not necessary that always there will be both management and those charged with governance exist in the management separately. Okay, in some type of entities, same person will be both those charged with governance and management. Example, let's say in case of some small partnership firms, okay, wherein owners, the partners will be both decision makers as well as they will be acting as management. Okay, thereby note, in some cases, management and those charged with governance can be same persons. Okay, hope this is clear. This is the basic difference between management and those charged with governance. Okay, auditor can identify who is management and who is those charged with governance in the entity based on the functions that they are performing. Okay, now first of all, let us see what will be dealt in this standard. Okay, basically, if you see the name of the standard, you will be able to understand that this will be dealing with some communications that has to be made by the auditor to those charged with governance. Okay, relating to those communications, this standard deals with 3 questions. The first question is whom to communicate. Okay, with whom the communication has to be made. That is the first question. Second question, what to communicate. Okay, what has to be communicated and how to communicate. This standard deals with these 3 questions. Now, starting with the first question, whom to communicate. Okay, the name of the standard itself specifies communication to those charged with governance. Thereby, as per SS 260, the communication has to be made with those charged with governance. Okay, the standard mandates communication to those charged with governance, and communication to management will however be made by the auditor. Okay, auditor will communicate all the matters to management. Apart from communicating to the management, there are certain aspects or the matters which are mandated by SA 260 which have to be communicated to those charged with governance. Okay, now let's say if all the persons involved in those charged with governance are also involved in managing the entity. Okay, all the persons who are involved in those charged with governance are also involved in management of the entity. In that case, there is no dual communication required. Okay, once the auditor communicates to the management, since management also involves all the persons involved in those charged with governance, the auditor again need not communicate to those charged with governance, because he has already communicated to the management, and management includes all those charged governance. Okay, all the persons who are involved in those charged governance are also part of managing the entity. In that case, auditor need not make dual communication. Hope this is clear. Okay, if all those charged with governance involved in managing the entity, then matters need not be communicated again to those charged with governance. Okay, communicating to management will be sufficient. Hope this is clear. Next, that is the first question, whom to communicate. Communication has to be made to those charged with governance. What to communicate? What are the matters that has to be communicated by the auditor? The first matter that has to be communicated by the auditor is auditor's responsibility. What is the responsibility of the auditor? His responsibility is to form and express opinion on the financial statements. Okay, the auditor has to communicate with those charged with governance that my responsibility is to form and express opinion on the financial statement. That's it. And audit does not relieve management or those charged with governance from their responsibilities. Let's say management has failed to comply with some of its responsibilities. Let's say, for example, as per SA 250, it is primary responsibility of the management to comply with all the laws and regulations. Now let's say management has failed to comply with some of the laws and regulations, and due to some inherent limitations, auditor was not in a position to identify those non-compliances, and the audit was completed and auditor has given audit report. Now, by the fact that audit has been completed and auditor was not able to identify some of the non-compliances of the laws, it doesn't relieve the management from complying with those laws. Hope this is clear. Okay, the fact that audit has been conducted does not relieve management or those charged with governance from their responsibilities. Okay, even this has to be communicated to the those charged with governance, saying that those charged with governance, once the audit has been completed, it doesn't mean that you are free from your responsibilities. Okay, this has to be communicated to those charged with governance. That is the first aspect. Next aspect that the auditor has to communicate, what is the planned scope and timing of the audit. Under this, auditor has to communicate how auditor has planned to address significant risk of material misstatement. Okay, auditor would have identified certain risk of material misstatement. Now, how the auditor is going to address this significant risk of material misstatement? Okay, what are the procedures that the auditor has planned? This has to be communicated to those charged with governance. And what is the approach that the auditor is going to take in relation to internal control deficiencies? Okay, and the application of concept of materiality. Okay, what is the amount of materiality that the auditor has determined? Okay, even this has to be communicated to those charged with governance. And how he is going to use the work of internal auditor. Okay, if the entity is also entity has also conducted internal audit, then how such the work of the internal auditor is planned by the external auditor to be used. Even this has to be communicated by the auditor to those charged with governance under planned scope and timing of the audit. Next aspect, significant findings during the audit. Okay, during the audit, the auditor might have encountered certain significant findings. Even those findings has to be communicated to those charged with governance. Under this, significant qualitative aspects relating to accounting policies. Okay, whether the accounting policies adopted by the management are apt to the situation or not. Okay, in case there are any deficiencies, how the suggestions that the auditor is making. Okay, this has to be communicated to those charged with governance. And whether the accounting estimates that have been taken by the management are correct or not, and whether all the financial disclosures that are made in the financial statements are adequate or not. Okay, this has to be communicated to those charged with governance. In case any additional financial disclosures are required to be made, even the same has to be communicated. Next, significant difficulties during the audit. While conducting the audit, the auditor might have encountered certain difficulties. Okay, even those difficulties has to be communicated to those charged with governance. What would be the difficulties? Delay in providing information. Okay, whether auditor has faced any delay from the management side in providing the information that has been asked by the auditor. If there is any such delay, he has to communicate the same to those charged with governance. Next, unexpected effort to obtain sufficient appropriate audit evidence. Okay, whether the auditor has put any unexpected effort for obtaining sufficient appropriate audit evidence, he has to communicate the same to those charged with governance. Next, unavailability of expected information. Okay, auditor has expected certain information to be present with the entity, but such information is not submitted to the auditor. Even the same has to be communicated to TCWG. Next, restrictions imposed by management. In case management has imposed any restrictions on the auditor, the same has to be communicated to those charged with governance. And unnecessary brief time to complete the audit. Okay, in case management forced the auditor to complete the audit within this time. Okay, if management has forced the auditor, then the auditor has to communicate the same to those charged with governance. Okay, next, still what has to be communicated? Unless all those charged with governance are involved in management, significant matters discussed with the management. Okay, in case the auditor has discussed any significant matters with the management, all those matters which have been discussed by the auditor with the management has to be communicated to those charged with governance. Okay, and in case auditor has requested any written representations from the management, the same has to be communicated even to those charged with governance. Now let's say in case all those charged with governance are involved in management also. Okay, in that case the auditor need not again communicate these matters to those charged with governance, because all the persons involved in those charged with governance are also part of management. Hope this is clear. Next, any other significant matter that in auditor's professional judgment are relevant to oversight of financial reporting process. Okay, if in the professional judgment of the auditor feels that any other matter is significant for the purpose of audit, the same has to be communicated to those charged with governance. Okay, those were the three aspects that has to be communicated. Coming to the fourth aspect, auditor's independence. See, auditor should also communicate to those charged with governance. Just a second. Yeah. See, auditor has should also communicate about his independence to those charged with governance. Okay, regarding independence, what are the matters that have to be communicated? Let us see. In case of a listed entity, auditor shall communicate a statement that engagement team, firm and network firms complied with all the ethical requirements. Okay, auditor has to provide a statement to those charged with governance stating that all the engagement team and the firm and the network firms have complied with the ethical requirements relating to independence. Okay, such a statement has to be given. Next, all relationships and other matters between firm, network firm and entity may reasonably thought to be bear on independence. That means in case there is any previous relationship between entity and the firm of auditors, this relationship will not affect the independence of the auditor. Okay, this has to be confirmed. Okay, the same has to be communicated to those charged with governance. And related safeguards have been applied to eliminate threat of independence. Okay, in case there is any threat of independence identified, safeguards were implemented for avoiding the threat of independence on the part of auditor. Okay, the same has to be, the safeguards that were implemented must be communicated to those charged with governance. Okay, we have discussed what are the matters to be communicated? There are 4 matters that are to be communicated. Okay, first one is auditor's responsibility, planned scope and timing of audit, significant findings during the audit, and auditor's independence. These 4 aspects has to be communicated to those charged with governance. Now, how to communicate? Basically, under how to communicate, there are 3 sub parts. One is form of communication, timing of communication, and checking whether the communications were adequate or not. Let us see. Form of communication. Basically, auditor has to make written communication in respect of significant findings and auditor independence. Okay, relating to these 2 aspects, auditor's independence and significant findings, these 2 must be mandatorily in writing, and other aspects can be either in oral or writing. Hope this is clear. Next, timing of communication. The auditor must communicate all these matters to those charged with governance on a timely basis. Okay, and start from time of engagement acceptance. Okay, basically auditor must start communicating these aspects to those charged with governance from the time he has accepted the engagement, and subsequently the periodicity shall be decided based on size and complexity of the entity. Okay, the periodicity within which the matters has to be communicated with those charged with governance has to be determined by the auditor based on size of the entity. Hope this is clear. Now, once these communications were made, auditor should also evaluate whether these communications are adequate or not. See, adequacy of communication process. Evaluate adequacy of two-way communication. Okay, two-way communication means once the auditor communicates, even those charged with governance has to reciprocate to the communications of the auditor. Only then it can be called as a effective two-way communication. If those charged with governance doesn't respond, then there will be no two-way communication. Thereby, auditor has to evaluate whether there is adequate two-way communication. If there is no adequate two-way communication, then evaluate effect on auditor's assessment of risk of material misstatement and take appropriate action. Okay, this has to be the action that the auditor has to take in case auditor feels that there is no effective two-way communication. Okay, by this essay 260 is completed. Hi guys, this is C.A. Balakrishna. In this class we will be revising essay 265. Communicating deficiencies in internal control to those charged with governance and management. If you observe, in the previous class we have revised essay 260, which deals with communication with those charged with governance in general. But this standard essay 265 is related to specific communication related to deficiencies in internal control. It deals with specific aspect. And here in essay 265, communication has to be made both to those charged with governance as well as management. Okay, essay 260 speaks about communication with those charged with governance only, but here essay 265 deals with communication to both those charged with governance as well as management relating to a specific matter, that is deficiencies in internal control. Hope this is clear. And this standard is effective from 1st April 2010. Now, before entering into the standard, one thing you have to remember. Okay, what is it? First of all, let me read this sentence. After that, I'll explain you. Auditor considers internal controls only to determine nature, timing, extent of audit procedures, but not to express opinion on effectiveness of internal controls. See, here the primary objective of the auditor is to express an opinion on financial statements. Okay, for the purpose of expressing the opinion on financial statements, he will assess the risk of material misstatement. How he will assess the risk of material misstatement? He will assess the risk of material misstatement by first of all considering the internal controls. Okay, he will first of all check the internal controls. Based on how internal controls are being performed or how internal controls are working, he will arrive at a risk of material misstatement. Based on this risk of material misstatement, he will design his audit procedures. Now here auditor is verifying internal controls in order to design his audit procedures, but he is not verifying internal controls in order to give opinion on whether internal controls are working effectively or not. Okay, it is not the objective of the auditor to determine whether internal controls are working effectively or not. Okay, instead the auditor is verifying the internal controls so that it would help the auditor to determine the audit procedure. Okay, thereby the first thing that you have to remember is that auditor is not having any responsibility to give opinion on the effectiveness of the internal control. Okay, instead he is verifying the internal controls in order to help him to design the audit procedures. Hope this is clear. Okay, this is the first thing that you have to remember before studying this standard. Okay, now if you observe whether all the deficiencies in the internal controls will be communicated or only some deficiencies in the internal controls will be communicated to the those charged with governance or management. Let us discuss that. Before discussing it, first of all, let us understand what is meant by a deficiency in internal control. Okay, auditor speak this standard speaks about deficiency in internal control. First of all, what is meant by deficiency in internal control? Okay, these two types of situations will be coming under deficiency in internal control. The first one is internal controls are being present, but the existing internal controls are not able to detect, prevent or correct the material misstatements in the financial statements. Okay, there are internal controls in the organization, but the existing internal controls are not sufficient to detect, prevent and correct material misstatements in the financial statements. Okay, this would be a first situation which will be known as deficiency in internal control. And the second situation is there are no internal controls at all. Okay, in the organization internal controls are missing. Even this will be covered under deficiency of internal controls. Okay, in these two situations it would be said that in the organization there are some deficiencies in the internal controls. Okay, what is the first situation? First situation is internal controls are being present, but the existing internal controls are not sufficient. Okay, second one is internal controls are not at all present. Okay, internal controls are missing. In this case it would be said that there is deficiencies in the internal control. Now whether all the deficiencies will be communicated or only some deficiencies will be communicated. Okay, the answer is only significant deficiencies in the internal control will be communicated to those charged with governance. Now what is meant by significant deficiencies in the internal control? Now you understood what is meant by deficiencies in the internal control. After understanding this deficiencies in the internal control, to call these deficiencies as significant deficiencies, the auditor, okay, if in auditor's professional judgment it is of sufficient importance to merit attention of those charged with governance. Okay, first of all, auditor has found some deficiencies in the internal control. After finding the deficiencies, the auditor, based on his professional judgment, feels that the attention of those charged with governance has to be brought to these deficiencies. Okay, auditor feels that it is very important to bring the attention of those charged with governance to these deficiencies. In that case, such type of deficiencies will be known as significant deficiencies in the internal control. Hope this is clear. Now we understood the difference between deficiencies in internal control and significant deficiencies in internal control. Okay, next, basically how the procedure works. Once the before the auditor starts his work, in order to design the audit procedures, what the auditor will do is first of all he will evaluate the internal controls that are being present in the organization. Okay, based on evaluation he will determine the risk of material misstatement. Okay, based on the risk of material misstatement, he will design the audit procedures. Hope this is clear. Now when he has evaluated internal controls, if auditor finds any deficiencies, okay, whether auditor finds any deficiencies, okay, auditor has evaluated internal controls in the organization. Based on the evaluation, auditor feels that there are certain deficiencies in the internal controls of the organization. Now auditor will determine whether these deficiencies are significant or not. Okay, if auditor feels that these deficiencies are significant, communicate significant deficiencies in writing to both those charged with governance and also to management. Okay, we have already discussed in which situation deficiencies will be known as significant deficiencies. Okay, if auditor feels that those deficiencies are significant, he has to communicate those significant deficiencies in internal control to both those charged with governance as well as management. This has to be remembered. Now he has communicated significant deficiencies to both management as well as those charged with governance. And apart from significant deficiencies, auditor has also found other deficiencies in internal control. Okay, found during the audit. While conducting the audit, auditor has also found some other deficiencies in the internal control, but not communicated by other parties. Okay, there are some deficiencies in other internal controls and it is duty of some other parties to communicate those deficiencies to management, but those parties have not communicated those deficiencies in other internal controls to the management. In that case, in auditor's professional judgment, it is sufficient important to merit attention of the management. In that case, he has to communicate those deficiencies to only management. Okay, first of all the significant deficiencies in the internal controls will be communicated in writing to both those charged with governance and management. And coming to other deficiencies in the internal controls which have been found by the auditor, and it is duty of some other person to communicate those deficiencies to the management, but they have not communicated, and auditor feels that it is very important to bring the attention of management to even these deficiencies also. In that case, auditor will also communicate these other deficiencies in the internal control to management only. Hope this is clear. These deficiencies need not be again communicated to those charged with governance. Hope this is clear. Next, okay, standard says that auditor has to communicate the deficiencies in the internal controls. Now how the auditor will communicate? Basically he will communicate through written format. Now in this written document, what should be present? Okay, contents of written communication relating to deficiencies in internal control. First of all, he has to describe the deficiency, description of deficiency and their potential effect. Okay, it is not sufficient if the auditor just describe the deficiency. Along with the description, auditor should also give an idea to the management what could be the possible loss that the entity can incur due to deficiency in this internal control. Okay, only if auditor provides or auditor gives an idea of the probable loss that the entity can incur due to this deficiency, the management or those charged with governance will give some importance to those deficiencies and will take measures to correct those deficiencies. Thereby it is necessary, along with describing the deficiency in the internal control, auditor should also provide the potential effect of such deficiencies. Hope this is clear. This will be communicated. Okay, description of the deficiency, what is the deficiency in the internal control, and due to such deficiency what will be the impact or what would be the loss that is incurred to the organization. And apart from this, auditor should also provide certain information to the management and those charged with governance, so that the management and those charged with the governance will be able to understand the context in which the auditor is communicating. Okay, sufficient information to enable those charged with governance and management to understand the context in which the auditor is making this communication. Now first of all, relating to this, the auditor has to first of all communicate to those charged with governance as well as management about the purpose of or the about the objective of the auditor. Okay, purpose of audit was to express opinion on financial statements. Okay, auditor has to communicate to those charged with governance as well as management that the purpose of my audit is not to give you uh, opinion on whether internal controls are performing effectively or not. Okay, that is not my purpose. My purpose is to give opinion on whether financial statements are free from material misstatement. Okay, thereby you have to understand or take my communication only in this context. Okay, you have to take my communications only in relation to the context of audit of financial statements, but not in relation to sufficiency or effectiveness of the internal controls. Hope this is clear. Next, internal controls are considered to design audit procedures but not to express on effectiveness of the internal controls. Okay, auditor should also communicate that I am determining or I am considering these internal controls in order to design my audit procedures, but I am not considering these internal controls in order to give opinion whether they are working effectively or not. Okay, and communications are limited to those deficiencies that auditor identified during audit and which are of sufficient importance to merit consideration of those charged with governance. Okay, auditor should also communicate stating that I am not communicating all the deficiencies to you. Okay, while performing the audit, the deficiencies that have came across me or the deficiencies that I have identified and which I feel that your attention is necessary for these deficiencies, only those types of deficiencies I am communicating to you. Okay, even there might be some other deficiencies which I was not able to identify. Okay, this has to be communicated to those charged with governance as well as to the management by the auditor. Okay, this is how the auditor will communicate relating to deficiencies in the internal control. Now we have said that auditor will communicate only significant deficiencies in the internal controls to those charged with governance. Now, what are the factors that will help the auditor to determine whether the deficiency is a significant one or not? Okay, in order to determine whether a particular deficiency is a significant one or not, there are certain factors that will help to the auditor. What are those factors? Okay, there are some factors. Let us see. Likelihood of deficiencies leading to material misstatements in the financial statements. Okay, whether these deficiencies will lead to a material misstatement in the financial statements, in that case that deficiencies might be a significant one. Okay, or susceptibility of loss or fraud. Okay, if these deficiencies will result into any loss or fraud, even then those deficiencies would be of a significant one. And subjectivity and complexity in determining estimated amounts. Okay, financial statements amount exposed to deficiencies, volume of activity that has occurred or could occur in respect of those deficient areas. Okay, all these factors will help the auditor to determine whether the internal control, whether the deficiencies in the internal control are of significant one or not. Okay, by this essay 265 revision is completed. In the next video we'll revise essay 299. Hi guys, this is CA Balakrishna, coming to the last standard of 200 series, essay 299, joint audit of financial statements. Still we are left with essay 220 that we'll discuss later on. Okay, by completing this standard we will be finishing essay 200 series. Okay, let us quickly revise the standard. Basically essay 299 deals with joint audit of financial statements. Now first of all, with an example, let us understand what is meant by a joint audit. Let's say there is a company A Limited. Now for this A Limited, two or more auditors are appointed. Okay, let's say B and Co, C and Co. Okay, these two auditors are appointed to conduct audit of A Limited. Now these two auditors will be known as joint auditors and this audit will be known as joint audit. Okay, Basically this is a joint audit. Now let's say there is A Limited. Now for A Limited there is a branch. Okay, now to conduct audit of A Limited, B and Co has been appointed as auditors, and at the same time to conduct audit of its branch, C and Co are appointed as auditors. Now whether B and C together can be called as joint auditors, the answer is no. Okay, for B and Co, C and Co is other auditor. Okay, and for C and Co, B and Co is other auditor. Thereby we cannot call these two people as joint auditors. Okay, basically the concept relating to other auditors will be covered under SA 600. Okay, this is the difference between joint auditor and other auditor. Now after understanding this, let us enter into the standard. First of all, basically this standard will deal with three aspects. First one, development of joint audit plan. Okay, since two or more auditors are appointed to the entity, the audit plan has to be developed by all these auditors together. Okay, all these auditors cannot develop their own audit plan. Okay, all these auditors, all these joint auditors should discuss among themselves and should develop a single audit plan, because if each auditor develops their own audit plan and the auditor doesn't communicate his plan to other auditor, then let's say here B and Co develops their own audit plan and C and Co develop their own audit plan. Okay, now B and Co doesn't communicate their audit plan to C and Co, C and Co doesn't communicate their audit plan to B and Co. In this case what happens is B and Co audits entire entity and C and Co also audits entire entity. In this case, what is the use of appointing joint auditors? Thereby at the planning stage they have to discuss together, okay, among themselves, and should develop a joint audit plan. Okay, in this joint audit plan they can segregate the duties among themselves. Okay, thereby in the joint audit only single audit plan will be developed by all the auditors together. Okay, they cannot have their own audit plan separately. Next aspect we will be dealing with is responsibility of joint auditors. Okay, what is the responsibility of joint auditors, that we will discuss. And finally reporting by joint auditors, reporting aspect. Okay, these three aspects we will be discussing in this standard. First of all, developing joint audit plan. Okay, to develop the joint audit plan, engagement partner and key members from each joint auditors. Okay, here we are having two joint auditors. Now engagement partner from B and Co and engagement partner from C and Co, and also key members from B and Co, engagement team of B and Co, and key members from engagement team of C and Co will come together and they'll discuss. Okay, and they'll jointly establish overall strategy and develop a joint audit plan. Okay, they'll arrive at a joint audit plan. Now while developing this joint audit plan, what are the aspects to be considered and what has to be included in this joint audit plan? First of all, in this joint audit plan they have to divide the work among themselves. Okay, how the work can be divided? First of all, division of work based on identifiable units. Let's say this A Limited is having 4 units. Okay, unit 1, unit 2, unit 3, unit 4. Okay, each unit manufactures, let's say, separate product, or they manufacture same product. Basically there are 4 units. Now they can decide that B and Co will audit 2 units and C and Co will audit 2 units. Okay, like this they can divide the work among themselves. Now let's say if there are no such identifiable units, okay, in that case auditors can divide the work among themselves, like B and Co will audit assets of A Limited and C and Co will audit liabilities of A Limited, or B and Co will audit incomes of A Limited, and C and Co will audit expenditures of A Limited. Like this they can divide the work if there are no identifiable units. Hope this is clear. Okay, or based on assets or liabilities, income and expenditure. And there will be some important areas in the entity, okay, which are prone to high risk of material misstatement. Those high risk of material misstatements can be audited by all the joint auditors. Okay, the joint auditors can come to a conclusion that these areas in the entity are prone to high risk of material misstatement, thereby both of us will audit these areas. Okay, they can arrive at such conclusion in respect of those important areas. Hope this is clear. This is how the audit work can be divided among the joint auditors in respect of a joint audit. Next, while preparing the joint audit plan, they have to consider the risk of material misstatement. Okay, based on risk of material misstatement, they will design the audit plan. They should also consider professional judgment and result of preliminary engagement activities. Okay, considering all these factors, they have to decide a audit plan, or they have to develop a audit plan. And in this audit plan, they should ascertain reporting objectives. Okay, what is the reporting objectives of this joint audit? They have to ascertain it and obtain common engagement letter. See, since the entity has appointed joint auditors, okay, 2 or more auditors together, it would be fair enough to give only one engagement letter, okay, one joint engagement letter to the entity. Thereby the auditors, the joint auditors need not give separate engagement letter. Okay, these both joint auditors, B and Co and C and Co, together can give single engagement letter to the entity. Hope this is clear. That is regarding developing a joint audit plan. Next, coming to the responsibility of joint auditors. Basically, joint auditors will be responsible individually. Okay, they will be separately responsible in respect of the work that has been allocated to such a joint auditor. Okay, in this case, we have, let's say, we have allotted audit of assets to B and Co, and or they have decided that B and Co will audit the assets and C and Co will audit the liabilities. Okay, who have decided? Joint auditors themselves will decide whom to audit what. Okay, now this B and Co will be responsible in respect of assets only, because audit of assets has been allocated to B and Co, and C and Co will be responsible in respect of liabilities only, because audit of liabilities has been allocated to C and Co. Okay, coming to joint responsibility. Here you can write it, joint responsibility. In respect of which matters the joint auditors will be jointly responsible. First of all, in the respect of work that is not allocated to the joint auditors, obviously in respect of work that is not allocated to the joint auditors, all the joint auditors will audit those aspects. Thereby all the joint auditors together will be responsible in respect of such areas which are not allocated to any particular auditor. Hope this is clear. Next, decision with respect to nature, timing, extent of audit procedure in common audit areas. Okay, the auditors at the time of developing a joint audit plan, they will decide the areas which will be commonly audited by all the auditors. Okay, in respect of those areas, decisions relating to nature, timing, extent of audit procedures will be taken by all the joint auditors together. Thereby, in respect of those decisions, since all of them together have taken the decisions, all of them together will be responsible for those decisions. Hope this is clear. Next, matters brought to the notice of joint auditors by other joint auditor. Let's say B and Co is auditing assets of the company. Okay, while auditing assets of the company, B and Co felt that there is one particular asset in respect of which I need to consult the other auditor, the joint auditor, that is C and Co. Okay, I need to discuss this matter with the C and Co, and I have to come to a conclusion. Okay, we both have to together come to a conclusion. Like this, one of the auditor B and Co thinks and he communicates, okay, he takes this matter for discussion with C and Co, the joint auditor. Now in respect of this matter, these both joint auditors discusses together and they comes to a conclusion together, okay, in respect of those matters which are brought to the notice of other auditor for discussion by one of the auditor. All the auditors will be responsible jointly together in respect of these matters which are brought to the notice of other auditors. Hope this is clear. Okay, matters brought to notice of joint auditors by other joint auditor. In respect of these matters, all the joint auditors will be responsible together. Next, financial statements compliance with statutes. Yes, first of all, while preparing the financial statements, it is responsibility of all the joint auditors to see that these financial statements are prepared by the management in compliance with all the statutes. Okay, this responsibility cannot be assigned to only one particular auditor. Okay, it is a duty of all the auditors to check whether the financial statements are prepared as per compliance of various statutes and applicable financial reporting framework. Okay, this will be joint responsibility of all the auditors. Okay, the next point is that only presentation and disclosure of financial statements as per financial reporting framework. Okay, next, compliance of audit report as per relevant statutes and standards on auditing. Okay, while giving the audit report, all the joint auditors together will be responsible to check that this audit report is in compliance with all the applicable statutes and the standards on auditing. Hope this is clear. Next, that is relating to responsibility of joint auditors. Moving to the reporting part. Reporting. Now let's say there are two joint auditors, B and Co and C and Co. Okay, these two joint auditors have come to a common opinion. Let's say both of them are having adverse opinion, okay, or both of them are having a qualified opinion. In this case, they can give a common report. Okay, they have to give common report. Okay, if they are having same opinion, okay, common opinion, then issue common report. Okay, now let's say they are not having common opinion. B and Co says adverse opinion, C and Co says qualified opinion. In this case, they have to give separate audit report as per their opinions. Okay, issue separate audit report. But while issuing separate audit report, let's say B and Co is having qualified opinion, C and Co is having adverse opinion. Thereby, they have given their separate audit reports. Okay, they have given two audit reports, one by B and Co, one by C and Co. Now, in the audit report that has been given by B and Co, he should mention that there is another joint auditor for this entity and he is having a different opinion. Thereby, he has given a different audit report. You please refer to that audit report also. Okay, like this he has to mention in the audit report of B and Co. In the same way, C and Co should also mention in its audit report, stating that users, okay, users of the financial statements, that there is another auditor by name B and Co. Okay, he is having a different opinion on the entity's financial statements. Okay, thereby he has given a different audit report. You please refer to that audit report also. Okay, like this, reference to the audit report that has been given by another joint auditor has to be made in the audit report of the joint auditors. Hope this is clear. If they are giving different audit reports, if they are giving common audit report, then that's not necessary, because there will be only single audit report. Okay, in the first case there will be only single audit report, but here in the second case, since there is a disagreement among the joint auditors, they are giving separate audit reports and they have to make reference of such audit reports in their audit report. Okay, next, another point is, let's say there are some 5 joint auditors. Now, of these 5 joint auditors, one auditor is having a qualified opinion and balance 4 joint auditors are having a, let's say, adverse opinion. In this case, whether this one auditor who is having a qualified opinion should agree with these 4 auditors, or can he give a separate audit report with his qualified opinion? The answer is he can use separate audit report with his qualified opinion. Okay, these one auditor, one joint auditor will give his report, and these 4 auditors who are having a common opinion will give a single report together. Okay, thereby joint auditor not bound by views of other joint auditors. Hope this is clear. By this, revision of essay 299 is completed. Okay, in the next class we will be starting with revision of 300 series. Okay. Hi guys, this is C.A. Balakrishna. In this class we will be revising essay 300. If you observe, till now we have completed revision of 200 series. Under 200 series, we have seen responsibilities of auditor relating to various aspects, like relating to laws and regulations, relating to fraud, relating to audit documentation. Okay, like this we have seen various responsibilities of auditor. Now under this 300 series, see, if you observe, under 200 series the auditor has not yet started the audit. Okay, we have just seen what are the responsibilities of the auditor relating to various aspects. Now this essay 300 and 300 series deals with audit procedures, risk assessment procedures, planning for the audit. Okay, further audit procedures, all these aspects will be dealt by this essay 300 series. Now before starting the audit, the auditor has to plan the audit. Okay, how the auditor will plan, or how the auditor will develop a plan for conducting the audit, that will be dealt by this essay 300. Okay, essay 300, planning and audit of financial statements. Now why to plan the audit? Okay, what happens if auditor conducts the audit without planning it? See, if the auditor conducts the audit without a proper plan, then there is a chance that auditor might not be able to achieve the objective of the audit. Okay, what is the objective of the audit? The objective of the audit is to obtain a reasonable assurance that financial statements are free from material misstatements. Now there is a chance that auditor might not achieve this objective if he doesn't plan the audit properly. Thereby, okay, why to plan the audit? Auditor has to plan the audit so as to perform the audit effectively. Effectively means in a way to achieve objective. Okay, to achieve objective. Okay, if the objectives of the audit are achieved, then it will be said that the audit has been conducted effectively. Hope this is clear. That is the reason why auditor has to plan the audit. Now before entering into the planning of the audit, first of all let us understand a term. What is a term? That is preliminary engagement activities. What is meant by preliminary engagement activities? Basically the activities that the auditor will conduct before starting the audit, okay, before planning the audit, will be known as preliminary engagement activities. What will be included in this preliminary engagement activities? Basically there are 3 activities that will be included under this preliminary activities. One activity relating to essay 210, agreeing to the terms of audit engagement, and 2 activities covered under essay 220. Now under essay 210, auditor has to establish terms of audit engagement. This is a preliminary engagement activity. Okay, this will be performed by the auditor before starting the audit. Thereby it will be preliminary engagement activity. And under essay 220, procedures regarding continuance of client relationship. See, in order to decide whether to accept the engagement or to continue the engagement, auditor will perform certain procedures like verifying the integrity of the management, verifying whether auditor is having sufficient workforce or sufficient audit engagement to team in order to accept the audit, and whether auditor will be in a position to maintain independence throughout the audit. Okay, auditor will check all these aspects, okay, before accepting the audit. All these will be covered under procedures regarding continuance of client relationship. These are also preliminary engagement activities. Next, evaluate compliance with ethical requirements. Before accepting the audit, auditor will examine whether auditor will be able to adhere to the ethical requirements throughout the audit. Okay, only if auditor feels that he will be in a position to adhere to all the ethical requirements, he will accept or continue the engagement. Okay, all these three will be covered under preliminary engagement activities. Okay, this is the these are the activities covered under preliminary engagement activities. Now, why we have discussed this definition of preliminary engagement activities, you will come to know that. Let us see. Now, let us enter into the standard, that is developing an audit plan. Whether auditor will directly develop a audit plan or auditor will perform some other activity before developing audit plan. The answer is auditor will first of all establish overall audit strategy. Okay, after establishing overall audit strategy, based on that strategy, auditor will develop his audit plan. Hope that is clear. See, first of all, auditor shall establish overall audit strategy. Now, develop audit plan. Based on that audit strategy, auditor develops audit plan. Hope that is clear. Now, most of you might be confused regarding difference between audit strategy and audit plan. If you observe, audit strategy deals with, or audit strategy gives direction to achieve overall objective. Okay, whereas audit plan deals with how to execute audit in order to achieve audit objective. Okay, if you observe, audit strategy gives a broad direction. Okay, it gives a overall direction. Next, while developing audit strategy, what are the factors that has to be considered by the auditor? Let us see. To develop audit strategy, auditor has to identify characteristics of engagement that defines its scope. Okay, what are the characteristics of the engagement? Whether it is a statutory audit, or whether it is a internal audit, or whether it is any specific audit to find out any fraud. Okay, first of all, before developing overall audit strategy, auditor has to first of all identify characteristics of the engagement and should also ascertain what are the reporting objectives of the engagement. Okay, these two has to be considered by the auditor before developing audit strategy. Next, he should also consider results of preliminary engagement activities. See, this is the reason why we have first of all understood the meaning of preliminary engagement activities. Okay, auditor should consider the results of all these preliminary activities before developing audit strategy. Next, ascertain nature, timing, extent of resources. Auditor has to consider these four aspects before developing audit strategy. Once auditor has developed audit strategy, based on the audit strategy, he will design audit plan. Okay, audit plan deals with execution portion. Okay, how the auditor will execute his audit? He will perform risk assessment procedures as per SA 315. Okay, thereby audit plan includes nature, timing, extent of risk assessment procedures as per SA 315. Okay, we will be discussing these risk assessment procedures in SA 315. Next, after performing risk assessment procedures based on the risk of material misstatement that the auditor has identified, he will design further audit procedures as per SA 330. Okay, nature, timing, extent of further audit procedures at assertion level as per SA 330. We will be discussing these concepts relating to further audit procedure and risk assessment procedure in the further standards of SA 300 series. Next, other planned audit procedures. Okay, apart from risk assessment procedure and further audit procedure, if the auditor has planned to perform any other procedures, he need to include those procedures in the audit plan. Okay, next, whether this audit plan and audit strategy are static or dynamic, that means whether the auditor can change audit plan and strategy during the audit. The answer is yes. Okay, based on the circumstances during the audit, auditor can update and change this overall audit strategy and audit plan. Okay, auditor shall update or change audit strategy and plan as necessary during the audit. Hope this is clear. Next, documentation. What will be documented by the auditor as per this standard? Basically, under this standard, he has established overall audit strategy. He will document the same. Next, he has developed audit plan. He will document the same. And in case during the audit, if he has updated or changed this audit plan and audit strategy, he will document those changes also, any significant changes made. Hope that is clear. Next, in case of initial audit engagement, auditor should also communicate with predecessor auditor in case of change in the auditor. Okay, let's say in the previous year the auditor of the entity was some other person. In that case, the new auditor has to communicate with the predecessor auditor. Hope this is clear. By this, we have completed revision of SA 300. In the next class, we will be revising SA 315. Hi guys, this is CA Balakrishna. In this video, we will be revising SA 315, a very important standard, identifying and assessing the risk of material misstatement through understanding the entity and its environment. See, this standard mainly deals with risk of material misstatement. Now you can get a doubt that auditor is conducting audit of financial statements. Now, during the audit of financial statements, why we are talking about risk? What is the importance of this concept of risk? Basically, there will be huge number of transactions in the entity, and auditor will not be in a position to audit or to verify all these transactions. Thereby, auditor will conduct risk based audit. Okay, that is the reason why before conducting audit of financial statements, first of all the auditor will identify the risk of material misstatements. Okay, based on the identified risk, the auditor will design his audit procedures. Okay, that is the importance of the concept of risk in relation to audit of financial statements. Now, first of all, let us understand this concept of risk. Okay, once you understand this concept of risk, you will be able to easily understand the procedures that are prescribed under SA 315. Okay, that we will be discussing under 315. Now, basically, what is meant by audit risk? See, the primary objective of the audit is to give appropriate audit opinion. Now, audit risk means the risk that the auditor might give inappropriate audit opinion. Okay, the risk that auditor might give inappropriate audit opinion is known as audit risk. Inappropriate audit opinion means what type of opinion? Let's say the financial statements are materially misstated. Okay, there are material misstatements in the financial statements, but auditor gives unmodified opinion. Okay, auditor gives a clean opinion. This is example of audit risk. Okay, the risk that auditor might give a unmodified opinion when the financial statements are materially misstated is known as audit risk. Hope this is clear. Now this audit risk is combination of three types of risks. What are those three types of risks? First of all, there is risk of material misstatement and there is detection risk. We will discuss them. Risk of material misstatement is again further divided into inherent risk and control risk. Thereby audit risk is combination of inherent risk, control risk and detection risk. Now what is meant by this inherent risk? Okay, inherent risk means the risk that that material misstatements will occur in the entity provided there are no internal controls. Let's say for example, in case of banks primarily deal with cash. Okay, now in banks the inherent risk is theft of cash. Okay, that is the inherent risk in case of banks. Now in order to prevent or detect this inherent risk, the bank might establish some controls in the form of, let's say, some cameras. Okay, the bank has planted some cameras in order to detect this inherent risk of theft of cash. Now the risk that these controls might not work properly is known as control risk. Okay, now the combination of these two risks, combination of inherent risk and control risk together will be known as risk of material misstatement. Hope this is clear. Now auditor during his audit will first of all determine the risk of material misstatement. How the auditor will determine risk of material misstatement? First of all, he will identify inherent risks. After identifying the inherent risk, auditor will examine or verify the controls that have been placed by the entity and will determine the control risk. Okay, based on these two risks, auditor will determine risk of material misstatement. Let's see. There is a particular matrix for determining risk of material misstatement. Here in the x-axis there is inherent risk and in the y-axis there is a control risk. Now inherent risk is low, control risk is low. In that case the risk of material misstatement is minimal. Inherent risk is medium, control risk is low. In that case the risk of material misstatement will be low, and inherent risk is high, control risk is low. In that case risk of material misstatement will be moderate, like this. Inherent risk is low and control risk is medium, then risk of material misstatement is low, and inherent risk medium, control risk medium, moderate. Inherent risk high, control risk medium, high. Next, inherent risk low, control risk high, moderate. Inherent risk medium, control risk high, high. Inherent risk high, control risk high, high. Okay, this is how auditor will determine the risk of material misstatement. Okay, after determining the risk of material misstatement, auditor will combine or auditor will apply the concept of materiality. Okay, what happened to this thing? Okay, yeah, auditor will apply the concept of materiality as per SA 320. Okay, and based on this, auditor will design further audit procedures. We can call them as responses of the auditor to the risk as per SA 330. Okay, this is the link between 315, 320 and 330. Hope this is clear. Now the SA 315 concentrates on this aspect. Okay, SA 315 majorly deals with risk of material misstatement. In order to identify risk of material misstatement, auditor has to determine inherent risk and control risk. How the auditor will be able to determine inherent risk? He will be able to determine the inherent risk by obtaining understanding of entity and its environment. Okay, and by performing risk assessment procedures. Okay, through this understanding entity and its environment and performing of risk assessment procedures, auditor will be able to identify and assess inherent risks. Okay, after identifying inherent risk, what the auditor will do is, auditor will conduct walkthrough of the controls. Okay, how the first of all he will check whether the management has planted controls or not. Okay, whether management has established some controls or not. If the management has established controls, whether those controls are working effectively or not. Okay, first of all he will understand the internal controls of the entity and he will conduct walkthrough of those controls. Okay, based on this he will arrive at control risk. Okay, based on these two risks he will arrive at risk of material misstatement. This is the entire concept that we will be going to discuss under this standard. Okay, first of all we will see how the auditor will obtain understanding of entity and its environment. After that we will see risk assessment procedures. After that we will discuss relating to control risk. Then the standard gets completed. Okay, there are three aspects that we are going to discuss now. First one is understanding the entity and its environment. Second one is risk assessment procedures. Third one is some concepts relating to internal controls. Okay, and after that detection risk. We will also discuss the concept relating to detection risk here. Now the risk that audit procedures that are performed by the auditor might not be able to identify the material misstatements is known as detection risk. Now here, based on the risk assessment procedures, auditor has determined risk of material misstatement. Now based on this risk of material misstatement, auditor will design his further audit procedures. Okay, he will design his further audit procedures in order to reduce the detection risk. Okay, this further audit procedures we will be discussing in SA 330. Hope that is clear. Now first of all let us see how the auditor will obtain understanding of entity and its environment. First of all we will see how the auditor obtains understanding of environment. Okay, here it can be divided into three factors. Okay, while auditor obtains understanding of the environment in which the entity is operating, he will obtain the understanding based on three factors. Okay, first one, he will understand industry factors. Okay, what are the factors that are affecting the industry in which the entity is operating. Okay, under this he will consider competition that is present in that industry, seasonal activity of the industry, and product and technology, and energy cost and supply. There are various other examples given that you can go through. After that he will also understand regulatory factors. Okay, under this he will see government policies and tax laws, and he will also consider some other factors like rate of inflation. Okay, rate of interest. Okay, like this other factors also auditor will consider while obtaining understanding of the environment in which the entity is operating. Okay, why he is obtaining understanding of the environment? Okay, because by obtaining understanding of the environment he will be able to determine inherent risk. Okay, inherent risk. In order to determine the inherent risk, he is obtaining understanding of the environment in which the entity is operating. Okay, after obtaining understanding of the environment, he will obtain understanding of the nature of the entity. Under this what will be verified by the auditor, okay, or what will be understood by the auditor? Basically, here you remember this cash flow statement. Under cash flow statements, what are the types of activities? Operating activities, financing activities, and investment activities. These three activities will be understood by the auditor, okay, operational, investment, and how the entity is financed. And he will also obtain understanding of ownership and governance structure of the entity, okay. This will be understood by the auditor in order to determine the inherent risk that the entity is facing, okay, inherent risk. And he will also obtain understanding of how the entity is selecting and applying the accounting policies, and what are the business objectives and related risks that the entity is facing, okay. Through this, auditor will obtain understanding of entity and its environment. Next, the auditor will perform risk assessment procedures. This risk assessment procedures involves three types of activities. First one, inquiries with management and others in the entity. Next one, analytical procedures, and the next one is observation and inspection. First one, inquiries of management and others. See, since the business of the entity is being conducted by the management, they know very well what are the risks that are being faced by their entity. Thereby, auditor will first of all discuss or inquire with the management about what are the risks that their entity is facing, okay. Next one, analytical procedures. See, these analytical procedures can be used as both risk assessment procedures as well as substantive procedures, okay. How? Example, analytical procedures as a risk assessment procedures. Let's say the entity is a manufacturing entity. If it is a manufacturing entity, it will be having a lot of plant and machinery, okay. In the balance sheet, there is a lot of plant and machinery under assets side. But when auditor observed in the profit and loss statement, he doesn't find any repairs and maintenance in the profit and loss statement, okay. There are a lot of plant and machinery that the entity is having, but there are no repairs and maintenance in the profit and loss statement, okay. This would be an area of risk of misstatement, okay. This is how analytical procedures can be used by the auditor as risk assessment procedures. Next, analytical procedures as substantive procedures. Let's say electricity bill. Let's say auditor finds in the profit and loss statement some X amount, let's say some 10 lakhs of electricity bill, and auditor has also obtained an idea of number of units that have been consumed by the entity, okay. Let's say entity has consumed some 10,000 units, okay, during the year, and let's say on an average the price per unit was some 9 rupees. Then total electricity bill must be some 90,000, around 90,000. Now in profit and loss statement, auditor finds that, let's say, the electricity bill was 2 lakhs, okay. Why there is this much of difference, okay. This is an example of substantive procedure, okay, using analytical procedure as a substantive procedure, okay. Substantive means based on the facts. This is how analytical procedures can be used as both risk assessment procedures as well as substantive procedures. Next, observation and inspection, okay. By observing and inspecting the activities that are being performed by employees or management in the entity, auditor will be able to identify the risks in the entity, okay. These are three types of risk assessment procedures. And also, while performing these risk assessment procedures, auditor should also consider the information that has been obtained by the auditor during client acceptance procedure. Okay, this client acceptance procedure will be conducted by the auditor as per SA 220. Okay, information that has been obtained by the auditor during these procedures should also be used during risk assessment procedures. Okay, and also information that the auditor has obtained during other engagements performed. Let's say previously the auditor has performed some internal audit engagement or some other engagements for the entity, and currently the auditor is performing statutory audit. Now during previous engagements, auditor might have obtained some of the information relating to the entity. Auditor has to use even that information for the purpose of risk assessment procedures, and also he should use the information that has been obtained by the auditor during previous engagements. That means in the previous years also the same auditor has performed the statutory audit for the entity, and in the current year also the same auditor is performing the statutory audit of the entity. Now information that has been obtained in the previous years should also be used by the auditor during the current year for performing this risk assessment procedures. So this is clear. That was relating to risk assessment procedures and obtaining understanding of entity and its environment for the purpose of identifying inherent risk. Okay, by this we are done with one part, that is inherent risk part is completed. Now moving to the control risk portion. Okay, basically, and to identify the control risk, auditor will simply walk through the controls. That means auditor will examine how the controls are working. Okay, under this one of the important question is components of internal control. Okay, what are the components of internal controls of the entity? There are basically 5 components: control environment, control activities, control monitoring, information system, risk entities, risk assessment procedures. What are they? First of all, control environment. Okay, the auditor will check whether the environment of the entity is conducive for the successful implementation of the controls or not. Let's say a particular student is preparing for his examinations. Now for his preparation to be successful, the environment around him must be conducive for his preparation. Okay, if he prepares in a study room, then the environment that is present in the study room will be helpful for his preparation. Okay, or if he prepares in his house, okay, the environment that is present in the house will not be much conducive for the preparation. Okay, in the same way, auditor will first of all examine whether the environment that is present in the entity is conducive for successful implementation or successful functioning of the internal controls or not. Okay, next, control activities. Control activities are the actual internal controls that are implemented in the entity will be known as control activities. Next, control monitoring. Under this, auditor will check whether the implemented controls are performing effectively and efficiently or not. Okay, next, information system. Okay, auditor will also check the information systems of the entity. And entities risk assessment procedure. See, not only auditor performs risk assessment procedures, even the entity has to perform the risk assessment procedures, because it is the primary objective of the entity to identify the risks that are present in the entity. Thereby, auditor will also check whether the entity has performed its risk assessment procedures or not. Okay, these are the 5 components of internal control. Next, risks that require special audit considerations. Okay, what are some of the examples of the risks that require special audit considerations by the auditor? Risk of fraud. Okay, if the risk is relating to the fraud, then that is more significant and that requires special consideration by the auditor. Complexity of the transaction, significant transactions with the related party, and transactions outside normal course of business. These are some of the examples of significant risks which require special audit consideration by the auditor. Okay, by this essay 315 has been completed. and there are some topics relating to documentation under this essay 315 that you can go through. Okay, in the next video we will be revising essay 320. Hi guys, how are you? Hope you people are doing well. Even I am fantastic. I guess the results of people who have wrote their exams in May are going to be announced on 15th or 16th of this month. All the best for the people who are waiting for their results. And in this class we will be revising essay 320, materiality in planning and performing an audit of financial statements. Now first of all, let us understand the concept of materiality. If you see, materiality cannot be defined individually. Okay, you have to understand the definition of materiality in relation to some other item. Okay, now materiality in relation to misstatements can be defined as follows. Okay, now any misstatements which will affect the decision making of users will be known as material. Okay, those misstatements will be known as material misstatements. Okay, that is the understanding of materiality in relation to misstatements. Now let's say, for example, there is a particular investor. Okay, there is a particular investor. Now he wants to buy shares of a particular company. Okay, let's say A Limited. He wants to buy the shares of A Limited. Now there are certain misstatements in the financial statements of the A Limited. Now after knowing about these misstatements, okay, after knowing about these misstatements, this investor, just a second, yeah, after knowing about these misstatements, this investor has changed his decision of buying the shares of A Limited. Okay, after knowing the misstatements of A Limited, the investor doesn't want to buy shares of A Limited. Now these misstatements have affected the decision of user of financial statements, thereby these misstatements will be material. Another example, let's say A Limited wants to take a loan from SBI Bank. Now SBI Bank, after knowing about misstatements in the financial statements of A Limited, SBI has decided not to grant loan to A Limited, thereby the decision of user of the financial statement, that is SBI, has been affected by the misstatements that are present in the A Limited, thereby those misstatements will be known as material misstatements. Hope this is clear. Okay, materiality means misstatements that influence economic decisions of users. Now auditor will use this concept of materiality in three areas. See, materiality is used in planning the audit, performing the audit, and evaluation of identified misstatements. Now this materiality during evaluation of identified misstatements will be dealt by essay 450. Okay, now essay 320 will be dealing with materiality for planning the audit and performing the audit. Hope this is clear. And this materiality during evaluation of identified misstatements will be dealt by essay 450. Hope this is clear. Now how to determine materiality? Basically materiality is a number. Okay, Now for determining this materiality, the standard has provided a particular method. Now materiality is equal to benchmark multiplied by a percentage. Okay, now what is this benchmark? Generally some of the examples of benchmark will be sales, profit of the entity, loans given by the entity, or assets of the entity, like this. This will be some of the examples of benchmarks that the auditor can select for determining the materiality. Okay, once auditor selects the benchmark, he will apply a certain percentage to that benchmark, and that will give the materiality level to the auditor. Now how to select this benchmark and how to determine this percentage, we will be discussing that. First of all, for selection of benchmark, there are certain factors that has to be considered by the auditor. What are those factors? Generally, let's say the entity is a trading, okay, the main business of the entity is trading business. In that case, auditor can select turnover of the entity as benchmark. Okay, whereas the nature of the entity is banking company. Okay, let's say the auditor is conducting audit of a banking company. Now in case of banking company, it would be more appropriate to select benchmark as total amount of loans granted by that particular bank. Okay, instead of selecting the turnover, that is the interest earned by the bank, as a benchmark, it would be more appropriate to select total loans that have been granted by the by that particular bank as benchmark. Okay, thereby there are certain factors based on which the auditor will determine what has to be selected as a benchmark for determining the materiality for that particular entity. Let us see those factors. Determine materiality considering the following factors. What are they? Elements of financial statements, items on which users focus. Okay, basically in case of banking companies, the focus of the users will be mainly on loan. Okay, total amount of loans that have been granted by the entity. Thereby in case of banking company, it would be appropriate to select loans granted as benchmark. Next, nature of the entity. Even you can take same example for this also. For an entity which is a banking company, which is in the business of banking, taking loans given as benchmark would be appropriate. Okay, next, ownership structure of the entity. Okay, how the entity has been funded. Okay, whether there is more equity in the entity or there is more debt in the entity. Okay, the auditor has to consider even this factor to determine the benchmark. Next, volatility of the benchmark. Generally auditor should select the benchmark which is less volatile. Okay, he should not select the benchmark which is more volatile. Okay, example, let's say turnover. Okay, turnover of the entity will be almost equal in all the years. Okay, it might show an upward trend or some downward trend, or it might be equal. Okay, based on the performance of the entity, the turnover might either increase or decrease, or it might be equal in almost all the years. Thereby the turnover is not much volatile. Whereas let's say closing stock. Now in particular year, if the entity has purchased huge amount of inventory at the end of the year, then the stock will be very huge. Now in another year, if the entity has not purchased the stock at the end of the year, or entity has made a lot of sale during the end of the year, then the amount of stock will be very less. Okay, thereby selecting closing stock as benchmark would not be appropriate because it is more volatile in nature. Whereas turnover will not be that much volatile. Hope this is clear. Okay, auditor has to consider all these factors before determining benchmark for calculation of materiality. Okay, auditor has determined a particular benchmark. Once the benchmark has been determined, he has to apply a percentage to that benchmark. How the auditor will determine this percentage? Auditor has to determine this percentage based on his professional judgment. Okay, just a second, just give me a second, I will close this and open again. Auditor has to determine this percentage based on the professional judgment of the auditor. Okay, now let's say auditor decided to take turnover of the entity as benchmark. Let's say total turnover of the entity is 1 crore rupees. Okay, total turnover is 1 crore, and auditor has, based on his professional judgment, decided 10%. Now the materiality level for this entity will be 10 lakh rupees. Now all the transactions which are above 10 lakh will be material to the auditor, and he will check all the transactions which are above 10 lakh in this entity. Okay, like this auditor will determine materiality during planning and performing the audit. Okay, basically this will be known as materiality for the financial statements as a whole. Now while performing the audit, okay, let's say auditor based on the materiality determined as 10 lakh, he will check all the transactions that are above 10 lakh. Okay, all the transactions that are above 10 lakh will be verified by the auditor. Now there might be some transactions which are below 10 lakh and which are misstated. Okay, now if auditor doesn't check these transactions, there is a possibility that all the misstatements which are below the materiality together might become material. Okay, let's say for example, there is one misstatement of 2 lakh rupees and another misstatement of 4 lakh rupees and another misstatement of 5 lakh rupees and some 5 misstatements of 50,000 rupees. Like this, there are certain misstatements which are individually below 10 lakh rupees. Okay, but if we combine all these misstatements together, it will amount to 13.5 lakh. Okay, now this 13.5 lakh is above the materiality level determined by the auditor. Okay, materiality level determined by the auditor is 10 lakh, but individual misstatements together constituted more than materiality level. Thereby, to avoid this type of situation, auditor will determine a performance materiality. Okay, let's say auditor has put the performance materiality as 1 lakh. Okay, now auditor will, apart from verifying the transactions which are above 10 lakh, he will also verify the transactions between 1 lakh and 10 lakh. Why he will verify? In order to avoid the situation that all the individual misstatements together will amount to more than the materiality level determined by the auditor. Thereby, to avoid the probability of this situation, auditor will determine a performance materiality. Okay, now in this case, auditor will also verify the transactions which are between 1 lakh and 10 lakh. Thereby, he will identify all these misstatements. Okay, this 2 lakh, 4 lakh, 5 lakh will be identified by the auditor, and there will be some misstatements amounting to 2.5 lakh, and however this 2.5 lakh is not more than the materiality level determined by the auditor, that is 10 lakh. Hope this is clear. Thereby, performance materiality, this is set to reduce the probability of aggregate of uncorrected misstatements exceeding the materiality for financial statements as a whole. Hope this is clear. That is the difference between materiality for the financial statements as a whole and performance materiality. Hope this is clear. Next, materiality can be quantitative or qualitative. Quantitative means, as we have discussed earlier, okay, that is a number as determined by the auditor, benchmark multiplied by a percentage. This would be a quantitative materiality. What is a qualitative materiality? Example, related party transactions. Now, let's say the related party transaction is less than 10 lakh only. Okay, materiality determined by the auditor is 10 lakh, but the related party transaction is less than 10 lakh only, that is, let's say it is 1 lakh. Even though the related party transaction is 1 lakh rupees, the nature of the transaction is such that there is a high chance that these related party transaction might be prone to risk. Okay, thereby, based on nature of the transaction can become material transaction. Okay, in case of this qualitative materiality, auditor will verify the transaction irrespective of the amount of materiality determined by the auditor. Hope this is clear, because the nature of the transaction is such that those transactions are prone to high level of risk. Hope this is clear. Thereby, all those transactions will be however material to the auditor irrespective of the materiality level determined by the auditor. Hope this is clear. Next, materiality can be revised during the audit. See, once the auditor has determined the materiality, it is not that he cannot change this materiality. Okay, while performing the audit, if auditor comes across any information which was not available with the auditor at the time of starting the audit, based on such information or based on such newly available information, auditor can revise his materiality. Hope this is clear. Thereby, materiality can be revised during the audit. Next, and also basically here auditor has determined materiality for the financial statements as a whole, whereas during the audit, auditor has come across certain class of transactions. Let's say repairs and maintenance. Now, during the previous year, okay, during the previous year also the same auditor has audited these financial statements, and during the previous year auditor has found more number of misstatements in these repairs and maintenance. Thereby, during the current year, auditor wants to verify these repairs and maintenance transaction in detail. Okay, if he wants to verify these transactions in detail, it will not be sufficient to apply same level of materiality that has been calculated at financial statements as a whole. Okay, at financial statements as whole, auditor has determined 10 lakhs as materiality, but auditor wants to determine a separate materiality for these repairs and maintenance transactions because of nature of those transactions. Okay, because the auditor knows that there will be more misstatements in these transactions, thereby auditor can determine a different materiality for these class of transactions. Okay, auditor can decide just 50,000, okay, transaction of 50,000 as material for these repairs and maintenance transactions. Hope this is clear. Thereby auditor can decide a separate materiality for different classes of transactions. Hope this is clear. Next, relationship between materiality and audit risk. Basically, we have understood audit risk in previous standards only. What is audit risk? Audit risk is the risk that auditor might give an inappropriate audit opinion, that will be known as audit risk. Now, the relationship between this materiality and audit risk is inverse relationship. How it is inverse relation? Now, if a transaction is more material, auditor will perform more procedures on that particular transaction. If more procedures are performed, the audit risk in the transactions will be reduced. Thereby, if there is high materiality of a particular transaction, the audit risk of that particular transaction will be very low. Thereby the relationship between materiality and audit risk is inversely proportional. Hope this is clear. By this, essay 320 has been completed. In the next class we will revise essay 330. Hi guys, this is CA Balakrishna. In this class, we will be revising essay 330, that is responses of the auditor to assessed risks. Now, if you observe, in essay 315, auditor has identified the risks of material misstatements. Now, under essay 330, auditor will give responses to this assessed risk of material misstatements. Now, how the auditor will respond? Basically, auditor will respond by performing further audit procedures. If you observe, in essay 315, auditor has not obtained any evidences. He just determined the risk of material misstatement. Now, under essay 330, auditor will obtain evidences whether the misstatements actually exist or not. How he will obtain evidences? He will obtain evidences by performing further audit procedures. Okay, this process of obtaining evidences by performing further audit procedures is known as responses of the auditor to assessed risks. Now, what will be included in this further audit procedures? Basically, under this further audit procedures, there will be two types of procedures. One is test of controls and another one is substantive procedures. Now, first of all, we will understand what is meant by test of controls and what is meant by substantive procedures. Basically, the name itself suggests that test of controls are the procedures that are performed to determine whether the controls are operating effectively or not. Those type of procedures will be known as test of controls. Now, you might get a doubt that the objective of the auditor is to determine whether the amounts that are represented in the financial statements are true and fair or not. Okay, basically the auditor wants to give an opinion whether financial statements are giving true and fair view or not. Now, in order to determine whether the amounts that are represented in these financial statements are correct or not, why the auditor is checking the controls? It would be sufficient if he directly verify these financial statements now. Instead, why he is checking the controls by performing test of controls? Let us understand this. See, basically, let's say this is the accounting data, or you can say these are the accounting transactions in the entity. Now, around this accounting transactions, the management will implement controls. Okay, now the objective of the auditor is to determine whether these transactions are correct or not. In order to determine whether these transactions are correct or not, what the auditor will do is, first of all, the auditor will perform test of controls to determine whether the controls that are placed by the organization around these transactions are working effectively or not. Okay, by testing the controls, auditor will identify those controls which are not working properly. Okay, and apart from identifying the controls which are not working properly, auditor will also identify those areas where controls are not implemented. Okay, we'll be calling it as gap. Okay, auditor will identify gaps. Okay, the areas where controls are not at all implemented. Now, what is the use of identifying these types of gaps or ineffective controls? The use to the auditor is that auditor can directly perform his substantive procedures on the transactions of this area. Okay, auditor has identified that in this particular area controls are not working properly. That means there is a chance that the transactions in that particular area might not be correct. Thereby, auditor will direct his substantive procedures directly in this area, and the same would be here. If the auditor finds that there is gap in internal controls, then auditor will direct his substantive procedures directly to this area. Basically, testing controls will save the time of the auditor. Hope this is clear. That is the reason why before performing substantive procedures, auditor will first of all perform test of controls. Okay, what is the purpose of test of controls? Purpose of test of controls is to evaluate operating effectiveness of controls. See, auditor will not give opinion whether the controls are operating effectively or not. He will just check whether controls are operating effectively or not in order to determine the amount of substantive procedures that he has to perform. Okay, that is the reason why he is checking test of controls, but he is not checking test of controls in order to give an opinion of on the test of controls. Okay, the objective of the auditor is to give opinion on the financial statements, but not to give opinion on the test of controls. Hope this is clear. This point we have already discussed in the previous standards. That is test of controls. Now, coming to substantive procedures, we'll understand the difference between test of controls and substantive procedures with the help of an example. Basically, these substantive procedures can be divided into two parts. First of all, test of details and substantive analytical procedures. Let us see first of all. Now, let's say for example, there is a bank reconciliation statement, BRS. Basically, an accountant in the organization has prepared this BRS. Now, once the BRS has been prepared, some higher level authority, like let's say CFO, will put his signature on this BRS. There will be some reconciliation that is performed in the BRS. Now, auditor has to check this BRS. Now, if auditor performs a test of controls on this BRS, auditor will check whether there is signature of the higher authority. Okay, this is checking whether the BRS contains a signature is test of controls. Now, after performing test of controls, auditor wants to verify this BRS in detail. That means he wants to recalculate the calculations that are performed in this BRS. Okay, he wants to watch the balances of cash balance and bank balance. Okay, this procedure of detailedly checking the BRS by recalculating the BRS is known as substantive procedure. Okay, basically in case of internal controls, auditor will check the procedure or process, whereas in case of substantive procedure, auditor will check the entire transaction. Okay, now this substantive procedure can be of two types. One is test of details. Under test of details, let's say the management has given some type of assertions. For example, assertion relating to completeness, accuracy, valuation, like this various types of assertions have been given by the management. Now the auditor will obtain evidence relating to each type of this assertion that has been given by the management under this test of details. For example, let's say relating to the assertion of inventory, relating to existence of inventory, this is one of the assertion that has been given by the management. Okay, existence of inventory. Now in order to obtain evidence relating to this assertion of existence of inventory, auditor will perform physical checking. Okay, this will come under test of details. Hope this is clear. Next is substantive analytical procedure. I have already discussed that this analytical procedures can be used as both risk assessment procedure as well as substantive analytical procedure. Okay, while discussing SA 315, I have discussed this point. Now there I have also given you example of how the analytical procedures can be used as risk assessment procedure and substantive procedures. Okay, this is basically, these are the procedures that the auditor will perform. Next, note: substantive procedures alone cannot provide sufficient appropriate audit evidence. See, in his further audit procedures, auditor will perform some amount of test of controls and some amount of substantive procedures. Okay, he will not perform only test of controls, or he will not perform only substantive procedures. He will perform combination of test of controls and substantive procedures. Okay, now how much amount of test of controls has to be performed and how much amount of substantive procedures has to be performed, how the auditor will decide this. Okay, how much of the test of controls has to be performed and how much of the substantive procedures has to be performed. Let us see. Basically, auditor will decide this based on the control risk. See, let's say this is the control risk. This side the risk is low, this side the risk is high. What is control risk? Control risk is a risk that controls might not identify the misstatements. Okay, that would be known as control risk. Now let me use another pen. See, now the control risk is low. The control risk is low. That means controls are operating effectively. Okay, controls are working properly. In that case, auditor will perform more of test of controls. Okay, auditor will perform more test of controls and less substantive procedures. Okay, since controls are operating effectively, if auditor gets evidence that these controls are operating effectively, then auditor can reduce his substantive procedures. Thereby, if the control risk is low, auditor will perform more of test of controls and will obtain evidence that controls are working properly. Okay, after obtaining this evidence, auditor will just perform some of the substantive procedures. Now In case control risk is very high, that means controls are not working properly. In case controls are not working properly, auditor cannot perform more of test of controls. Instead, auditor will check the transactions in detail. Okay, since controls are not working properly, auditor has to check all the transactions in detail. Thereby, he will perform more of substantive procedures. Less of test of controls. Hope this is clear. This is how auditor will determine how much of test of controls has to be performed and how much of substantive procedures has to be performed. Next, coming to test of controls. Now, while performing test of controls, auditor has to determine nature, timing and extent of this test of controls. How the auditor will determine this? First of all, let us see nature. How the auditor will determine nature of test of controls that has to be performed. Basically, for this, auditor will consider three factors. Based on these three factors, auditor will determine the nature of test of controls to be performed. First one, how the controls were applied. Okay, whether they are manual controls or automated controls. Okay, how the organization is actually applying the controls. Based on the type of controls, auditor will determine the nature of test of controls that has to be performed. Next, by whom they were applied. Okay, actually who is the person in the organization that is performing the controls, or whether it is automated, whether any particular type of software is implemented as a control. Based on this also, auditor will determine the nature of test of controls to be performed and the consistency of the controls. Okay, auditor will consider these three factors in order to determine the nature of test of controls that has to be performed by the auditor. Next, we will see timing later on. We will first of all see extent of controls that has to be performed by the auditor. Now, let's say there is control number 1. Auditor wants to check this control number 1. While checking the control number 1, auditor will first of all determine whether this control is operating independently or it is dependent on some other control. Okay, now let's say auditor found that this control number 1 is dependent on control number 2. In that case, auditor has to check both control number 2 and control number 1. In case control number 1 is operating independently, in that case, auditor will check only control number 1. Okay, now the extent of test of controls will be determined based on whether controls to be tested depends on other controls. Hope this is clear. Next, timing of test of controls. Timing, particular time or throughout the period. Let us see. First of all, test of controls performed during interim period. Now, see, this is the financial year. Now, after 6 months, after completion of 6 months, here auditor has performed test of controls. Okay, auditor has performed test of controls, and based on test of controls, he would have determined whether the controls are operating effectively or not operating effectively. Whatever the decision, the auditor might have come to a decision at this point after 6 months by performing test of controls. Now, at the end of the year, again the auditor comes for performing the audit. Now, here whether auditor has to check the controls during this intervening period or not will be dependent based on some factors. Okay, now first of all, the auditor will see whether the controls that I have already tested here are operating same, okay, or whether there are any changes that have been made by the management. Okay, first of all, the auditor will determine this. Okay, what the auditor will determine? Auditor will determine whether there are any changes that have been made to the controls. In case there are any changes that have been made, then the auditor has to perform test of controls even in this period also. Okay, that is how auditor will determine whether to check the controls in this intervening period or not. See, auditor will first of all obtain evidence of changes in controls in remaining period. In case there is any changes, the auditor will perform test of controls and determine additional evidence to be obtained from remaining period. In case there are any additional controls that have been implemented during the next 6 months, okay, apart from the controls that were present in the first 6 months, management has also implemented some other controls in the remaining 6 months. In this case, auditor will check or auditor will perform test of controls on these newly implemented controls also. Hope this is clear. Next, plans to rely on test of controls performed in preceding year. Let's say here this is one financial year. Now let us take it, sir. See, this is one financial year. Now in the previous financial year also the same auditor has audited this entity. Okay, in the previous financial year also auditor would have performed a test of controls. Now in this current year, auditor wants to rely on the test of controls that were performed in previous year, whether he can rely or not. For this, he has to first of all check whether there are any changes. Okay, no, yes, there are changes. There are changes in the controls in the current period. If there are changes, obviously the auditor has to perform test of controls in the current period also. On the other side, no, there are no changes to the controls during this current period. They are operating in the same way as they were operating in the previous year. In this case, auditor has to make sure that he will test the controls at least once in every third audit. Hope this is clear. In case there are changes to the test of controls, he has changes to the controls, then he has to perform test of controls in the current year. In case there are no changes to the controls in the current period, then auditor has to make sure that he will test each control at least one time in every third audit. Hope this is clear. Let us see. Plans to rely on test of controls performed in preceding year. First of all, he will check there are changes to the controls. In this case, he will perform test of controls in the current year. On the other hand, he finds that there are no changes in the controls. In that case, auditor has to make sure that he will test at least once in every third audit. Hope this is clear. Next, if auditor determines a risk to be significant, then test relevant controls in the current year. See, even though the controls are operating in the same way as they were operating in the previous year, but the auditor determines that there is a high risk in that particular area. Okay, in case auditor determines that there is high risk in a particular area, then he has to mandatorily check the controls relating to that area, because that area is prone to high risk. Hope this is clear. Next, factors to be considered in determining whether to rely on test of controls performed during previous year. See, here auditor is planning to rely on the controls that are performed in the previous year. Now, while determining whether to rely on the controls that are performed in the previous year or not, auditor will consider certain factors. Okay, based on these factors, auditor will come to a conclusion whether to rely on the controls that are performed in the previous year or to perform test of controls again in this current year also. What are those factors? First one, effectiveness of other elements of internal controls. What are the other elements of internal controls? Control environment and monitoring, whether it has been whether the controls are properly being monitored or not, and information systems. These are the elements of internal controls. Based on effectiveness of other elements of internal controls, auditor will determine whether to rely on previous year's test of controls or to freshly perform the test of controls. Next, characteristics of controls, whether the controls are manual or automated. Even this will affect the decision of the auditor whether to rely on test of controls that are performed previously. Next, effectiveness of general IT controls, how the general IT controls are operating, and risk of material misstatement and extent of reliance on control. Okay, in the current year, auditor would have determined the risk of material misstatement. Okay, based on this risk of material misstatement that has been determined by the auditor will decide whether to rely on the test of controls that were performed previously. Next, effectiveness of controls and its application by the entity. Based on all these factors, auditor will take a decision whether to rely or not. Next, substantive procedures. Irrespective of assessed risk of material misstatement, auditor shall design and perform substantive procedures for each material class of transaction, account balance and disclosures. See, auditor cannot avoid performing substantive procedures. Okay, it is only whether auditor will perform high substantive procedures or low substantive procedures, but whatever the situation it might be, auditor has to perform substantive procedures. He cannot avoid performing substantive procedures. Okay, based on the operating effectiveness of the controls, auditor will determine how much amount of substantive procedures to be performed, but he cannot eliminate performing substantive procedures. Hope this is clear. Next, nature, timing, extent of substantive procedures. Nature of substantive procedures. Basically, auditor will determine the nature of substantive procedures based on the type of assertion that he is addressing. Okay, depends on type of assertion you want to address. Next, timing. It is same as that we have discussed in case of test of controls. If performed at interim period, auditor has performed substantive procedures in the interim period. Okay, for first 6 months, auditor has performed substantive procedures for first 6 months. Now, in the remaining 6 months, auditor has to decide whether it is sufficient only to perform substantive procedures or to perform both test of controls and substantive procedures. Okay, perform test of controls and substantive procedures for remaining period or only substantive procedure for remaining period. Okay, based on the effectiveness of the controls that are operating, auditor will decide whether to perform only substantive procedures or to perform both test of controls and substantive procedures for the remaining period. Next, extent of substantive procedures to be performed. Okay, the extent of substantive procedures to be performed depends on control assessment that has been performed by the auditor. Okay, for that you can refer this diagram. Okay, this diagram which we have discussed here. Okay, by this we have completed revision of essay 330. In the next video we will be starting with a revision of 400 series. Okay, hi guys, this is CA Balakrishna from Lecturepedia.in. In this class we will be revising essay 402, audit considerations relating to an entity using service organizations. First of all, before starting the revision, these notes you can find in our Telegram channel, and the link for the Telegram channel will be available in the description. Okay, now entering into the standard. Now in order to understand this standard, first of all you need to have an idea of the context in which this standard has been developed. Okay, once you understand the context of this standard, the remaining standard will be like a cakewalk to you. Okay, so first of all we will understand the context of the standard. Let's say for example there is Reliance company. Okay, Reliance Limited. Now this Reliance Limited has outsourced one of its functions, let's say payroll function. Okay, payroll function has been outsourced to a particular company by name Consultancy Limited. Okay, this is the situation. Now you are auditing financial statements of Reliance Limited. Okay, while auditing financial statements of Reliance Limited, you want to verify payroll transactions. Okay, now if you want to verify payroll transactions, you will not directly verify the payroll transactions. First of all, what you will do, you will determine risk of material misstatements. Okay, as per SA 315 you will determine ROMM. Okay, risk of material misstatement. To determine risk of material misstatement, you need to have understanding of the entity, and also you need to examine the internal controls that have been established around these payroll transactions. Okay, based on understanding of entity and understanding of internal controls, you will arrive at risk of material misstatement for these payroll transactions. But here in this case, these activities relating to payroll has been outsourced to a particular entity. Okay, thereby you cannot obtain understanding of the internal controls around these payroll transactions from your client Reliance Limited, because Reliance Limited is not performing these activities in-house. They have been outsourced to a particular organization by name Consultancy Limited. Okay, in this situation, how the auditor will determine risk of material misstatement? Okay, in this situation, how the auditor will obtain understanding of internal controls around this transaction? Okay, this will be dealt by our standard SA 402. Okay, this is the context of our standard SA 402. Now in this standard we will be using certain terms. Okay, here you are auditing Reliance Limited. Okay, thereby Reliance Limited will be known as user entity, because it is using services of another entity. Thereby Reliance Limited will be known as user entity for the purpose of this standard. And this Consultancy Limited, which is performing certain services to the user entity, will be known as service organization. Okay, service organization. And auditor appointed by the Reliance Limited will be known as user auditor, or you can say user entity auditor. And auditor appointed by this service organization will be known as service auditor. Okay, service auditor. Now let's say Reliance Limited has outsourced payroll transactions to Consultancy Limited, which is service organization. Now this service organization has again outsourced some of the activities to another organization. by name, another company by name Sub Consultancy Limited. Consultancy, just a second. Consultancy Limited. Okay, this service organization has again outsourced the transactions to another entity. Now this another entity will be known as sub-service organization. Okay, these are some of the terminologies that we will be using in this standard, and this is the entire context in which SA 402 has been developed. Okay, now we'll enter into the standard. See, the same example which I have explained, I have given here. You can go through that. Now, first of all, once the auditor started audit of financial statements of user entity, okay, auditor will obtain understanding of those services which are outsourced to the service organization from user entity itself. Okay, first of all, auditor will try if he can obtain understanding of the transactions that have been outsourced from the user entity itself. Okay, how the auditor will obtain understanding of these transactions from the user entity? See, user auditor obtains understanding of services provided by service organization by understanding the following: nature of services that have been outsourced. Okay, auditor will try to obtain understanding of what is the nature of the transactions, or what is the nature of services that have been outsourced. Okay, and what is the nature and materiality of the transactions processed by the service organization. Okay, how material the transactions that are processed by the service organization to this user entity. Okay, whether they are highly material to the user entity or they are not that much material to the user entity. Okay, that auditor will determine. Next, auditor will also obtain understanding of degree of interaction between activities of service organization and user entity. Okay, how closely the activities of user entity and service organization are interrelated, and nature of relationship between service organization and user entity. Okay, what is the nature of relationship between user entity and service organization? Okay, even this will be determined by the auditor. Okay, all this auditor will try to obtain understanding from the user entity itself. Okay, all this information he will try to gather from user entity. In case it is not possible to gather this information from the user entity, okay, from user entity the user auditor is not able to obtain understanding of the transactions or the services that are outsourced. In that case, what the user auditor will do is, see, that is the next point. If unable to obtain sufficient understanding from user entity, then user auditor shall obtain the understanding by following methods. What are those following methods? First one, by obtaining either type 1 or type 2 report. We will discuss what are these type 1 and type 2 reports and what is the difference between these type 1 and type 2 reports. We will discuss that. Next, auditor will also try to contact service organization through user entity. Okay, let's say auditor has got a specific doubt relating to a particular transaction that has been outsourced. Okay, now the understanding of this transaction, auditor is not able to understand this transaction from the user entity. Then what the auditor will do is, auditor will approach the user entity, okay, to give contact of service organization. Okay, auditor will ask the user entity, you please ask this question or ask this doubt to the user entity, to the service organization. Okay, like this auditor will approach the service organization through user entity. or auditor will directly visit service organization and perform procedures. Okay, another option that is available with the auditor is with the user auditor is he will directly visit service organization. Okay, the organization to whom the services or the transaction are outsourced, and the user auditor will perform procedures to examine or to obtain understanding of internal controls that have been established by the by that service organization. Okay, or auditor will use another auditor to perform procedures at service organization. Okay, instead of user auditor himself going to the service organization and performing the procedure, what the user auditor will do is he will employ some other auditor, okay, to perform audit procedures on the service organization. Okay, these are the options that are available to the user auditor to obtain understanding of internal controls at the service organization. Okay, now let us discuss these type 1 report and type 2 reports. What are these type 1 and type 2 reports? Now see, here is our service organization by name Consultancy Limited. Now this Consultancy Limited will be providing outsourced services not only to Reliance Limited. Okay, apart from Reliance Limited, it will be providing services to various other organizations. Just a second, I'll just close this and open again. Yeah, see, this Consultancy Limited will not be providing this outsourced services only to Reliance Limited. Apart from Reliance Limited, there will be so many other clients that will be available to the Consultancy Limited, for whom Consultancy Limited is providing outsourced services. Okay, like various companies, Infosys, okay, TCS, like this various other clients will also be available to this Consultancy Limited. Now if auditors of all these clients, okay, Reliance Limited, Infosys Limited, TCS Limited, okay, auditors of all these clients wants to come to this Consultancy Limited and wants to perform procedures on Consultancy Limited, means it is not possible. Okay, thereby what this service organization, that is our Consultancy Limited, will do is it will get itself audited by a service auditor. Okay, based on the audit, service auditor will give audit report. Okay, those reports will be known as either type 1 report or type 2 report. There is a minor difference between these two reports that we'll discuss. But first of all, basically this is the idea of type 1 and type 2 reports. Okay, now we'll see the difference between type 1 report and type 2 report. Type 1 report versus type 2 report. Basically type 1 report contains design and implementation of controls at the service organization. Okay, in the type 1 report, the service auditor will give his opinion on design and implementation of internal controls at the service organization. Okay, these two aspects will be present in type 1 report, whereas in case of type 2 report contains design, implementation and also their operating effectiveness at a service organization. Okay, apart from design and implementation of internal controls, type 2 report will also contain operating effectiveness of the internal controls. Okay, whether the internal controls at the service organization are operating effectively or not. Okay, opinion on this aspect will also be present in type 2 report. Okay, therefore the major difference between type 1 and type 2 report is, in the type 2 report there will be opinion on the operating effectiveness of the internal controls. Hope this is clear. In case, now by comparing these two reports, the user auditor will always try to obtain type 2 report. Okay, it will be more beneficial to the user auditor if he obtains type 2 report. Okay, in case he obtains type 1 report, then for the purpose of understanding the operating effectiveness of the internal controls, he himself has to perform procedures, okay, in order to obtain understanding of operating effectiveness in case he obtained type 1 report. Hope this is clear. Next, another difference is in this type 1 report contains design and implementation of internal controls on a specific date. Okay, on a particular date they will be contained. The opinion will be contained on a particular date. Whereas in case of type 2 report, the opinion will be on internal controls as on specified date, or it can also be throughout a specified period. Hope this is clear. These are the differences between type 1 report and type 2 report. And also there is another extension to this reports. Basically those will be calling as Carvin reports and Carvot reports. What are they? We'll just discuss that. See here, service auditor of service organization has given either type 1 report or type 2 report. Now in this type 1 report or type 2 report, if the information relating to internal controls of sub-service organization are also present, okay, then it will be known as Carvin report. Okay, in case information relating to internal controls of sub-service organization are not present in this type 1 or type 2 report, then they will be known as, those reports will be known as carve-out reports. Hope this is clear. This is the difference between Carvin report and carve-out report. Here I have mentioned it, you can go through that. Next, reporting by the user auditor. How the user auditor will report, okay, after obtaining understanding of the internal controls or after obtaining the type 1 or type 2 reports, how the user auditor will give his report. Let us see. If the user auditor is unable to obtain sufficient appropriate audit evidence regarding services provided by the service organization, okay, after performing all these procedures also the user auditor is not in a position, okay, he is not able to obtain understanding of the services that are provided by the service organization. In that case, user auditor will give modified opinion because he is not able to obtain understanding of the services that are provided. And in case user auditor is giving unmodified opinion, then in his report he should not refer to the reports given by the service auditor. Okay, do not refer to the work of service auditor unless required by law. Okay, in case law requires to refer to the reports issued by the service auditor, then user auditor can refer the reports of the service auditor or work of the service auditor in his audit report. Otherwise he should not refer. Hope this is clear. By this, the revision of SF 402 has been completed. In the next video we will be revising SF 450. Okay, and another information, if you wanted to purchase classes regarding paper 6D or paper 4 law, you can visit our website lecturepedia.in and you can purchase from our website. Okay, bye bye, take care. Hi everybody, this is CA Balakrishna from lecturepedia.in. In this video we will be revising SF 450, evaluation of misstatements identified during the audit. Now this SF 450 is linked to SA 315 and SA 330. How it is linked? Let us see. Under SA 315, auditor identifies risk of material misstatements. Okay, here auditor will just identify the risks. Later on in SA 330, auditor will give responses to the assessed risks. Basically, he will perform audit procedures under SA 330 and will identify whether any misstatements actually exist or not. Okay, that will be done under SA 330. Basically, under SA 330, he will perform audit procedures. Okay, by performing audit procedures, he will determine whether any misstatements actually exist or not. Okay, he will determine misstatements or identify misstatements. Now, under SA 450, auditor will evaluate these identified misstatements. Okay, he will evaluate. Basically, SA 450 is a very small standard. Okay, it is just a one page standard. Okay, the summary is in just one page. Okay, basically the idea of SA 450 is to evaluate the misstatements identified under SA 330. Okay, evaluation means auditor will determine whether the identified misstatements are material or not, and what will be the impact that these misstatements will be having on his audit opinion. Okay, that would be the evaluation. We'll see how the auditor will conduct the evaluation. Okay, that is the basic idea of this standard SA 450. Now, what are the objectives of the auditor as per this standard? The objectives of the auditor are to evaluate effect of identified misstatements on the audit opinion. Okay, auditor has identified the misstatements in SA 330. Here, auditor will evaluate the effect of those identified misstatements on the audit. Okay, that is the first objective as per SA 450. Second objective is evaluate effect of uncorrected misstatements on financial statements. What are these uncorrected misstatements? See, basically these uncorrected misstatements can arise in two situations. The first situation is auditor has identified certain misstatements. Okay, and auditor found that these misstatements are material, and he asked or he informed management stating that there are these misstatements present in the financial statements, you please rectify these misstatements. Okay, like this auditor has requested the management, but the management refused to correct these misstatements. That is the first situation in which uncorrected misstatements arises. Okay, management refuses to correct. Second situation, let's say auditor feels that misstatements are not material. Okay, the misstatements are trivial in nature. Trivial means not very material. Okay, they are immaterial. The standard uses the term trivial. Okay, TRIVIAL. In case the misstatements are trivial in nature, even in that case, auditor will leave them as uncorrected misstatements only. Okay, these are the two situations in which uncorrected misstatements arises. Now, what will be the effect of these uncorrected misstatements together on the financial statements? Okay, these two are the objectives of the auditor as per SA 250. Now, let us see how the auditor will evaluate the misstatements. Procedure relating to evaluation of misstatements. First of all, while conducting the audit, auditor will identify certain misstatements. Now, he will accumulate all these misstatements. Basically, he will prepare a particular schedule. Okay, in the schedule, he will accumulate all the misstatements and their amounts. Okay, like this, he will gather all the misstatements. Now, based on these identified misstatements, auditor will first of all determine whether to revise audit plan or audit strategy. Okay, basically while starting the audit, auditor would have decided or would have made a audit plan or a audit strategy. Okay, let's say auditor has decided to follow control based audit. That means auditor decided to extensively check the controls, okay, believing that controls are operating effectively. But while performing the audit, he identified many misstatements. Okay, identification of many misstatements is the indication that controls are not affecting, not working properly. In that case, just checking controls is not sufficient. Okay, he has to conduct substantive audit. Okay, in this case, auditor will shift from control based audit to substantive audit. Okay, thereby auditor based on the misstatements will determine whether to revise audit plan or the audit strategy. Okay, next, once he has accumulated all the misstatements, he has to communicate these misstatements to appropriate level of management. Okay, he should communicate to the management stating that management, I have identified these misstatements, you please rectify them. Okay, if management refuses to correct, okay, management has refused to correct those misstatements, in that case, obtain understanding of management reasons for the same. Okay, you asked the management to correct the misstatements, management refused to correct, then you have to ask the management what are the reasons, why are you not correcting the misstatements. Then the management will give certain reasons. Now you have to evaluate those reasons and you should consider those reasons while giving your audit opinion. Okay, next, here management has refused to correct the sum of misstatements, then uncorrected misstatements will arise. Now auditor has to evaluate whether uncorrected misstatements are material based on the following. Okay, if uncorrected misstatements are immaterial, okay, if uncorrected misstatements are trivial in nature, then auditor is not concerned about them. Okay, he will leave that. But in case the uncorrected misstatements are material in nature, then he has to consider this while giving his audit opinion. Thereby auditor will determine whether the uncorrected misstatements are material or immaterial. For this, he will check, he will decide the material, whether the misstatements are material or not based on size and nature of the misstatement and effect of uncorrected misstatements related to prior periods. What is this related to prior periods? Let's say in the previous year, auditor has found a particular misstatement relating to a particular transaction of, let's say, some 50,000 rupees. Okay, during that previous year, auditor came to a conclusion that this 50,000 is trivial in nature, that is immaterial in nature. Thereby he left that misstatement uncorrected. Okay, this 50,000 is uncorrected misstatement of previous year, okay, or last year you can say. Now in the current year audit, in the same transaction, he found another misstatement of, let's say, 40,000. Okay, now if you check this 40,000 individually, it might be immaterial, but if you combine this 50,000 and 40,000 together, it turns to be 90,000, which might be material. Thereby auditor will determine whether the uncorrected misstatement is material or not based on effect of uncorrected misstatements related to prior periods also. Hope this is clear. Next, once he has determined that yes, these uncorrected misstatements are very material in nature, in that case he will communicate effect of uncorrected misstatements with those charged with governance and request for the same to be corrected. Okay, first of all he asked the management refused to correct them. Then after auditor determining that these uncorrected misstatements are material in nature, he will communicate the same to those charged with governance. Okay, asking those charged with governance to please rectify these misstatements. If they fail to rectify the misstatements, then what would be the impact that these uncorrected misstatements will have on his audit opinion? Okay, such impact should also be communicated to those charged with governance. Hope this is clear. Okay, this is a revision of essay 450, a very small standard. In the next class we'll start with the 500 series. And another thing, if you want to purchase classes regarding paper 6D and paper 4 law, you can visit our website lecturepedia.in. okay, thank you, bye bye. Hi guys, this is CA Balakrishna from lecturepedia.in. Till previous video we have completed 400 series. Now we will be starting with a 500 series. Okay, the first standard SA 500 audit evidence, basically a very simple standard which is easily understandable. SA 500 audit evidence. What is meant by this audit evidence? Basically the objective of the auditor is to give opinion on financial statements. Now in order to give opinion, auditor need to base his opinion on certain evidences. Okay, without any evidence auditor cannot give his opinion. Okay, whatever the opinion he reaches, for such opinion he need to have evidence. Okay, thereby audit evidence means the information used by the auditor in arriving at conclusions on which auditor's opinion is based. Okay, that is a simple definition of audit evidence. Now entering into the standard, basically I have divided this standard into 3 parts. Okay, the first part deals with how to obtain audit evidence. Basically audit evidence will be obtained by performing audit procedures. What are the various types of audit procedures that are available, that we will be discussing. Next, characteristics of audit evidence. What are the characteristics? There are 2 characteristics, sufficiency and appropriateness. We will be discussing regarding that. Next, specific procedures that has to be followed by the auditor in case he decides to use work performed by management expert. Okay, this one we will be discussing. Basically at CA final level these 2 are not so important. Okay, these 2 are not so important. This third concept would be important, and for CA inter students these 2 would be important. Okay, now starting with the first section or first point, how to obtain audit evidence. We have to obtain auditor will obtain audit evidence by performing audit procedures. What are the various audit procedures? Audit procedures, first one, inspection. Basically this inspection will be performed regarding 3 aspects. What are they? Auditor will inspect records, auditor will inspect documents, auditor will inspect assets. Okay, inspection can be performed regarding these 3 aspects. Basically inspection will be performed to address which assertion? Inspection will be performed to address assertion of existence. Okay, that is inspection of records, documents and assets. Next, observation. Observation will be in relation to a particular process or procedure. Let's say management is performing inventory counting. This is a process that is being performed by management. Now the auditor will observe this process in order to obtain audit evidence. Okay, that is regarding observation of a process or procedure. Next, confirmation. Let's say in the financial statements debtors is showing so and so figure. Now auditor will get confirmation from those respective debtors, by requesting that third party debtor to give confirmation of the amount. Okay, that is confirmation, third party confirmation that will be obtained by the auditor. Even this is also one of the audit procedure. Next, recalculation. Basically this recalculation will be performed by the auditor in order to check mathematical accuracy. Okay, let's say entity has given a certain figure of interest. Okay, management has calculated interest on loans taken, and that figure has been provided in the financial statements. Now the auditor, in order to verify whether the interest expenditure that is shown in the financial statement is correct or not, he will recalculate the interest expenditure. Okay, even this is also one of the audit procedure to obtain audit evidence. Next, reperformance. Auditor will reperform the procedures that are performed by the management. Next, analytical procedures. This concept of analytical procedures I have already discussed with you. The example relating to inventory and sales, okay, that example I have told you in 300 series. I have discussed that, you can watch them. Next, inquiry. Auditor will inquiry. Basically, inquiry consists of asking questions. Okay, auditor will question various parties, both internal and external parties, in order to obtain audit evidences. These are audit procedures that the auditor will use in order to obtain audit evidences. Next, moving to the second part, characteristics of audit evidence. Just a second, I'll just check whether recording is on or not. Yes. Moving to the second part, characteristics of audit evidence. Basically, there are two characteristics of audit evidence. First one is sufficiency and the second one is appropriateness. Now, sufficiency deals with a measure of quantity. Okay, let's say auditor is obtaining audit evidence relating to particular aspect, okay, particular item in the financial statements. Now, how the auditor will determine how much of audit evidence has to be obtained, okay, that is sufficiency. Okay, basically auditor will determine based on his professional judgment whether the amount of audit evidence that has been obtained relating to a particular matter is sufficient or not. Okay, auditor will use his professional judgment, and this sufficiency will be affected by two factors. One is risk of material misstatement. Okay, if the risk of particular item is very high, then the auditor will obtain more audit evidence. In case risk of material misstatement of particular item is very less, in that case auditor will obtain less audit evidence. Okay, that is relating to how the amount of audit evidence will be affected by risk of material misstatement. Next, it will also be the amount of audit evidence that the auditor will obtain will also be affected by quality of that audit evidence. Okay, if the quality of audit evidence is very high, then the auditor will obtain less audit evidence. If the quality of audit evidence is very low, then the auditor will obtain high amount of audit evidence. Okay, that is regarding sufficiency of audit evidence. Next, moving to next character, that is appropriateness. Now, this appropriateness is a measure of quality of audit evidence. We can further divide this appropriateness into two aspects. One is relevance and other one is reliability. First of all, let us discuss with what is this relevance. Basically, let's say auditor is obtaining audit evidences relating to some expenditure, electricity expenditure in the entity. Okay, now electricity expenditure of particular entity X Limited for particular financial year, let's say 21-22. Now, for this, auditor has to verify electricity bills of this relevant year 21-22, but the management has given electricity bills of 2020-21. Whether those electricity bills of 2021 are relevant for the purpose of audit of this year? No, they are not relevant, because auditor is verifying the electricity expense of 21-22. Then how can he examine bills of 2021? It is not relevant. That is the aspect of relevance. Next, reliability. Now, there are certain situations in which the audit evidence obtained will be more reliable. Let us see what are those situations. Audit evidence will be more reliable if obtained from independent source. Okay, if you obtain any audit evidence from independent third party, it would be more relevant than the evidence that is generated internally. Okay, next, however, the audit evidence that is generated internally will be more reliable if the relevant internal controls are effective. Okay, controls are effective. If the relevant controls that are operating around that particular item are effective, then the audit evidence that is generated internally is also more reliable. So this is clear. Next, audit evidence that is obtained directly by the auditor is more reliable when compared to the audit evidence that has been presented by the management. Okay, next, documentary form of audit evidence is more reliable than oral. Okay, next, original document is more reliable than a photocopy. Okay, these are the cases in which audit evidence will be more reliable. By that we have completed our second part. Moving to the third part, using work of management expert. Now, who is this management expert? See, management expert means a person who is expert in a particular area other than accounting or auditing, because in these two aspects, in accounting and auditing, auditor himself is expert. There is no requirement of a management expert. Okay, apart from these two areas, if management uses any of the expert for other areas, he will be known as management expert. Okay, let's say for example, for provisioning. Okay, yeah, gratuity expenditure, gratuity provision. Basically, the entity wants to calculate the gratuity provision. For this, it has employed an actuary. Okay, now he will be known as management's expert. Okay, now auditor relating to this gratuity provision is relying on the calculation made by this actuary. In this case, what are the precautions that has to be taken by the auditor, or what are the procedures that the auditor will perform? Okay, when auditor decides to use the work performed by management expert, then what sort of audit procedures the auditor will perform? Let us see. Using the work of management expert, in that case, auditor shall evaluate competence, capability and objectivity of that expert. Competence means whether the expert is having sufficient knowledge in the area in which he is dealing. Okay, that would be competence, whether that expert is competent to do that particular work or not. And his capability and his objectivity. Objectivity means whether he will be able to give his decision objectively. That means without showing any bias towards the management. Okay, whether he can give his independent decision without any biasedness towards the management or any other third party. That would be objectivity. Now, from where the auditor will get information regarding this competence and objectivity of this management expert? Auditor can obtain this information. See, sources of information from personal experience with the previous work of that expert. See, let's say now the auditor is auditing A Limited. A Limited has used the work of actuary. Now, previously, let's say auditor would have conducted some audits. Okay, let's say previously auditor has conducted audit of B Limited. In this B Limited also, it has used the work of same actuary. Okay, in that case auditor will be having knowledge of the work that has been performed by the actuary. Okay, that would be one of the source through which auditor can obtain evidence, or auditor can obtain understanding of the competence of this particular management expert, or discussion with the expert. Okay, once you discuss with the expert, once you interact with the expert, you will be able to analyze the knowledge of that expert. Okay, by speaking to him for at least half an hour. Okay, by discussing various issues, you can easily able to judge his knowledge on that particular area. Next, discussion with other familiar with others who are familiar with work of that expert. Okay, there might be some other people who might have used the work of this expert in the past. Now if the auditor discusses with those people, then auditor will get an idea of knowledge of this expert. Next, published papers and or books. Okay, if the expert has published any papers or any books, by reading those books also auditor will get an idea of the knowledge of this expert. Next, qualification, membership, etc. Okay, through these sources auditor can obtain an idea of competence and objectivity of the management's expert. Next, after evaluating competence and objectivity of the management expert, what the auditor will do is he will obtain understanding of work of management expert. Okay, first of all auditor will obtain understanding of the management expert. After obtaining understanding of management expert, now he will obtain understanding of work that has been performed by the management expert. Okay, how he will obtain first of all he will see whether there are any standards or whether there are any regulatory requirements that are applicable to the work performed by the management's expert. Let's say in our case, for auditing and accounting, there are respective standards. There are auditing standards and there are accounting standards. Our work will be as per those standards. In the same way, for actuary also, whether there are any standards applicable, this the auditor will see. If the standards are applicable, he will check whether the work has been performed as per those standards or not. Okay, see, he will see any professional regulatory requirements apply to his work. Okay, next, he will evaluate or he will understand any assumptions and methods used by those management's expert. Okay, in this way auditor will obtain understanding of the work that has been performed by the management expert. Next, after this, evaluate appropriateness of management's work. Okay, auditor has first of all obtained understanding of the management expert. Next, he obtained understanding of the work performed by the management expert. Now auditor decided to use work performed by the management's expert as his audit evidence. Now he has to determine whether that work is relevant to the purpose of the auditor. Okay, management expert is good and his work is good, but whether his work is useful to me or not, that has to be decided by the auditor. So he will check, he will evaluate appropriateness of management expert's work. In this, he will consider relevance and reasonableness of experts' findings. Okay, if at all any findings are made by the expert, whether those findings are relevant and reasonable for the purpose of work of the auditor. Next, reasonableness of assumptions and methods used by those management's expert, and relevance, accuracy and completeness of source data. Okay, the data which has been used by the management expert for arriving a conclusion is complete and reliable or not, that will be checked by the auditor. Okay, this is how auditor will obtain understanding of management expert in case he wants to use the work performed by the management's expert as a audit evidence. Okay, this would be important for CF final level. Okay, it doesn't mean that CA inter students can skip it, even you should go through this. By this, revision of SF 500 has been completed. And another information, in case you wanted to purchase paper 6D or paper 4 classes, you can at CA final level, you can visit our website lecturepedia.in. Okay, bye bye, take care. Hi guys, this is CA Balakrishna from lecturepedia.in. In this video, we will be revising essay 501. Basically, this essay 501 is a small standard which deals with audit evidence relating to particular selected items. Okay, if you see the name of this standard, essay 501, audit evidence, specific consideration for selected items. What are these three selected items that will be dealt by this standard? They are inventory, litigations and claims, and segment information. And the two, in relation to these three items, not all the assertions will be dealt. Okay, basically auditor needs to obtain audit evidence relating to the assertions made by the management. Now, in relation to inventory, this standard deals with how the auditor has to obtain audit evidence relating to assertion of existence of inventory. Okay, and in relation to litigation and claims, assertion of existence and completeness. Okay, and in relation to segment information, assertion of presentation and disclosure. Thereby, this standard deals with how the auditor has to obtain audit evidence relating to these three specific or selected items in relation to these assertions made by the management. Hope this is clear. Now we will start with inventory. Now, auditor needs to obtain audit evidence regarding existence of the inventory. Now tell me, what is the audit procedure that the auditor can perform? The simple audit procedure is, when management is conducting physical inventory count, if auditor also attends such physical inventory count, then he can obtain audit evidence relating to existence of the inventory. That is the simple procedure that the auditor can perform in order to obtain audit evidence regarding existence of the inventory. Even the standard suggests the same. Obtain sufficient appropriate audit evidence regarding existence and condition by attending physical inventory counting. Okay, it is responsibility of the management to to physically count the inventory. Now, if the auditor attends such a physical inventory counting, he can obtain the audit evidences. Now, auditor has attended the physical inventory counting. After attending, what should the auditor do? First of all, auditor will observe the process of inventory counting that is being performed by management staff. Okay, he will observe the counting procedures. Next, after that, what the auditor will do? Apart from management being conducting the inventory counting, auditor will also conduct inventory counting. Okay, he will not count all of them, but he will conduct some test counting. Okay, he will perform some test counts. Okay, after that, he will inspect the inventory. Let's say the client is trading in some medicines. Okay, it purchases some medicines and sells the medicines. Now the inventory is packed in some boxes. Now the auditor will check whether the medicines are actually present in those boxes or those boxes are empty one. That is inspection of inventory. Okay, and the auditor will also evaluate the procedures that have been prescribed by the management. Okay, management would have given some instructions and some SOPs to their staff for conducting the physical inventory count. Now the auditor will evaluate those instructions that are given by the management. Okay, evaluate management's instructions and procedures. These are the four aspects that the auditor will perform at physical inventory counting. Okay, standard says auditor has to attend physical inventory counting and perform these four procedures to obtain audit evidence regarding existence of the inventory. Now let's say basically financial statements will be prepared as on 31st March of every year. Okay, in this the inventory in the balance sheet inventory has to be reflected. Thereby management has to conduct physical inventory count on this date only. Okay, on 31st March only. But due to some reasons management instead of conducting this physical inventory counting on 31st March, it has conducted physical inventory counting on, let's say, 27th March only. Okay, or it has conducted physical inventory counting on 5th of April. Okay, due to some reasons management was not able to conduct physical inventory counting on this date, but it has conducted physical inventory counting either on this date or on this date. Okay, now in this situation what the auditor has to do? See, management is conducting physical inventory counting on 27th March. Management would have given information to the auditor. Once the information is received, auditor has to first of all attend this physical inventory counting that is being conducted by the management on 27th March. Okay, auditor has attended physical inventory counting on 27th March and he has obtained evidence regarding existence of the inventory as on this date. Okay, but auditor wants evidence as on this date. In this case what the auditor will do is auditor will perform additional audit procedures on the transactions that has taken in this period to determine whether these transactions are accounted correctly. Okay, thereby he will arrive at the inventory as on this date. Hope this is clear. In case management has conducted inventory counting on this date, even then the same procedure will be performed by the auditor. Okay, he will perform audit procedures on this, on the transactions that has taken place in this period. Hope this is clear. That is the first special case. See, special case, counting conducted on other than financial statement date. In that case, perform audit procedures to determine whether changes in inventory between count date and financial statement date are properly recorded. Okay, this auditor will do. Now another special case. Let's say here in this second case, management is conducting physical inventory counting on 31st March only. Okay, management is exactly correcting its physical inventory counting on 31st March only. Okay, this is okay. But this time auditor is not able to attend this physical inventory counting. Okay, due to some of the reasons on his side, he is not able to attend this physical inventory counting. In this case, what the auditor has to do? In this case, auditor has to conduct physical inventory counting on some other date. Let's say some 4th of April. Okay, on this date auditor has conducted physical inventory counting. Okay, here physical inventory counting is conducted 2 times. This is the first time, this is the second time. Okay, now the auditor is having audit evidence regarding existence of the inventory as on this date. Now simply what the auditor can do? Auditor can perform audit procedures on the intervening transactions and thereby obtain audit evidence relating to inventory as on 31st March. Hope this is clear. See, the same is explained here. Auditor unable to attend due to unforeseen circumstances, but the management has conducted physical inventory counting on 31st March only. In that case, make physical count on alternate date and perform procedures on intervening transactions. Okay, see in the first case it is not necessary to again perform physical counting, because on the date on which management has performed physical counting, auditor has attended. But in the second case, there is need to perform physical counting another time. Okay, thereby in the second case, physical counting will be conducted 2 times. Hope this is clear. Next, third situation, inventory counting is impracticable. Okay, due to some situations of, let's say, war or some COVID situations. Okay, some unforeseen situations, the physical counting of inventory is impracticable. Okay, it is not possible to physically count the inventory. In that case, auditor has to perform alternative audit procedures. Okay, he has to try to obtain audit evidence by performing alternate audit procedures. Let's say the inventory is in particular country. In that country, the a war is going on. Now what the auditor can do is, in those warehouses, CC cameras might have been fixed. Okay, with the help of CC cameras he can obtain audit evidence, or he can verify the goods receipts notes or the purchase documents. Okay, by this also he can try to obtain audit evidences. Okay, or in the subsequent period, sales might have taken place now. Okay, by checking those sales invoices also, auditor can obtain some of the audit evidence regarding existence of the inventory. Okay, like this, by performing some other alternative procedures, auditor has to try to obtain audit evidence, okay, regarding existence of inventory. In case it is not possible to obtain audit evidence by performing alternative audit procedures also, in that case, if not possible, modify the opinion. Hope this is clear. These are the 3 special cases. There is another special case. What is it? Inventory under custody of third party. Let's say entity has sold the goods on sale or return basis. Okay, in that case, the inventory of the entity will be in the custody of some third party, or let's say the goods have been handed over to the transporter for the purpose of transporting them. Even in this case also, goods will be under control of a third party. In these cases, how should the auditor obtain audit evidence regarding existence of the inventory? What he can do? He can request such a third party to give a confirmation, okay, regarding existence of the inventory. That is one of the procedure through which auditor can obtain audit evidence. Next, obtain another auditor's report. See, ours is A Limited. Now A Limited has sent goods on sale or return basis to B Limited. Now B Limited would have conducted physical inventory counting now. Okay, based on that counting, their auditor would have given audit report now. Now in that, they would have mentioned so and so inventory of so and so person lying in the godown. Okay, now our auditor of A Limited, if he examines the audit report of this person, he can ascertain regarding existence of our inventory with that entity. Okay, or arrange another auditor of A Limited. What he can do is, he can appoint some other person, okay, on his behalf. Okay, auditor of A Limited, on his behalf, he can arrange some other person, and this person can be asked to visit the godown of B Limited and obtain evidence regarding existence of inventory. Okay, or attend third parties physical inventory counting. Okay, while B Limited is conducting their physical inventory counting, even auditor of A Limited can attend their physical inventory counting and can get evidence regarding existence of the inventory. Okay, by this, audit evidence relating to existence of inventory has been completed. Moving to the next item, litigations and claim. Now in relation to litigation and claim, what are the audit procedures that the auditor will perform in order to identify whether there are any litigations or claims against the company? What the auditor will do? First of all, he will get information from the management itself. Okay, he will inquire the management. See, inquiry of management and others within the entity. Okay, based on this inquiry, auditor will obtain evidences regarding existence of any claims or any litigations against the entity, and he will review the minutes of meetings of those charged with governance. Okay, in the meetings they might have discussed relating to how to deal with these litigations. Okay, if auditor reviews the minutes, then he will get knowledge of any litigations against the company. Or review legal expense account. Okay, in the profit and loss account, a particular expense account by name, legal expense account will be there. Okay, if at all any expenditure is debited to that account, then ask for schedule of those expenditure. Okay, from the management. Once you go through that schedule, you will get an idea of what are the litigations or what are the cases that are pending against the entity. Okay, and based on this schedule, you can also inquire the management. Okay, these are the three procedures that the auditor will perform in relation to litigations and claims. Now, by performing these procedures, if auditor finds that there is a risk of material misstatement relating to these litigations or pending cases against the company. Okay, let's say auditor feels that a higher provision has to be provided relating to a particular litigation, but the management has provided a lesser provision. In this case, what the auditor can do is, based on above, auditor assesses risk of material misstatement. Okay, a lesser provision has been provided by the management, but auditor thinks that a higher provision has to be made. In that case, communicate with entities external legal counsels. Okay, you communicate with entities external legal counsels and obtain information regarding how much provision can be made regarding these litigations. In case if management refuses to permit auditor to communicate, okay, management is not allowing the auditor to communicate with those external lawyers of the entity. In that case, obtain audit evidence by performing alternate procedures. Okay, auditor has to try if he is able to obtain audit evidence by performing any other alternate procedures. If he is not able to obtain audit evidence by alternate procedures, in that case he has to consider this matter in giving his opinion, thereby modifying the opinion. Okay, this is relating to litigations and claims. And there is another point, auditor needs to obtain written representation that all known or possible litigations or claims are disclosed to the auditor. Okay, auditor should also take a written representation from the management. Okay, asking the management that all the litigations and claims which are known to the management have been communicated to the auditor. Okay, regarding this, a written representation has to be taken from the management. Next, segment information. Okay, basically this segment information is in regard to this segment information, auditor will have to get audit evidence regarding correct presentation and disclosure. Okay, obtain sufficient appropriate audit evidence regarding presentation and disclosure of segment information as per applicable financial reporting framework. Okay, what is applicable financial reporting framework? Basically, as per Ind AS it is 108. Okay, Ind AS 108 speaks about segment reporting. Okay, the entity has to present its segment results as per the requirements of Ind AS 108 if Ind AS is applicable. Otherwise, it has to be presented as per accounting standard 17, which deals with segment reporting. Okay, this has to be verified by the auditor. By this, revision of SF 501 is done. And in case you wanted to purchase classes regarding paper 6D and paper 4 at CA final level, you can visit our website lecturepedia.in. Okay, bye bye, take care. And another thing, you can find this notes in our Telegram channel, and the link to Telegram channel will be in our description, in the description to this video. Okay. Hello, hi guys, how are you? This is CA Balakrishna from Lecturepedia.in. Now in this video we will be revising essay 505 external confirmation. In the previous video we have revised essay 510. Now it will be essay 505. Now basically, as you all know, this 500 series will be dealing with the audit evidences. Now one of the procedure to obtain audit evidence is external confirmation, okay, and which is a more reliable procedure for the auditor to obtain audit evidence. Why it is so reliable? Let us see. First of all, we will see the actual definition of external confirmation. External confirmation means audit evidence obtained as direct written response to auditor from third party. If you remember, in essay 500 we have seen certain points, okay. If those aspects were present, then the audit evidence is more reliable, okay. Like if audit evidence is obtained from external party, it is more reliable. If audit evidence is in written form, it is more reliable. If the audit evidence is obtained directly by the auditor, then it is more reliable, okay. Like this we have seen certain points of reliability. Now this external confirmation has most of those reliable points. If you see, audit evidence obtained directly, okay, this is the first point of reliability. As a written response, this is second point of reliability, to the auditor from third party, this is third point of reliability, okay. Thereby, since it has all these reliability points, we can consider that external confirmation is more reliable, okay, and auditor prefers to obtain these external confirmations as audit evidences, okay. Now in this standard, I have divided the standard into 4 parts. What are they? Firstly, we will be discussing, just a second, yeah. Firstly, we will be discussing what are the types of external confirmations that we have, and next for what will be the procedure that the auditor will be using in order to obtain external confirmation, and in case management refuses to obtain external confirmation, then how the auditor should deal with it, and some other cases. Starting with the types of external confirmations. Basically there are 2 types of external confirmations. First one is positive external confirmation, second one is a negative external confirmation. What is positive external confirmation? In case of positive external confirmation, when auditor requests the third party to give the confirmation, the third party has to respond in both the cases. What are those both cases? Okay, first of all, if the third party agrees with the information that is present in the confirmation, then the third party has to respond. And also, if third party does not agree with the information that is present in the confirmation, even in that case also third party has to respond. These are the both the cases in which third party has to respond. This type of confirmation request will be known as positive confirmation request. Coming to negative confirmation request. In case of negative confirmation request, third party has to respond only if he does not agree with the information that is present in the confirmation request, okay. In case he agrees with the information that is present in the confirmation request, he need not respond to such confirmation request. This will be calling as a negative confirmation request, okay, wherein the third party has to respond only if he disagrees with the information. Hope this is clear. These are the two types of external confirmation request. First one, positive confirmation request. Confirming party has to respond his agreement or disagreement with information requested. Okay, in both the cases he has to respond. Now you might get a doubt that if the auditor sends confirmation request to the third party, what is the guarantee that third party will verify the amount that is present in the confirmation request with his books and will respond? Okay, what is the guarantee that third party will not neglect while responding to the confirmation request? Now to obtain this guarantee, what the auditor can do is he can give blank positive confirmation request. What is this blank positive confirmation request? See, basically, let's say auditor needs to obtain confirmation regarding debtors balance. Okay, now in the books of accounts of client, the balance is some 1 lakh. Now auditor needs confirmation regarding this. He sends positive confirmation request. Now the auditor gets doubt whether the confirming party will properly verify his books of accounts while confirming or not. Thereby what the auditor will do is he will not disclose the amount in the confirmation request. He will keep the amount column as blank. Okay, the auditor will ask the third party to fill up this blank with the amount. Okay, now and respond. Now to fill up this amount, the third party will have to check his books and he has to fill the amount. Okay, thereby in order to get guarantee that the third party will properly verify and will give response to the confirmation request, the auditor will use this type of blank confirmation request. Hope this is clear. Next, negative confirmation request. Confirming party has to respond only if he disagrees with the information that is provided in the request. Hope this is clear. These are two types of confirmation request, and mostly in practical situation, auditor will try to obtain positive confirmation request only. Okay, he will not use negative confirmation request. Okay, mostly he will use positive confirmation request only. Next, going to audit the procedure of external confirmation. Basically, while requesting external confirmation, there are certain steps that are involved. Now the auditor needs to have control over all these steps in which are involved in obtaining external confirmation. Okay, what are those steps? Let us see. First of all, determining the information to be confirmed. Okay, let's say there are some 100 debtors. Of these 100 debtors, to whom the request has to be sent, this has to be determined by the auditor himself. Okay, this task has to be performed by auditor himself. Okay, he should not rely on management for determining to whom the request has to be sent. Okay, on this process the auditor needs to maintain control. Next, selecting appropriate confirming party. Okay, auditor have selected some debtors to whom confirmation request has to be sent. Now to whom this request has to be addressed. Okay, in that confirming entity there will be various persons. Okay, there will be accounts manager, there will be CFO, there will be management, to whom the request has to be addressed. Okay, it has to be decided by auditor only. Hope this is clear. Next, designing the request. Okay, how should the request be designed? Even that the request has to be designed by the auditor only. There are certain points that has to be kept in mind while designing the request. What are those points? First one, while designing the confirmation request, auditor needs to keep following points in mind. What are they? Assertions being addressed. Okay, now mainly these external confirmations will be used to obtain evidence regarding assertion of existence and assertion of completeness. Okay, mainly to address these two assertions, external confirmations will be used. Okay, so auditor has to determine, keep in mind what is the assertion that the auditor is addressing through this external confirmation. Based on the assertion, he has to design the external confirmation request. Next, specific identified risk of material misstatement. Okay, what is the probability of risk of material misstatement in the area in which auditor is seeking external confirmation? Okay, even this has to be considered by the auditor. Next, layout and presentation of the external confirmation request. Okay, method of communication, how the auditor is going to communicate this confirmation request to the third party. Okay, whether he will be using mail, or he will be using the post, or he will be sending it directly through physically. Okay, based on method of communication also, the method of communication should also be kept in mind while designing the confirmation request. Next, ability of the confirming party. Okay, auditor is designing the confirmation request to confirming party. Auditor should also determine whether such a confirming party to whom the request is being sent will be having the information that is requested by the auditor or not. Okay, whether the confirming party is the correct person to give the confirmation or not. Okay, whether such party will be having the information asked by the auditor or not, even this has to be determined by the auditor. Okay, based on this, the auditor has to design the confirmation request. And he should also consider whether management is giving a free hand. Okay, whether management is encouraging such a third party to respond to the confirmation or request or not. Okay, management's authorization or encouragement to confirming party. Okay, auditor needs to keep all these points. Okay, auditor needs to consider all these points while designing the confirmation request. Hope this is clear. And the last step is sending the request and follow up. Okay, next, what if management refuses, management doesn't permit the auditor to send confirmation request? How should the auditor deal with this type of situation? First of all, auditor will ask the management. Okay, let us see. Management refusal to allow auditor to send external confirmation request. In this case, what the auditor has to do? First of all, he will inquire reasons for refusal. Okay, auditor wants to send external confirmation request, but the management saying that no, you please don't send the external confirmation request. Now what the auditor will do? Auditor will first of all ask the management, why are you not allowing me to send the external confirmation request? Okay, what are the reasons? Like this the auditor will ask. Then management will give his their reasons. Okay, why they are not allowing, why they are refusing the auditor. Now auditor has obtained the reasons from the management. Now auditor will evaluate these reasons. Auditor will obtain audit evidence regarding validity of these reasons given by management. See, obtain audit evidence of their validity. Okay, after obtaining validity, he will evaluate the management refusal on risk of material misstatement and fraud. Okay, the management is refusing me to get external confirmation request. Okay, whether there is any probability of fraud in this area, that is the reason why management is refusing to send external confirmation. Okay, this has to be evaluated by the auditor. After that, after this evaluation, auditor concludes that management's refusal is unreasonable. Okay, the reasons that are given by management are unreasonable, they are not valid. In that case, what the auditor will do is, auditor will communicate the same to those charged with governance and he will accordingly draft his opinion. Hope this is clear. Next, if the auditor finds that the reasons that are given by management are valid, okay, there are valid reasons why management is refusing to send the confirmation request. In this case, what the auditor will do is, auditor will try to obtain audit evidence by alternate procedures. Okay, in case he fails to obtain audit evidence through alternate procedures, then auditor will have to again do the same thing, will have to communicate to those charged with governance and accordingly draft his opinion. See, reasons are valid, but auditor unable to obtain sufficient appropriate audit evidence from alternate procedures, then he has to communicate the same to those charged with governance and consider the same while drafting his opinion. Hope this is clear. Next, there is another point that we left. What are the situations in which external confirmation can be, the negative external confirmation can be used? Let us see. Basically, if these 4 situations are present, okay, then auditor will send negative external confirmation request. Okay, auditor can decide to send external confirmation request. Okay, it is not, however, it is not mandatory that if these situations are present, auditor must send negative external confirmation request only. But if these situations are present, auditor can send negative external confirmation request. What are they? Now, auditor finds low risk of material misstatements. Okay, in the area in which the auditor is seeking external confirmation request, that area is prone to less risk of material misstatement. In that case, he can use negative external confirmation in those cases. Okay, in those areas. Okay, that is the first situation. Next, low exception rate is expected. What is meant by this exception rate? See, let's say in our books the balance is some 1 lakh. Okay, now auditor is requesting confirmation request from third party. Now third party has confirmed that as per our books, okay, the amount is some 90,000 only. Okay, this is known as exception. Okay, there is a difference between confirmation received and the amount that is actually present in the books. This will be known as exception. Now auditor feels that there is a low exception rate. Even in this case also, auditor can use a negative confirmation request. Okay, yeah. Next, third situation, large number of small homogeneous account balances. Okay, let's say there are large number of balances and the amount of these balances is very small. Okay, even in this case, auditor can use negative confirmation request. And the final one, auditor not aware of circumstances that third party disregards such a request. Okay, auditor is sure that the third party, the confirming party, will not disregard the request that is sent by me. Okay, the third party will confirmly verify his books and he will reply me back in case there is any disagreement with the confirmation request. Okay, if the auditor feels so, then he can use negative confirmation request. Okay, basically if the auditor is having confidence over third party that third party will not commit mistake. Okay, the third party will not neglect the request sent by the auditor. Okay, if auditor feels so, then he can use negative confirmation request in regard that item. Hope this is clear. By this, revision of essay 505 has been completed. In the next video, we will be revising essay 520. Okay, and in case you wanted to purchase paper 4 law and paper 6D economic law classes, you can visit our website lecturepedia.in and purchase the classes from there. Okay, hello guys, this is C.A. Balakrishna from lecturepedia.in. In this video, we will be revising essay 510. In the middle we have essay 505 external confirmation that we will be discussing in the next video. Now in this video we will be revising essay 510 initial audit engagements opening balances. Okay, now under this standard, first of all we will understand what is meant by initial audit engagements. See, first of all, there is a company A Limited. Now the financial statements of this company for current year, okay, are being audited by Mr. A. Okay, he is the auditor for the current year financial statements. Now for the previous year, the financial statements of A Limited are audited by, let's say, Mr. C. Now here in the current year for Mr. A, the audit of A Limited will be initial audit engagement. Okay, this is the first case in which the audit will be an initial audit engagement for Mr. A. Second case, now current year Mr. A is auditor, and for previous years the financial statements of A Limited are not audited at all. Okay, not audited. Even in this case also, current year audit of A Limited will be a initial audit engagement for Mr. A. Hope this is clear. Thereby an audit engagement will be called as initial audit engagement if previous year's financial statements are audited by some other auditor, or previous year's financial statements are not at all audited. Okay, in that case the current year audit engagement will be known as initial audit engagement. The same thing I have given here. See, initial audit engagement. Prior period financial statements are not audited or were audited by predecessor auditor. Okay, predecessor auditor means the previous auditor. Okay, will be known as predecessor auditor. That is meant by initial audit engagement. Now in relation to this initial audit engagement, the current auditor has to obtain certain audit evidences regarding the opening balances. Okay, the opening balances of current year will be brought forward from the closing balances of the previous year's financial statement. Okay, now in respect of current year, in respect of this initial audit engagement, the auditor has to obtain sufficient and appropriate audit evidences regarding the correctness of this opening balances. Okay, now as per this standard, the auditor will be mainly having two objectives regarding the opening balances. What are they? Objective as per this standard: obtain sufficient and appropriate audit evidence about whether opening balances contain any misstatement that materially affect the current period financial statements. Okay, the auditor has to obtain audit evidences that the opening balances does not contain any material misstatement. Okay, that is the first objective. Second objective: accounting policies reflected in opening balances are consistently applied in the current period. Okay, now the accounting policies that are followed in the previous year must be consistently followed in the current year also. Let's say previous year's closing balance of stock. Okay, it is valued as per cost or NRV, whichever is lower. Okay, now previous year's closing balance becomes current year opening balance, and in the current year the stock has been valued. Okay, the closing balance of stock and the stock in the current year has been valued at cost. Okay, here in this case the accounting policies that are reflected in the opening balances are not consistently followed in the current period. Okay, whether there are any such instances of not consistently applying the accounting policies that are reflected in the opening balances. Okay, regarding that, auditor needs to obtain audit evidences. Okay, these are the two main objectives of the auditor as per this SA 510. Now in relation to this, what are the audit procedures that the auditor will perform? Let us see. Okay, in relation to this audit in relation to this opening balances. Okay, in order to obtain audit evidences regarding the opening balances, what are the audit procedures that the auditor will perform? Let us see. As we have discussed in SA 500 that auditor will obtain audit evidences by performing audit procedures. Okay, now here in SA 510, auditor needs to obtain audit evidences regarding opening balances. In order to obtain evidences, he need to perform certain procedures. What are those procedures? Let us see. Firstly, he will read most recent financial statements. Okay, in the most recent financial statements, the closing balances will be present now. Okay, he will read those financial statements. Okay, and he will check whether the closing balances of that financial statements have been correctly brought forward to the current year as opening balances or not. See, determine whether prior period closing balances are correctly brought forward to the current year as opening balance or not. These are the first two audit procedures. Next, determine whether opening balances reflect appropriate accounting policies. See, apart from obtaining audit evidences of whether accounting policies reflected in opening balances are consistently followed in the current year or not, he should also check whether the accounting policies that are reflected in the opening balances are appropriate or not. Okay, even that has to be checked by the auditor, by the current auditor. Next, if let's say prior periods financial statements are audited by some other auditor, okay, in that case, see, prior period financial statements audited by another auditor, in that case current auditor can obtain audit evidences regarding opening balances by just going through those audited financial statements. Okay, the current auditor can place his reliance, okay, he can rely on the financial statements that are audited by some other auditor. Okay, thereby he can peruse the copies of audited financial statements, and current auditor can place reliance on closing balance in the audited financial statements. Okay, he can place his reliance on the closing balances that are reflected in the previous periods of financial statements, and the same has to be carried forward to the current period as opening balances. In case prior periods financial statements are not audited, okay, see, audit of financial statement is for the first time. In that case, the current auditor has to perform certain additional audit procedures in order to obtain evidences regarding the opening balances, perform other audit procedures to obtain sufficient appropriate audit evidence regarding opening balance. Okay, what are some of the examples regarding such additional audit procedures? Now let's say there are sundry debtors. Okay, there is some closing balance of sundry debtors. Now the auditor has to obtain audit evidences regarding existence and correctness of that amount of sundry debtors. In this case, he can ask for confirmation from that respective debtor. Okay, by the confirmation of that respective debtor, auditor can obtain sufficient appropriate audit evidence regarding the opening balance. Okay, or auditor can also ask for some written representations from the management. Okay, like this, by performing some other audit procedures, auditor needs to obtain audit evidence regarding the opening balances in case the prior periods financial statements are not audited. See, example would be confirmation or management representation, etc. Okay, next, coming to the reporting part. Now let's say auditor has performed these procedures and came to a conclusion that opening balances, okay, or there are certain misstatements in the opening balances. Okay, auditor obtained sufficient appropriate audit evidence and concluded that there are certain misstatements in the opening balances. In that case, what will be the type of opinion that the auditor will give? First of all, he has obtained audit evidence. Okay, thereby he cannot give disclaimer of opinion. Okay, since there is audit evidence, he cannot give disclaimer of opinion. It might be either qualified opinion or adverse opinion. Okay, based on the audit evidence obtained, if the auditor feels that these misstatements in the opening balances are material and pervasive, in that case auditor will give adverse opinion. In case he feels that they are material but not pervasive, in that case he will give qualified opinion. Okay, that is the first case. Now in the second case, auditor is not able to obtain sufficient appropriate audit evidence regarding the opening balances. Here, since he is not able to obtain sufficient appropriate audit evidence, he cannot give adverse opinion. Okay, he can give either qualified opinion or disclaimer of opinion. Okay, now if auditor feels that the misstatements that might be present in the opening balances are both pervasive and material in nature, in that case he will disclaim the opinion. Okay, since there is no sufficient appropriate audit evidence. On the other hand, if the auditor feels that these misstatements, okay, the misstatements that might be present in the opening balances are material but not pervasive in nature, in that case auditor will give qualified opinion. Hope this is clear. Okay, this is regarding opening balances. Okay, this is regarding misstatements in opening balances. Now moving to accounting policies. Now the accounting policies that are reflected in the opening balances are not consistently followed in the current year. Okay, if the auditor concludes that the accounting policies are not consistently followed in the current year, then he has obtained audit evidence. Okay, based on audit evidence only he can conclude that the accounting policies are not consistently followed. Okay, in this case, if the auditor feels that this is both material and pervasive, he will give adverse opinion. In case he feels that it is material but not pervasive, he will give qualified opinion. Okay, here he cannot give disclaimer because he is having audit evidence. Okay, he is having evidence that the accounting policies that are followed are not consistent in nature, thereby he cannot give disclaimer of opinion. Okay, this is entire reporting part. You can see the same here. Audit reporting. Auditor concludes that opening balances contain misstatements and effect is not properly accounted. Okay, auditor concludes means he has obtained sufficient appropriate audit evidence that the opening balances contain misstatements. In that case, he will give either qualified or adverse opinion based on the pervasiveness of that misstatement. And also, or accounting policies are not applied consistently. Okay, if auditor has concluded this, it means that he has obtained sufficient appropriate audit evidence. Okay, based on the audit evidence he has obtained, he concluded that accounting policies are not applied consistently. In that case, he will give either qualified or adverse based on the pervasiveness of this item. Next, if the auditor is unable to obtain sufficient appropriate audit evidence, okay, if he is not able to obtain audit evidence and he feels that misstatements are both material and pervasive, then he will disclaim the opinion. Okay, on the other hand, if he feels that misstatements are only material but not pervasive, in that case he will give qualified opinion. Okay, this is a reporting aspect. Next, note. Let us see. Predecessor auditor's opinion includes a modification. See, the current auditor has gone through the audit report of predecessor auditor. Okay, that is previous year's auditor, and he found that the previous year's auditor's opinion is modified. Okay, this he found that the previous year's opinion is modified. Now auditor will check in the current year, okay, whether the aspect on which previous year's auditor has modified his opinion has been correctly presented or correctly followed in this current year. Okay, if it is correctly done in this particular year, okay, in this current year, then the auditor will not modify his opinion based on that aspect. In case the current auditor finds that aspect based on which the predecessor auditor has modified his opinion has not been corrected in the current period financial statements also. Okay, in the current period also there is same mistake that has been done. Okay, there is same type of misstatement. in that case the current year auditor, okay, the current period auditor will also modify his opinion on the current period financial statements. Hope this is clear. See, remains material and relevant to current period also, okay, in that case he will modify current period opinion also. Okay, by this revision of SF 510 is done. Okay, and in case you wanted to purchase classes regarding paper 4 law and paper 6D economic law, you can visit our website lecturepedia.in and you can purchase from that website. Okay, in the next video we will be revising SF 505. Hi guys, this is CA Balakrishna from lecturepedia.in. Yeah, first of all, happy Raksha Bandhan to all of you. In this video we will be revising SF 520 analytical procedures. Actually in SF 300 series we have already touched this analytical procedures. Okay, we have already revised what is meant by analytical procedures in SF 300 series. If you remember, audit procedures will be of two types: test of controls and substantive procedures. Under substantive procedures we have test of details and substantive analytical procedures. Okay, if you remember in SF 315 I have given that chart. You can once see that chart. Now in this SF 520 it will deal with the procedure that the auditor will follow in order to use analytical procedure to obtain audit evidence. Okay, basically analytical procedure is one of the audit procedure to obtain audit evidence. If you remember, SF 505 deals with external confirmation, which is one of audit procedure to obtain audit evidence. In the same way, SF 520 deals with analytical procedure, which is one of the audit procedure to obtain audit evidence. Okay, first of all I'll give one of the small example relating to how this analytical procedure will be performed. Let's say we have an entity. Basically this entity is in a hotel industry. Okay, it is having some around 100 rooms. Okay, these rooms will be given on rental basis. That is the business of the entity. Now auditor has obtained following information. Auditor has obtained that entity is having in total 100 rooms. Okay, entity is having 100 rooms and average rent from these rooms is 1000. Okay, this is the average rent per room into 365 days, and based on conversation with the management, auditor has obtained the occupancy ratio. Okay, from the management has informed the auditor that on an average the occupancy ratio will be around 70%. Okay, now from this auditor can calculate revenue of the entity. What would be the revenue? Let's calculate. Hundred rooms, 1000 rupees rent, 365 days, 70% occupancy ratio. 70 divided by 100. that would be 2 crore 55 lakh 50,000. Okay, let's say 2.5 crore. Okay, auditor based on his analytical procedure came to a conclusion that the revenue of the entity should be 2.5 crore, but in the financial statements, okay, auditor has observed that entity has shown its revenue as 3 crores. Now there is a difference between expectations of the auditor and the actual figure. Now the auditor will investigate this difference. Okay, why this additional 50 lakhs of revenue has been booked by the entity? Okay, whether entity is providing some other services, or whether entity is having any other revenue apart from this rental revenue. Okay, now based on this investigation, auditor will reconcile this difference. Okay, now this analytical procedure will help the auditor to obtain an overall idea. Okay, basically analytical procedures can be used by the auditor at all the stages. Okay, he can use analytical procedures at planning stage, at a performance stage, and at a reporting stage also. This is one of the example of how auditor can use analytical procedures. Now let us see the definition of analytical procedure. What is meant by analytical procedure? Basically, analytical procedure is analysis of plausible relationship among financial and non-financial data. Plausible, what is meant by this plausible? Plausible means you can say it as reasonable. Okay, reasonable or probable. Basically, under analytical procedure, auditor will analyze the probable relationship between financial and non-financial data. Basically, if you observe here, number of rooms, okay, number of rooms, this is non-financial data. Revenue per room, this is financial data. Occupancy ratio, this is non-financial. Number of days, non-financial. Okay, now based on the relationship between these items, auditor will analyze what should the revenue of the entity has to be. Okay, this is what analytical procedure means. Now basically, under analytical procedure, auditor will compare current year's data with certain 3 forms of data. Okay, what are those 3 forms of data? Let us see. It involves comparison of entities' financial information with information for prior period. Let's say there is A Limited. Okay, for A Limited, under current year there will be certain data. Now under analytical procedures, auditor will compare this data with previous year's data of same entity. Okay, this is a first point, information for prior period of the same entity, or anticipated results of the entity. Okay, the entity might have projected, okay, its results. It could have prepared its projected financials. Okay, based on the past trend, the entity could have projected what could be its numbers in the future. Now under analytical procedure, auditor can also compare entities current year data with entities projected data. Okay, next, next comparison involves similar industry information. Okay, now let's say A Limited is under hotel industry. Now in this hotel industry, apart from A Limited, there is another company, B Limited. B Limited could have also prepared its financials in the current year. Okay, it will be having its current year data. Now the auditor of A Limited will compare data of A Limited with data of B Limited. Okay, this is a comparison with a similar industry information. These are the three types of comparisons that the auditor can perform under analytical procedures. Okay, now while performing the analytical procedures, auditor has to follow a certain process. Okay, what is the process that the auditor will follow in order to perform analytical procedures? That we'll see. Basically, this is a very important concept under this SA 520. Process of substantive analytical procedure, or how substantive analytical procedures will be performed by the auditor. Basically, it involves 4 steps. What are those 4 steps? First one, auditor will determine suitability. Okay, whether performing analytical procedures in this area is suitable or not. This will be first of all determined by the auditor. How the auditor will determine? Based on following factors. Large volume. Okay, if the entity's data is large, okay, it has large volume of data, in those cases analytical procedures can be applied by the auditor. Okay, analytical procedures will be more useful to the auditor if the entity is having large volumes of data. And there should be relationship among data. Okay, auditor can use these analytical procedures only if there is relationship between the items that the auditor wants to compare. Okay, electricity units consumed and the electricity bill, there is a relationship between these two items. Okay, entities revenue generated through rental income and total number of rooms and occupancy ratio, there is a relationship between this. Thereby auditor can use analytical procedure. Okay, and also number of employees and the salary expense, there is a relationship between this. Auditor can use analytical procedure in this area. But let's say total sales made by the entity and number of employees, there is no relationship between these two items. Okay, now auditor cannot compare these two items. Okay, auditor cannot use analytical procedure in this area of sales and employees together. Okay, thereby in order to determine whether analytical procedure is suitable or not, auditor should confirm that there exists a relationship among the data. Hope this is clear. This is the first step, wherein auditor will determine whether performing analytical procedure is suitable or not. Hope this is clear. Once auditor concludes that yes, performing analytical procedures in this area is suitable, then auditor will evaluate reliability of data. If you observe in our example, here to perform analytical procedure, auditor has obtained various data. Okay, number of rooms, average rent, number of days. Okay, and this is occupancy ratio. Now auditor should get confidence on the reliability of this data. Okay, only if this data is reliable, then this value will be correct. Okay, if this data is wrong, the amount of revenue that the auditor has calculated will be wrong. Thereby it is necessary that auditor needs to make sure that the data that the auditor is using must be reliable in nature. Okay, now in order to determine whether the data is reliable or not, auditor will consider the following. What are they? Firstly, source of the information. Okay, from whom auditor has gathered this information. Okay, if auditor has gathered this information from the top management, then it will be more reliable. Okay, next, comparability of information, nature and relevance of information, controls over preparation of the information. Okay, auditor will consider all these to determine whether the data that the auditor is using for the purpose of performing analytical procedures is reliable or not. Next, by performing these, auditor came to a conclusion that yes, the data that I am going to use for performing analytical procedures is reliable. Then next, what the auditor will do? Auditor will expect the amount. See, develop an expectation of recorded amounts or ratio. See, with the help of this data, okay, that the auditor has gathered, auditor will expect an amount. Okay, here in this case, auditor is expecting what can be the amount of revenue that the entity would have been generated. Okay, based on auditor's expectation, entity should have generated 2.5 crores. Okay, this is the third step, wherein auditor will expect the amount that has to be there. Okay, in the third step he has expected. What will he do in the fourth step? See, determine the amount of difference between recorded amount and expected values. See, going to our example again, in the fourth step, auditor will determine the difference between expected value and recorded amount. Here in this case the difference is 50 lakhs. Okay, after determining the difference, he will investigate this difference. Okay, why this difference has arose. How he will investigate? By inquiring with management. Okay, he will inquire with the management. Okay, apart from this rental income, do you have any other income? Okay, in case you have any other income, you please provide the details relating to those incomes. Okay, like this, by performing an inquiry with the management, auditor will try to reconcile the difference, and by performing other audit procedures. Okay, this is how analytical procedures, substantive analytical procedure is performed. See, auditor shall investigate the differences by inquiring with the management and performing other audit procedures. Hope this is clear. By this, revision of SF 520 has been completed. We will meet with SF 530 in the next class. Hi guys, this is CA Balakrishna from Lecturepedia.in. In this class, we will be revising SF 530, audit sampling. First of all, why auditor uses this audit sampling? See, basically auditor needs to perform audit procedures. Now, if auditor goes on performing audit procedures on all the data that is available with the auditor, then first of all time will not be sufficient. Okay, keeping in this mind, auditor will perform audit procedures only on some of selected data. Okay, now how to select this data on which the audit procedures has to be performed? Okay, this will be dealt by sampling. Okay, auditor will select the data based on sampling sampling technique. Thereby, what is meant by audit sampling? Okay, the official definition is application of audit procedures to less than 100% of the population is known as audit sampling. Okay, in audit sampling, auditor will perform audit procedures on only selected data. Okay, he will not perform audit procedures on entire population. Hope this is clear. Now obviously, since auditor performs audit procedures only on sample, okay, but the auditor gives his opinion on entire population. Okay, now the opinion that auditor draws by performing audit procedures on this sample only might be different from the opinion that the auditor would have been drawn if he has applied audit procedures on the entire population. Okay, now here under audit sampling, auditor is applying audit procedures only on sample data. Okay, but he has to give his opinion on entire population. Okay, thereby there is a chance that the opinion that the auditor has drawn might be different. Okay, the opinion that the auditor has drawn might be wrong. This situation will be known as sampling risk. Okay, next point is that only, sampling risk that auditor's conclusion based on sample may be different from conclusions if entire population were subjected to same audit procedures is known as sampling risk. Now this sampling risk can be of two types. First of all, in case of test of controls, see, auditor has performed audit procedures and concluded that controls are working effectively. Okay, this is the conclusion that the auditor has reached. Okay, the conclusion is that controls are working effectively, but actually controls are not working effectively. Okay, the first risk is that auditor might give his opinion stating that controls are working effectively, but in fact they are not working effectively. This is the first risk. Second risk, in the second risk, auditor concludes that controls are not working effectively, but actually controls are working effectively. Okay, these are the two types of risks under test of control. See, controls are more effective than they actually are. Okay, actually controls are not that much effective, but the auditor gives his opinion that controls are effective. Okay, that is the first risk. Next, controls are less effective than they actually are. Okay, actually controls are more effective. Okay, they are working effectively, but the auditor wrongly gives his opinion that controls are not working effectively. Okay, now what is the, okay, we'll also see second type of risk, then we'll evaluate it. Second type is related to test of details. Okay, based on audit procedures on the audit sample, auditor concludes that there are no misstatements in the financials of the entity, but actually there are many misstatements. Okay, there are many material misstatements in the entity. This is the first type of risk. Second type of risk, auditor concludes that there are many misstatements in the entity, but actually there are no misstatements. See, material misstatements exist when in fact they does not exist. Okay, actually there are no material misstatements, but auditor gives his opinion stating that there are material misstatements. Next, material misstatement does not exist when in fact it does. Okay, there are material misstatements in the entity, but auditor gives his opinion stating that there are no material misstatements in the entity. Now from this four, which will be more dangerous? Okay, see, let us start from here. First one, controls are more effective than they actually are. Okay, actually controls are not effective, but auditor gives his opinion stating that controls are more effective. This is danger. Okay, in fact controls are not working properly, but auditors gives opinion stating that controls are working properly. Okay, this is dangerous. Next, controls are less effective than they actually are. Okay, actually controls are working very effectively, but auditor gives his opinion stating that controls are not working effectively. Okay, this is not much dangerous. Okay, because in actuality the controls are working properly. Okay, there is a nothing deficient in the controls, they are working properly, but auditor gives opinion that the controls are not working properly. There is nothing danger in this. Okay, we cannot consider it as more risk. Okay, next, material misstatements exist when in fact it does not exist. Okay, actually there are no material misstatements, but the auditor gives opinion stating that there are material misstatements. This is not much riskier, but the second one is much riskier. Material misstatements does not exist when in fact they exist. Okay, actually there are misstatements in the financials, but auditor gives opinion that there are no material misstatements. This is more riskier. Okay, now these two green highlighted points which are more riskier, they will affect the effectiveness of the audit. Okay, what is meant by effectiveness? Basically the objective of the auditor is to identify material misstatements in the financials of the entity. This is the objective of the entity. Now in these two cases, auditor is not able to achieve his objective. Okay, thereby it is affecting the effectiveness of the audit. Okay, effectiveness means achieving the objective. Achieving objective. If auditor has achieved his objective, then we will say that audit is more effective. If auditor fails to achieve his objective, then we will say that audit is less effective. Okay, now these two highlighted points will affect the effectiveness of the audit, and remaining two, these two will affect the efficiency of the audit. Efficiency means, see here in these two cases there are no misstatements in the entity. Okay, but audit procedures performed by, there is something wrong in the audit procedures that are performed by the auditor, thereby audit procedures are showing that there are misstatements in the entity. Now in order to prove this wrong, okay, in order to prove this as wrong, auditor needs to perform further audit procedures. Okay, he needs to extend his audit work. Okay, it takes more time in this case. Okay, because there are no misstatements in the entity, but the procedures that are being performed by the auditor are not sufficient to prove that there are no misstatements in the entity, thereby he needs to perform more and more procedures. Okay, thereby this will affect the efficiency of the audit. Okay, efficiency means achieving the audit objective with less resources. Okay, that would be known as efficiency. Okay, this is sampling risk. This is the entire concept of sampling risk. Next, steps in audit sampling. Okay, when auditor decides to perform his audit procedures on sample data, how the auditor will go ahead, what are the steps that the auditor will perform. First of all, auditor will determine sample design, sample size, and he will select the items for testing. Okay, this is the first step that the auditor will perform. Now while performing these steps, there are certain considerations that the auditor has to keep in mind. What are they? See, while designing the sample, auditor should consider purpose of audit procedure and characteristic of population. Okay, based on characteristics of the population and based on the purpose for which the sample is being designed, auditor has to design the sample. Okay, next, in case of determining sample size, auditor should determine the sample size in such a way that the selected sample size will reduce the sampling risk. Okay, sufficient to reduce the sampling risk. Next, he must select the sampling units. Okay, sampling unit selection should be in such a way that each sampling unit in the population has a chance of selection. Okay, all the units of the population are having equal chance of being selected. Okay, these are the considerations that the auditor should keep in mind while determining sample design, sample size, and selection of sampling units from the population. Hope this is clear. Now for the purpose of selection of sampling units, okay, for the purpose of sampling, there are certain methods that the auditor can use. What are those methods? Sampling selection methods. Sampling selection methods. First of all, there is random sampling. Now for the purpose of this sampling methods, I'll tell you an example. With that example, we'll understand all the sampling methods. Let's say population consists of, okay, population consists of apples. Okay, now the color of apples are red apple, green apple, blue apple, and white apple. Okay, these are the four types of apples that are present in the population. Okay, there are various numbers of apples. Okay, but the colors are these four. Okay, now this is the example. Now we'll discuss the sampling techniques with the help of this example, starting with random sampling. Okay, simple random sampling. Okay, in case of simple random sampling, auditor will select the samples randomly. Okay, without any proper method, he will randomly select the items. That is simple random sampling. Okay, now here various apples are present now in the population. Okay, from these apples he will randomly select the apples as samples. Okay, that is simple random sampling. Moving to stratified random sampling. What is this stratified random sampling? In case of stratified random sampling, auditor will first of all prepare stratas. Okay, each strata will have homogeneous population. Okay, let's say under first strata auditor has taken all the red apples. Under second strata auditor has taken all green apples. Under third strata auditor has taken all blue apples. Under fourth strata auditor has taken all white apples. Okay, like this first of all auditor will divide the entire population into various stratas. Now he will apply random sampling. Okay, simple random sampling to this stratas. Okay, in this red apple strata he will randomly select some of the apples as sample. In this green apple strata he will randomly select apples. Okay, this is how stratified random sampling works. Okay, that is stratified random sampling. Now moving to interval sampling. Interval sampling. Under interval sampling we further have block sampling and cluster sampling. Now people will confuse between cluster sampling and stratified sampling. So first of all we will discuss this cluster sampling. Okay, here we have seen that under stratified sampling auditor will first of all determine stratas. Okay, he will divide the entire population into stratas. Now under cluster sampling auditor will divide the entire population into clusters. Okay, under cluster 1 he will take one red apple, one green apple, one blue apple, one white apple. Under second cluster he will again take one red apple, one green apple, one blue apple, one white apple. Again third cluster, one red apple, one green apple, one blue apple, one white apple. Again fourth cluster, one red apple, one green apple, one blue apple, one white apple. Now the difference between this stratified random sampling and cluster sampling is that in case of stratums all the population in each stratum will be homogeneous in nature, whereas in case of a cluster all the population of each cluster will be heterogeneous. Okay, but all the clusters will be homogeneous. Okay, here all the stratum will be heterogeneous. Hope you are understanding the difference. Now from these clusters auditor will randomly select any of the clusters. Okay, and on those clusters he will perform audit sampling. Hope this is clear. This is the difference between stratified random sampling and cluster sampling. Okay, next moving to block sampling. See, under block sampling, let's say there are 2000 invoices, 1 to 2000 invoices. Now under this block sampling auditor will select a block of 50 to 100 invoices. Okay, this is the block that has been selected by the auditor as sample. Okay, under block sampling the sampling units will be sequential in nature. Okay, this is block sampling. Next, monetary unit sampling. This is very simple. Okay, auditor will determine a certain monetary unit of, let's say, 1 lakh rupees, and all the amounts that are more than 1 lakh will be selected as sampling unit by the auditor, that is monetary unit sampling. Moving to haphazard sampling. Basically haphazard sampling is a sampling in which no particular technique is followed. Okay, no technique is followed. No technique is followed. Okay, it is non-structural, non-structured sampling where no technique for selection of items is followed. These are the sampling methods through which the samples are selected. Now once the sample selection has been completed, auditor will perform his audit procedures on the audit samples. Okay, he will perform audit procedures. After performing audit procedures, auditor will identify obviously some misstatements. Okay, he will determine nature and cause of deviations and misstatements in the samples. Okay, he has identified some misstatements in the samples. Now he will determine nature and cause of these misstatements. Now basically auditor has to give his opinion on entire population, but auditor has performed audit procedures on only sample, thereby, and from sample auditor has identified certain misstatements, but auditor needs to give opinion on population. Now what the auditor will do is, auditor will project the misstatements to entire population. Okay, he will decide if these many misstatements are identified in this much of sample, then how many misstatements could be identified in the entire population. Like this he will project the misstatements. Okay, and after that he will evaluate the results of audit sampling. Okay, this is the revision of essay 530. By this revision of essay 530, audit sampling has been completed. In the next video we will be revising essay 540, and in case you want to purchase regular classes for paper 4 law and paper 6D economic law at CA final level, you can visit our website lecturepedia.in and you can purchase from our website. And in case you want to join our Telegram channel, the link for the Telegram channel will be given in the description, and you can join the Telegram channel from the link. Okay, we'll meet in the next class. Hi guys, this is CA Balakrishna from lecturepedia.in. In this class we'll be revising essay 540, auditing accounting estimates and fair value accounting estimates, and also related disclosures. Now if you observe, in the financial statements there will be transactions like sales, purchases, salaries. Okay, all these transactions are actually happened transactions. Okay, these transactions would have happened at a certain amount. Okay, now the same amount will be reflected in the financial statements. Regarding these transactions, entity or the management need not estimate the amount of transaction, but there will be some other types of transactions regarding which management has to estimate the amount. Example would be provision for doubtful debts. Okay, in those types of transactions management has to estimate the amount. Okay, in case management has estimated the amount, how the auditor will audit such estimations made by the management? Okay, that we will be discussing in this standard. First of all, we will understand some of the examples related to accounting estimates and some of the examples related to fair value accounting estimates. Now if you observe, accounting estimates are normal as we have discussed. Example of doubtful debts. Now what are these fair value accounting estimates? See, as per Ind AS, there are certain transactions which have to be recognized at fair value. Now this fair value has to be estimated by the management. Okay, Ind AS will provide certain method to estimate the fair value. As per that method, the management has to estimate the fair value of the transaction. Okay, here even in this case also management is estimating the fair value. In case management estimates the fair value, how the auditor has to audit such estimated fair value. Okay, that we'll be discussing in this standard. Before going into the standard, first of all, let us see some of the examples related to accounting estimate and fair value accounting estimate. Starting with examples of accounting estimates. First one, allowance for doubtful debts, which we have already know. Next, warranty obligations. Okay, entity has sold some goods. Relating to those goods, let's say entity has given some warranty of around 1 year. Now in this 1 year, how many goods will be returned by the customers? Okay, for how many goods that the entity has sold, warranty will be claimed by the customer. Okay, this has to be estimated by the entity. Next, depreciation method or asset life, this you know. Next, inventory obsolescence. Okay, next, outcome of long term contracts. These are some of the examples related to estimation of related to accounting estimates. Now moving to examples related to fair value accounting estimates. Valuation of complex financial instruments. If you see, as per Ind AS 109, okay, Ind AS 109 says certain type of financial financial instruments has to be fair valued. Okay, next, share based payments, Ind AS 102. Okay, transactions relating to share based payments has to be fair valued as per Ind AS 102. And assets acquired under business combination, Ind AS 103. Okay, if you acquire the assets under business combination, you have to bring those assets into your balance sheet as per fair values of those assets. Next, property or equipment held for disposal. This is Ind AS 105. Okay, as per Ind AS 105, non-current assets held for disposal has to be fair valued. Next, transactions involving exchange of assets or liabilities. Okay, that is barter. In case of barter, you exchanged the assets. Now the value of the asset that you have acquired will be the fair value of the asset that you have given up. Okay, this you will be learning in Ind AS relating to inventory and relating to property, plant and equipment. In those standards you will encounter with this type of transactions. Okay, these are examples relating to accounting estimates and fair value accounting estimates. Now management is estimating the amount. See, the term itself used is estimate. Okay, estimate means you are not you will be not in a position to determine exact amount, you are just estimating it. Okay, there can be some error in this estimation. Okay, that we will be calling as estimation uncertainty. Okay, estimation uncertainty. Lack of precision in measurement of accounting estimate will be known as estimation uncertainty. Now this standard SA 540 has divided estimation uncertainty into two types. One is low estimation uncertainty, another one is high estimation uncertainty. Now under which situations there will be low estimation uncertainty and under which situations there will be high estimation uncertainty. Those situations are also prescribed by standard. Let us see. First of all, we will see low estimation uncertainty. Okay, if the following factors are present, then there will be low estimation uncertainty. First one, business activities are not complex. Okay, the business activities of the entity are not that complex. Okay, in case the business activities are not complex, then the entity can, there will be less estimation uncertainty. Next, estimates are made frequently. Okay, entity is quite frequently making the estimates. Okay, if it is frequently making the estimates, the learning curve of the entity in regard to estimate will increase. Okay, thereby there will be low estimation uncertainty. Next, data is readily available. Okay, if the data which is required for estimation of the amount is readily available with the entity, okay, even in that case also the estimation uncertainty will be very low. And method is prescribed by applicable financial reporting framework is very simple. Okay, it is easily understandable method. Okay, applicable financial reporting framework means either AS or Ind AS. Okay, now this AS or Ind AS has prescribed a certain method. Such method is very simple to apply. Okay, even in that case the uncertainty will be low, and model used by the entity is very well known. Okay, it is a widely used model. Okay, even in that case uncertainty will be very low. Coming to the situations in which estimation uncertainty will be very high. Estimation regarding outcome of litigation. Okay, whether the entity will win or lose in that particular case. Okay, in that particular litigation, entity is estimating the result of such litigation. Okay, this in this types of estimations the uncertainty regarding estimation will be very high. Okay, next, fair value of financial instruments not publicly traded. Okay, if you want to fair value certain financial instruments and those financial instruments are not publicly traded. Okay, let example unquoted equity shares. Okay, in this case you will be using this Black-Scholes model. Okay, you would have learned in SFM. Okay, now while you are fair valuing the financial instruments whose price is not publicly traded, okay, there will be high estimation uncertainty in case of those types of estimates. Next, specialized entity developed model is used. Okay, the entity is not following the widely accepted model, but it has developed its own model for estimations. Okay, for doing the accounting estimations. Even in that case there will be high estimation uncertainties because entity is using tailor-made method, thereby there will be high estimation uncertainty. Next, highly dependent on judgment. Okay, estimations that are made by the management are not based on facts. Okay, those are dependent on judgments. That means those are there will be subjective decisions that will be involved in case of estimations. Okay, if more subjective decisions are involved, then the estimation will be more uncertain. If less subjective decisions are involved, estimations will be less uncertain. Okay, next, moving to the factors that will influence the degree of estimation uncertainty. Okay, degree of estimation uncertainty. Okay, what are the factors that will influence the degree of estimation uncertainty? See, I'll explain you, you'll understand it. Dependence on judgment. Okay, if while making the estimation, if more dependence is made on judgment, then there will be more estimation uncertainty. If less dependence is made on judgment, then there will be less estimation uncertainty. Okay, sensitivity of estimate to change in assumptions. See, while estimating the amount, management would have used some of the assumptions. Now if these assumptions are changed, okay, management has used some assumptions. Based on assumptions, management has arrived at estimated amount. Okay, now if these assumptions are slightly changed, okay, these assumptions are slightly changed, then estimated amount will also change. Okay, that is the first situation, in which case the estimated amount is highly sensitive to the underlying assumptions. Okay, second case, how, whatever the changes you make to these assumptions, there will be no change in the estimated amount. This is the second situation in which estimated amount is not sensitive to the underlying assumptions. Okay, if the estimated amount is more sensitive to the underlying assumptions, then there will be high estimation uncertainty. If estimated amount is less sensitive to the underlying assumptions, then there will be less estimation uncertainty. Hope this is clear. Next, availability of recognized measurement techniques. Okay, if the techniques, if the measurement techniques, that is if the methods followed by the entity for the purpose of estimation are widely available in the market. Okay, almost all the entities use the same method. In that case, there will be less estimation uncertainty. Okay, in case if the entity uses tailor made, then there will be more estimation uncertainty. This point we have already discussed previously. Next, length of the forecast period. Okay, let's say entity is estimating for 1 week, then there will be less estimation uncertainty when compared to entity is estimating for 1 year. Okay, if the entity is estimating a particular amount for entire year, then there will be more estimation uncertainty when compared to the situation where entity is making the estimation for just a period of 1 week. Hope this is clear. Next, availability of reliable data from external sources. Okay, these are the factors that will influence the degree of estimation uncertainty. Hope this is clear. Next, now auditor has to audit accounting estimates that are made by the management. Now, before auditing or before performing audit procedures on any item, we all know that auditor will first of all determine risk of material misstatement of that particular area. Okay, we have seen it in SA 315. Okay, now in the same way, auditor will first of all determine risk of material misstatement of accounting estimates that are made by the management. In order to determine risk of material misstatements, what are the considerations that the auditor will obtain understanding of? Let us see. To determine risk of material misstatements for accounting estimates, obtain understanding of requirement of applicable financial reporting framework. Okay, what is the method that has been prescribed by the applicable financial reporting framework? Okay, auditor will obtain understanding of what has been prescribed in the applicable financial reporting framework. Okay, how management identified transactions, events and conditions that need estimation. See, what is the procedure that is followed by the management to determine or to identify the transactions that will require estimation? This will be understood by the auditor. Okay, next, after understanding requirements of applicable financial reporting framework, after understanding the procedure by which management has identified the transactions that require estimation, now the auditor will understand the method that has been used by the management. Okay, what is the method that has been used by the management to make these estimations? Next, underlying assumptions. Okay, what are the underlying assumptions that the management has taken to make these estimations, and whether there is any change in the methods of the prior period. Okay, whether the entity has used same method in the previous period also, or whether there is any different method that has been used by the management in the previous year. Okay, that will be determined by the auditor. Next, use of expert. Okay, auditor will also determine whether entity has used any expert, okay, to make the estimation. And relevant controls placed, okay, regarding the data, regarding the collection of data that has been used for making the estimates, whether controls are placed around preparation of those data, and whether controls are placed around making these estimations, and if controls are placed, whether those controls are operating effectively or not. Okay, this will be understood and determined by the auditor. Okay, based on all these, he will derive risk of material misstatement of that particular accounting estimate. Okay, once he identified risk of material misstatement, next step is to respond to such risk of material misstatement. How the auditor will respond to such risk of material misstatement, we'll see. This concept response to risk of material misstatement we have already seen in SA 330. Okay, but here we will be seeing it specifically to accounting estimates. Firstly, auditor will identify events occurring after balance sheet date, provide any audit evidence relating to accounting estimate made. See, let me explain this. Now on 31st March 2022, okay, on this date, entity has provided, let's say total debtors of the entity is 2 lakhs, okay, or not total debtors, let's say there is a particular debtor A Limited. Now A Limited is a debtor whose amount is 2 lakhs. Now on 31st March 2022, entity wants to provide a provision for doubtful debts regarding this A Limited, okay. It has estimated provision as 1 lakh, okay. Now regarding this, what the auditor will do is, let's say date of audit report is some 25th July 2022, okay. This is the date of audit report, okay, audit report date. Now auditor will determine whether during this period A Limited has entered into any settlement, okay. Let's say on 30th June 2022, A Limited have approached the entity and entered into a settlement stating that I will give you, I will repay 1 lakh rupees and you please write off balance 1 lakh, okay. Like this, A Limited has entered into a settlement, okay. Now auditor identifies that A Limited has entered into settlement after balance sheet date. Now this settlement that has been entered by A Limited provides audit evidence regarding the provision that is made by the entity as on 31st March 2022, okay. Now like this, auditor will first of all determine whether there are any events that has occurred after the balance sheet date that will provide the auditor with audit evidence relating to the estimations that are made by the management as on the date of balance sheet, okay. Hope you understood this example. If you want, you can just take a screenshot of this, okay. Next what the auditor will do is test how management made accounting estimate. This is substantive audit procedure, okay, substantive audit procedure, okay. Under here auditor will himself calculate the estimation amount based on the method and the assumptions that are used by the management, okay. Next he will test operating effectiveness of controls. This is test of controls, okay. Now how much of substantive procedures has to be performed and how much of test of controls has to be performed will be determined by the auditor based on the assessed risk of material misstatement, okay. This point we have already discussed in SA 330. Next, auditor shall also review judgments and decisions made by the management to determine whether there is any possible management bias. See, now the estimations are being made by the management only, okay. Since management is making the estimations, there is a chance that management can show certain biasness, okay. Thereby to determine that management has not shown any bias while making these estimations, auditor should review the judgments and decisions that were made by the management while making this accounting estimates. Hope this is clear. By this, SA 540 has been completed. In the next class we will be revising SA 550, okay. And notes, these notes you can find in the Telegram channel. Link to the Telegram channel will be in the description. And in case you wanted to purchase any classes, paper 4 law or paper 6D economic law, you can visit our website lecturepedia.in, okay. Take care, bye bye. Hi guys, this is CA Balakrishna from lecturepedia.in. In this video we will be revising SA 550 related part keys. before entering into the standard, let me ask you a question. Tell me whether related party transactions are prohibited or permitted. See, most of the students will think that related party transactions are prohibited. No, they are not prohibited. Related party transactions are permitted, but subject to certain conditions. Okay, in case a company wants to enter into related party transactions, then it needs to comply with requirements of section 188 of Companies Act 2013, and also under Ind AS 24 specifies certain accounting and disclosure requirements related to related party transactions. Okay, those requirements have to be complied. In the same way, in case of accounting standards, AS 18 deals with this related party transactions. Okay, thereby related party transactions are permitted subject to certain conditions and subject to compliance of disclosure and accounting requirements as specified by applicable financial reporting framework. Okay, hope this is clear. Now let us revise this standard. First of all, responsibility of the auditor. What is the responsibility of the auditor as per this SA 550? Basically, let's say now the financial reporting framework that the entity is following does not speaks about related party transactions. Okay, there is no requirements that are mentioned in case of in the applicable financial reporting framework that the entity is following. Okay, in that case, what will be the responsibility of the auditor? And coming to the other side, applicable financial reporting framework specifies certain requirements relating to related party transactions. In that case, what will be the objective of the auditor? Okay, that will be seeing. First of all, no requirement exists in financial reporting framework. Okay, financial reporting framework does not speaks about related party transactions. Even though financial reporting framework does not have any requirement relating to this related party transactions, auditor has to obtain understanding of entities related party relationships and transactions. Why? Because these related party transactions are prone to high risk of fraud. Okay, there is high chance of occurring fraud in case of this related party transactions. Thereby, even though the financial reporting framework does not specify any requirements regarding the related party transactions, auditor needs to obtain understanding of related party relationships that the entity is having and the transactions that the entity has entered with those relations. Hope this is clear. In order to achieve true and fair presentation in case of fair presentation framework, or in order to achieve the objective that financial statements are not misleading in case of compliance framework. I have told you the difference between this fair presentation framework and compliance framework while discussing SA 200. Okay, this is the objective of the auditor if financial reporting framework does not specify any requirements regarding related party transactions. Coming to financial reporting framework has requirements relating to related party transactions. Okay, example, let's say the entity is following Ind AS or entity is following accounting standards. In that case, Ind AS 24 has some requirements related to related party transactions. Now, in this case, what will be the objective of the auditor as per SA 550? In this case, auditor has to perform audit procedures. Okay, in order to identify, assess and respond to risk of material misstatement arising from entities' failure to appropriately account for or disclose related party relationships and transactions as required by the applicable financial reporting framework. Okay, in case applicable financial reporting framework has any requirements relating to related party transactions, then the auditor needs to perform audit procedures on the financial statements of the entity in order to verify whether the entity has followed all the requirements that are specified by the applicable financial reporting framework. Hope this is clear. These are the objectives of the auditor related to related party transactions. as per this SA 550. Now, how the auditor will identify risk of material misstatement in regarding to this related party transactions? See, risk assessment procedures. What are the risk assessment procedures that the auditor will perform? First of all, auditor needs to identify what are the related party relationships that the entity is having. After that, auditor will identify what are the transactions that have been entered with those related parties. Okay. In relation to this, auditor will obtain understanding of entities related parties relationships and transactions with those related parties. How the auditor will obtain understanding? First of all, he will discuss among his engagement team. Okay, why he will discuss among his engagement team? Because in the engagement team, there might be some of the members who have performed audit of this entity in the previous year also. Okay, in case there are any members who have performed audit of the entity in the previous year, then they might have encountered some of the related party transactions in the previous year. Okay, thereby by conducting discussion among the engagement team, auditor will come to know if at all any related party transactions have been encountered in the previous year. Okay, after that, inquire with management. See, management is the one which is having all the knowledge related to its related party relationships and the transactions that have been entered with the related parties. Thereby, auditor will obtain all the information that the management is having in relation to this related party transactions. Okay, by inquiring them. Okay, inquiring with management. Okay, auditor has obtained understanding of entities related party transactions. Now, while performing the audit, okay, while reviewing the documents and books of accounts, auditor needs to stay alert in order to identify any transaction which may indicate related party relationships. Okay, see, be alert for related party information while reviewing records and documents. Okay, while reviewing records and documents, in case he finds any significant transactions, okay, any significant transactions that are outside normal course of entity's business, okay, in that case what the auditor will have to do is he has to inquire management about nature of those transactions. Okay, he need to inquire with the management. While I am verifying these documents, I have found these significant transactions. Okay, these transactions are outside your normal course of business. Okay, generally you don't enter into these types of transactions, but you have entered into this particular type of transaction. Okay, what is the nature of this transaction? Okay, whether this transaction is entered with any related party. Okay, like this the auditor has to inquire with the management in relation to any significant transactions which are outside the normal course of entity's business. Hope this is clear. Okay, and whether related party could be involved in that transaction. After that, he needs to share related party information with the engagement team. Okay, the information that the auditor has obtained related to related party transaction has to be shared with the engagement team also. Hope this is clear. Now, what are the sources from which information related to related party transactions can be obtained by the auditor? There are certain sources. Let us see. Income tax returns filed by the entity, internal audit report of the entity, contracts that the management has entered, contracts outside the normal course of business, and renegotiated contracts, investment register and shareholder register. Okay, by going through all these of the documents, auditor can get any can get information related to related party transactions. Hope this is clear. Next, once the auditor has identified risk of material misstatement related to the related party transaction, how will he respond? Okay, the response, I have divided the response into three parts. See, first situation, second situation, third situation. Third situation, let us see the responses of the auditor. Firstly, now auditor, while performing the audit, okay, he has identified some of the undisclosed related party transactions or relationships which were not disclosed to the auditor by management. Okay, earlier while performing risk assessment procedure, auditor has discussed with the management and auditor has asked the management to disclose all the related party transactions that the management has entered. Okay, but now while performing the audit, auditor came across some of the transactions which were not disclosed earlier by the management during risk assessment procedure. Okay, now what will be the audit procedures that the auditor will perform? Okay, or what will be the response of the auditor? Let us see. First of all, he will communicate with other members of engagement team. Okay, communicate with other members of engagement team. Okay, he will communicate the transaction that the auditor has identified with the other engagement team also. After that, he will perform substantive procedure. Okay, he will detailedly verify that transaction, okay, with whom such a transaction has been performed. Okay, he will read the contract relating to such transaction. He will also read the terms and conditions relating to such a transaction. Okay, he will watch the amount for which such a transaction has been entered. Okay, he will perform substantive audit procedures on particular on those transactions, okay, which were identified by the auditor, which were not disclosed earlier to him. Okay, next, after that he will reconsider the risk that other undisclosed related party transactions or relations might exist. Okay, now auditor found one of the related party transaction that was not earlier disclosed. After finding this, auditor will reconsider his risk that there might be some other undisclosed relations or related party transactions that the entity might have entered. Okay, if the auditor found one transaction, means there might be some other transactions. Okay, there is a risk that some other transactions which were not earlier disclosed by the management might be present. Okay, so he has to reconsider such risk. Next, if non-disclosure appears intentional, evaluate implication on the audit. Okay, if auditor found that non-disclosure of this transaction by the management is intentional in nature, okay, in that case auditor will evaluate the implication of this transaction on his audit opinion. Hope this is clear. That is the first situation. Next situation, auditor identifies, identification of significant related party transactions outside normal course of business. Okay, if he identifies any transactions which are outside the normal course of business, in that case he will inspect underlying contract to evaluate business rationale. Okay, he will read the contract relating to such transaction. He will examine terms of the transaction. Okay, he will collect evidences with respect to approval and authorization of the transaction. Okay, who approved that transaction? Okay, evidence relating to approval of the transaction will be obtained by the auditor, and he will also collect the evidence for appropriate accounting and disclosures. Okay, he will examine whether such a transaction has been appropriately accounted and disclosed as per the requirements of applicable financial reporting framework. Hope this is clear. Next, auditor founds transactions which are conducted at arm's length price. Okay, basically all the related party transactions has to be entered at arm's length price only. Okay, now auditor found that all the transactions of the entity with related parties have been entered at arm's length price. Okay, in relation to this, what are the audit procedures auditor has to perform? He has to obtain written representation that all known related party relationships and transactions are disclosed to him. Okay, he need to request a written representation from the management asking that management has disclosed all the known related party transactions to the auditor. Okay, there are no undisclosed related party transactions or relationships. Okay, written representation regarding this. After that, documentation that the auditor will maintain regarding this related party transactions must include name of the related party and nature of related party relationships. Hope this is clear. This is a revision of essay 550. In the next video, we will be revising SA 560. Hope this is clear. And in case you want to purchase any classes, okay, regarding a CA final, you can visit our website lecturepedia.in. Okay, bye bye, take care. Hi guys, this is CA Balakrishna from lecturepedia.in. Now in this class, we will be revising SA 560 subsequent events, a very small standard and also a very easy standard. Now first of all, what is meant by subsequent events? All the events that occur after balance sheet date but before date of auditor's report, and facts that become known to the auditor after the date of auditor's report but before the approval of the financial statements by shareholders will be known as subsequent events. Okay, let us understand this with the help of a timeline. Say, now, this is 31st March balance sheet date. Okay, and auditor gave his opinion on, let's say, 30th of June. Okay, audit report date. Audit report. Next. Now, on 15th July, let's say, the financial statements along with the audit report have been circulated. Okay, circulated to shareholders and general public. Okay, and on 31st July, okay, financial statements are approved by shareholders in AGM. Okay, approved in AGM. This is the timeline. Now, here, all the transactions that occur or all the events that occur after balance sheet date and before date of auditor's report, okay, we will be calling them as subsequent events 1. Okay, next, events after audit report but before the audit report and financial statements are circulated to the public, we will be calling them as subsequent events 2. Next, after they are circulated but before approved by shareholders, these are subsequent events 3. Okay, now in this standard we will be discussing what will be the audit procedures that the auditor will perform in order to identify subsequent events 1, subsequent events 2, subsequent events 3. Okay, there will be different audit procedures for each of these 3. Okay, once we complete this, our standard gets completed. Okay, this is what we will be discussing in this standard. Now, these subsequent events can be bifurcated into 2 types. One is adjusting events, another one is non-adjusting events. Now, these adjusting events provide evidence of conditions existing as on balance sheet date. Okay, those subsequent events which provide evidence of conditions that are existing as on the balance sheet date will be known as adjusting events. Example, let's say as on balance sheet date, entity is having a debtor of A Limited for amount 2 lakhs. Okay, 2 lakhs as on balance sheet date. Now, it is known to the entity that this A limited will become bad debt, bad debt. Okay, thereby they want to provide provision as on balance sheet date. Okay, now after 31st March, okay, let's say after in let's say on 15th May, okay, on 15th May, A limited has filed for insolvency petition. Okay, now this filing of insolvency petition by A limited is a subsequent event which provide evidence of conditions that are existing as on the balance sheet date. Okay, now this event will be known as subsequent adjusting event. Hope this is clear. Non-adjusting events. These non-adjusting events do not provide any evidence of conditions existing as on balance sheet date. Okay, regarding these non-adjusting events, no conditions will be existent as on the date of balance sheet date. So this is clear. Let's say, for example, on balance sheet date, entity is having some inventory of around 5 lakh. Okay, as on 31st March, it is having inventory of 5 lakh. Now, let's say in after balance sheet date, okay, let's say in April or May month, a cyclone has come. Okay, in that cyclone, all this inventory is damaged. Okay, now this cyclone will be non-adjusting event. Okay, it will not affect the conditions that are existing as on the balance sheet date. Okay, as on the balance sheet date, inventory is actually present. Okay, thereby the cyclone that has occurred after balance sheet date is not a adjusting event. Okay, it is a non-adjusting event. So this is clear. This is a small bifurcation regarding subsequent events. Now we'll enter into this standard. First of all, what are subsequent events? Subsequent events are events occurring between date of financial statements and date of auditor's report, and facts that become known to the auditor after the date of auditor's report. Okay, here is a timeline which I have already discussed with you. Okay, subsequent event 1, subsequent event 2, subsequent event 3. Okay, now we will discuss the audit procedures regarding these 3 events. Firstly, audit procedures regarding the subsequent event 1. Okay, that means events that are occurring after the date of balance sheet date but before the date of auditor's report. Regarding this, what are the audit procedures that the auditor will perform? Okay, to identify these events, what are the audit procedures that the auditor will perform? Obtain sufficient appropriate audit evidence for the events that require adjustment. How? Understand the procedure established by the management. See, now to prepare financial statements, it is a responsibility of the management. Okay, preparation of financial statements is responsibility of the management. Thereby, responsibility to identify subsequent events is also of management only. Okay, now what is the procedure that the management is following in order to identify subsequent events? Auditor will obtain understanding of this procedure that has been followed by the management. Oh, this is clear. Okay, understand procedure established by the management. Next, he will inquire management and those charged with governance whether any additional subsequent events are there. Okay, he will inquire with the management and those charged with governance. After that, he will read minutes of meeting held after the date of balance sheet date. Okay, after the date of financial statements. Okay, now in the subsequent meeting that is held immediately after the date of financial statements, there might be some discussions that have been made by the management. Okay, by reading minutes of that meeting, auditor can identify any subsequent events that have arose after balance sheet date. Hope this is clear. Next, he will also read entity's latest subsequent interim financial statements. Okay, if the entity is a listed entity, okay, it will prepare quarterly financial statements. Okay, by reading those subsequent quarter financial statements, auditor can come across any subsequent events that have arisen. Next, inquire entity's legal counsel. Okay, these are the procedures through which auditor will identify subsequent events. Hope this is clear. Next, audit procedures regarding subsequent events. To see, I want to give you a small clarification regarding this subsequent event too. Now, see here we have discussed that subsequent event 1, subsequent event 2, subsequent event 3. First of all, you make it clear that subsequent events are those events that occur after balance sheet date, okay, but before date of auditor's report. Only these events will be known as subsequent events. Okay, that means only these events will be known as subsequent events. Then what about these two? The fact that subsequent event has occurred in this period is known to the auditor in this period. In that case, what will be the audit procedure that the auditor has to perform? Okay, the fact that subsequent the subsequent event has occurred in this period is known to the auditor in this period. In that case, what will be the audit procedure that the auditor has to perform? Hope you are able to understand this. Okay, that we have termed it as SC2, subsequent event 2 and subsequent event 3. Okay, that doesn't mean that this event has occurred in this period. Okay, this event has occurred in this period only, but the fact has been known to the auditor in this period. Okay, the fact has been known to the auditor in this period. Then how the auditor will react? What are the audit procedures that the auditor will perform? Okay, now we'll see audit procedures regarding subsequent event 2. Okay, that is subsequent events. The fact that subsequent events have occurred will be known to the auditor after the date of audit report, but before circulation of financial statements by management. Okay, auditor has signed the audit report. Okay, he has dated the audit report, and he might have either issued it or not issued to the management, but the sign has been completed. Okay, and before management has circulated financial statements to the public. Okay, in this period, auditor has known the fact that subsequent event has occurred in this period. Okay, now what the auditor will do? Let us. First of all, auditor will discuss with management and determine need to amend the financial statements. See, okay, auditor will first of all will discuss with the management. Management, I have found this subsequent event. Okay, and this subsequent event is an adjusting event. Okay, now how shall we deal with this? Whether you are ready to amend the financial statements? Okay, like this auditor will discuss with the management. If management agrees to amend the financial statements, then how the auditor will react? If management refuses to amend the financial statements, then how the auditor will react? Let us. Management agrees to amend the financial statements, then the job of the auditor becomes easy. What he will do? He will just to perform his audit procedures on the amended financial statements, and he will give new audit report, or he will amend the existing audit report. Give new report, amend existing report, or amend existing report, and extend audit procedures to the date of new report. Okay. If management refuses to amend the financial statements, in this case, two situations arise. Firstly, management is refusing to amend the financial statements, and if auditor he signed the audit report, he's dated the audit report, but he has not yet issued the audit report to the management. In that case, how the auditor will react? Second case, auditor has signed the report, dated the report, and issued to the management. Okay, he has issued the report to the management. In this situation, how he will react? Okay, what are the audit procedures that he will perform? Let us. First case, report not yet issued to the management. In that case, simply auditor will modify his opinion. Why he will modify his opinion? Because management is refusing to amend the financial statements. Okay, thereby he will modify the opinion. Okay. If report is issued to the management, okay, auditor signed the report, dated the report, issued the report to the management. In that case, auditor will insist the management not to circulate this audit report to the public. Okay, notify not to issue to third party. If management refuses to follow the direction given by the auditor. Okay, by refusing the auditor's direction, management circulates the audit report to the public. In that case, what the auditor will do? Auditor will take necessary steps to prevent reliance on his report. Okay, he can give advertisement in the newspaper asking general public and the shareholders not to rely on the audit report that has been circulated by the management. If management refuses, take action to prevent reliance on the audit report. Hope this is clear. These are the audit procedures regarding the subsequent event 2. Next, audit procedures regarding subsequent event 3. That is the fact that subsequent events have occurred is known to the auditor after financial statements are issued to the public and shareholders, but before financial statements are approved by the shareholders in the general meeting. Okay. Now what are the audit procedures that the auditor will perform? First of all, auditor will discuss the matter. Okay, will discuss the issue with management. Okay, I have found this subsequent event. It is impacting the financial statements. It is a adjusting event. Are you ready to amend the financial statements? You will ask the management. If the management is ready to amend the financial statements, then what are the audit procedures that the auditor will perform? If the management is not ready to amend the financial statements, then how the auditor will deal with it? If management is ready to amend the financial statements, then auditor will simply perform audit procedures on the amended financial statements, and he will give new audit report or he will amend the existing audit report. Okay, that is a simple thing that the auditor will do if management has approved, agreed to amend the financial statements. See, first of all, he will discuss with management and determine the need to amend the financial statements. If management amends the financial statements, auditor shall carry out procedures on amended financial statements, review steps taken by management to ensure that the recipient of financial statements is informed of the situation. See, here, the issue is that management has already circulated the financial statements and the old report that is given by the auditor to the general public and the shareholders. Okay, now the management is amending the financial statements. In this case, management has to give sufficient information to all the shareholders and the public, stating not to rely on the earlier financial statements that were sent to them. Okay, auditor will see whether certain whether such a type of information has been provided by the management to general public. Okay, what is the procedure or what are the precautions that have been taken by the management in order to prevent reliance of general public and shareholders on the earlier audit report that has been issued. Hope this is clear. Next, provide new audit report or amend the audit report and include emphasis of matter or other matter paragraphs. Okay. In case if management refuses to amend the financial statements, in that case, auditor will notify the management or those charged with governance that auditor seeks to prevent further reliance on the auditor's report. Okay, auditor has given the audit report, which has been circulated to the public also. Now auditor finds certain subsequent events. Okay, and he wants the financial statements to be amended, but the management is refusing to amend the financial statements. Now auditor will ask the management not to rely on the audit report that I have issued to you. Okay, and also pass this information to all the shareholders. In case management refuses to pass this information, then what the auditor will do is, if management does not take necessary steps, then auditor himself will take necessary steps to prevent reliance on his report. Okay, take appropriate action to prevent reliance on auditor's report. Hope this is clear. By this, revision of SA 560 subsequent events has been completed. Okay, you can find this notes in our Telegram channel. Link for the Telegram channel will be given in the description. And in case you wanted to purchase classes, you can visit our website lecturepedia.in. Okay, bye bye. Take care. Hi guys, this is CA Balakrishna from lecturepedia.in. In this video, we will be revising SA 570 going concern, and these notes you can find in our Telegram channel, and the link for the Telegram channel you can find in the description below. Okay, now starting with SA 570, going concern. Basically going concern is one of fundamental assumptions. Okay, we have three fundamental assumptions. First one is consistency, second one is accrual, third one is going concern. Now this standard SA 570 will be dealing with auditor's responsibility relating to going concern assumption of the entity. Okay, basically going concern means the assumption that entity will continue its business in foreseeable future. Okay, that would be going concern assumption, continuing business for foreseeable future. Now relating to this going concern, what is the responsibility of management and what is the responsibility of the auditor? First of all, what is the responsibility of management? Management is responsible to assess entity's ability to continue as a going concern. Okay, management has to assess whether entity will be able to continue as a going concern for the foreseeable future. Okay, this assessment has to be made by the management. Now what the auditor will do? Auditor has to obtain sufficient and appropriate audit evidence regarding the assessment of going concern that is made by the management. Okay, whether the assessment that the management has made relating to going concern of the entity is correct or not. Okay, relating to that aspect, sufficient and appropriate audit evidence has to be obtained by the auditor. That is the responsibility of the auditor. See, auditor is responsible to obtain sufficient appropriate audit evidence regarding appropriateness of entity's ability to continue as a going concern. Okay, management will perform assessment of going concern, whether such assessment is correct or not. Okay, regarding that, sufficient appropriate audit evidence will be obtained by the auditor. Hope this is clear. Okay, we are saying that management has to make assessment of entity's ability to continue as a going concern. Now how the management will perform its assessment? Basically it will try to identify whether there are any events or conditions that may cast impact, okay, on entity's ability to continue as a going concern. Okay, what are those points? Basically we will be dividing these conditions or events into three types. First one is financial conditions, second one is operational conditions, third one is other conditions or events. Okay, now under financial conditions, following are present. Financial conditions: substantial losses. If the entity is incurring substantial losses, okay, in that case this is one of the event which may cast doubt on entity's ability to continue as a going concern. Okay, if this event is present, it is not confirmed that entity will not be able to operate as a on a going concern basis. It will just cast a doubt on the entity's ability to continue as a going concern. Hope this is clear. Next, discontinuation of dividend. Okay, management has stopped giving dividend. Adverse financial ratios. Okay, entity is having negative ratios. Inability to pay to creditors. See, if the entity is frequently defaulting in payment to creditors, even this is one of the condition that may cast doubt on entity's ability to continue as a going concern. Okay, next, net liability position. Entity is having negative net worth. Okay, withdrawal of financial support. Okay, the bank from which entity has raised loans has stopped giving loans. Okay, this is one of the condition that may have impact on entity's ability to continue as a going concern. Or non-renewal of borrowings. Okay, example, ODs. Okay, overdrafts that the company has raised are not renewable, and asset value has deteriorated. Okay, those are financial conditions that may cast doubt on entity's ability to continue as a going concern. Moving to operating conditions, loss of key managerial personnel. Okay, the key managerial personnel of the entity have lost. Okay, they might have died or they might have resigned. Okay, this may cast doubt on entity's ability to continue as a going concern. Labor difficulties, management intention to liquidate the entity. Okay, management itself wants to liquidate the entity. Loss of major market or key customer. Okay, major market has been lost by the entity, or emergence of successful competitors. Okay, other for events or conditions, non-compliance of statutory requirements, pending legal proceeding against the entity, changes in laws and regulations. These are the three types of events or conditions that may cast significant doubt on entity's ability to continue as a going concern. Now, what is the audit procedure that the auditor will perform? Just a second. See, now what is the audit procedure that the auditor will perform? Basically, auditor will inquire whether management has made assessment of going concern assumption or not. If management has made assessment of going concern assumption, then auditor will discuss with the management whether management has identified any events or conditions that may cast significant doubt on entity's ability to continue as a going concern. Okay, if the management has performed assessment of going concern, whether management has found any of these conditions or events during its assessment. Okay, in case management has not performed such assessment, then auditor will discuss with the management basis for intended use of going concern assumption. Okay, management has not performed assessment of going concern assumption, but management is using going concern assumption for its financial statements. Now, what is the basis for using of this going concern assumptions by management? This will be inquired by the auditor with the management. Okay, you have not performed the assessment of going concern, but you are using going concern assumptions. What is your basis for using this going concern assumptions? This will be inquired by the auditor with the management, and auditor will also ask the management whether there is any possibility of existing of conditions that may cast significant doubt on entity's ability to continue as a going concern. Okay, and whether any events or conditions exist that may cast significant doubt on ability to continue as a going concern. This will be inquired by the auditor. Coming to the reporting part, basically this reporting part I have divided into three parts. Firstly, going concern assumption is appropriate. Okay, management is using going concern assumption, it is appropriate, but there is significant or material uncertainty relating to this going concern assumptions. Okay, as of now, the going concern assumption that is used by the management is appropriate only, but there is certain material uncertainty relating to this assumption. Let's say there is a suit pending against the entity. Okay, now let's say total net worth of the entity is 100 crores. Now a trademark suit is pending against the entity. Now if the entity loses this trademark suit, entity has to pay some 200 crores as penalty. Okay, now if by inquiring with the lawyers, auditor came to know that there is 70% probability that entity will win the case, and there is 30% chance that entity will lose the case. Now entity started using going concern assumptions. As of now, using going concern assumption is okay, but there is a material uncertainty relating to going concern. If the entity loses the case, then it has to pay 200 crores as a penalty, but net worth of the entity is just 100 crores. In this case, the going concern assumption of the entity will be affected. This will be there will be material uncertainty relating to going concern assumption. In that case, auditor will see whether entity has disclosed in the financial statements the event that is causing material uncertainty relating to going concern assumption. Okay, see, auditor will check whether financial statements adequately disclose the event due to which there is a material uncertainty. Okay, whether the entity has properly disclosed information relating to this case, this suit. Okay, if entity has disclosed, yes, entity has given proper information in the financial statements, in that case auditor will give unmodified opinion along with emphasis of matter paragraph. In case information is not given in the financial statements, then the auditor will give either qualified or adverse opinion. Hope this is clear. Now, why qualified or adverse opinion? Basically, auditor here is having sufficient appropriate audit evidence relating to material uncertainty. Thereby, in this, since he is having audit evidence, disclaimer will not be given since there is sufficient appropriate audit evidence. Okay, the opinion can be either adverse or qualified. Now, if this uncertainty is material but not pervasive, then qualified opinion will be given. If it is both material and pervasive, adverse opinion will be given. Hope this is clear. Next, second situation, management is unwilling to make its assessment. See, management is using going concern assumption, but management has not made assessment of going concern assumption of the entity. Okay, it is unwilling to make this assumption. If it is unwilling to make this assessment, then auditor cannot obtain sufficient appropriate audit evidence. Okay, if management itself has not performed the assessment, how can the auditor verify what the management has performed? Okay, in this case auditor cannot obtain sufficient appropriate audit evidence of the assessment made by the management, because management has not at all made any assessment. In that case auditor will give qualified or disclaimer of opinion. Hope this is clear. Use of going concern assumption is inappropriate. Okay, management is using going concern assumption, but auditor based on his audit procedure comes to a conclusion that management should not use going concern assumption. Okay, the going concern assumption that is being used by the management is inappropriate. In that case auditor will give adverse opinion. Okay, express adverse opinion. Hope this is clear. By this, revision of essay 570 has been completed. In the next class we will be discussing essay 580, written representation, which will be last standard for this essay 500 series. Okay, and in case if you wanted to purchase classes, paper 4 classes law for CA final and paper 6D economic law classes at CA final level, you can visit our website lecturepedia.in and you can place your order. Okay, bye bye. Take care. Hi guys, this is CA Balakrishna from lecturepedia.in. In this class, we will be revising last standard of 500 series, that is essay 580 written representations, a very small standard. First of all, what is meant by written representation? Basically, written representation is one of the audit evidence that the auditor will obtain. Okay, now this written representation will be given by management to the auditor. Hope this is clear. And this will be in the form of a written statement by the management. Okay, addressed directly to the auditor. That would be a simple definition of written representation. Hope this is clear. See, essay 580 written representation, a written statement by management to the auditor. Now, regarding which aspects auditor can request written representation from the management. Okay, following are the aspects in respect of which written representation can be requested by the auditor. Firstly, auditor can ask the management to give written representation stating that management has fulfilled its responsibility in preparation and presentation of financial statements as per the financial reporting framework. Okay, auditor can ask the management to give a representation stating that management has prepared the financial statements as per the applicable financial reporting framework. Hope this is clear. Next aspect, complete relevant information has been provided. Auditor can ask the management to give a written representation stating that all the information that is available with the management has been provided to the auditor. Okay, there is no information that has been hidden from the auditor which was known to the management. Okay, regarding this, auditor can ask a written representation from the management. Hope this is clear. Next, in case any other standards on auditing requires taking of a written representation, okay, as per those standards, auditor can request a written representation from the management in respect of those standards. Okay, see, requirement of other standards on auditing which request written representation. Hope this is clear. Now, apart from this, in respect of any other matter, if auditor feels that he has to obtain a written representation in respect of that matter, he can obtain a written representation. See, such other matters required by the auditor. Now, another important point, basically this written representation can be taken by the auditor as a audit evidence, but this written representation cannot act as sufficient and appropriate audit evidence. Okay, auditor cannot solely rely on this written representation only. Okay, written representation will always act as a corroborative audit evidence. Okay, it cannot be the only audit evidence on which the auditor can rely. Okay, apart from taking written representation, he should also obtain other audit evidence. Hope this is clear. Always keep in mind that written representation will act as corroborative audit evidence only. Hope this is clear. Along with a written representation, auditor should also obtain other audit evidence in respect of such matter in respect of which a written representation has been taken. Hope this is clear. He cannot rely only on written representation. See, the same has been given here. Note, written representation can only act as audit evidence but not sufficient appropriate audit evidence. They can only be taken as a corroborative audit evidence. Hope this is clear. Next, period of the written representation. Okay, what should be the period of the written representation? Oh, that is the date of written representation. Basically, the date of written representation should be on or before the date of audit report. Okay, after completion of the audit, auditor cannot obtain audit evidences. Okay, thereby the date of this written representation must be on or before the date of audit report. Okay, date on or before the date of audit report. Next, what will be the period that will be covered in this written representation? Basically, this written representation will be in respect of all the financial statements and all the periods covered by the audit report. Hope this is clear. Change in management. In case there is any change in the management during the year, then the changed management is also responsible for giving a written representation for the entire period. Hope this is clear. See, change in management. New management shall give written representation for the complete period covered by the audit. Hope this is clear. Next, reliability of written representation. I have divided this reliability of written representation into 3 parts. First one, concern about competence and integrity of the management. See, auditor is having a doubt on the integrity of the management. In that case, what the auditor will do? In that case, he will determine their effect in reliability of written representation and other audit evidence in general. Okay, auditor is taking written representations from the management. He is also taking audit evidences from the management. Now, auditor is having a doubt on the integrity of the management. In this case, auditor will determine how this will impact the written representations that were provided by the management to the auditor and other audit evidences that auditor has obtained from the management. Hope this is clear. What would be the impact of this doubt on these written representation and the audit evidences that the auditor has obtained? That has to be ascertained by the auditor. Next, if written representation is inconsistent with other audit evidence, okay, auditor has obtained some external audit evidence, okay, or some other audit evidence, and he also obtained written representations from the management. Now when he compared both these audit evidences, the written representation and other audit evidence that the auditor has obtained are not matching, okay, there is some inconsistency between other audit evidence and the written representation obtained from the management. In that case, what the auditor will do, he will perform other additional audit procedures, okay. By performing additional audit procedures, if the auditor is able to reconcile the difference, then that is okay. If auditor is unable to reconcile the difference, okay, if the inconsistency still exists, remains unresolved, in that case, consider the integrity of the management, okay. You consider integrity of management, whether management is providing me false written representations, okay, whether I can believe in the written representations that the management has provided, okay. Like this, auditor will assess the integrity of the management. After assessing the integrity of the management, based on his assessment, auditor will determine effect on reliability of written representations and other audit evidence, okay. After assessing the integrity of the management, auditor will determine whether to rely on the written representations or to rely on the other evidences. Hope this is clear. Next, concludes written representation is not reliable, okay. Auditor in the third situation concludes that the written representations that the management is providing are not at all reliable, okay. He obtained audit evidence that the written representations that the management is providing are not reliable. He cannot rely on those written representations. In that case, auditor will determine possible effect on audit opinion, okay. That would be the situation. Next, final one. Auditor has requested the management to give written representations, but the management is refusing to give written representation. In that case, what the auditor will do? Auditor will first of all discuss with the management. Management, please give the written representations. Why are you refusing to give the written representations? Like this, auditor will discuss with the management, okay. He will discuss with the management. After discussing also, if management refuses to give the written representation, then he will assess the integrity of the management, okay. Whether whether auditor can place reliance on the management, or whether management is involved in any frauds, okay. Like this, he will assess the integrity and honesty of the management, okay. Re-evaluate integrity and honesty of the management. Based on evaluation, he will take appropriate action, including modification of opinion. Hope this is clear. By this, revision of essay 580 has been completed. Hope this is clear. And if you want to purchase paper 4 law classes or paper 6D economic law classes, you can visit our website lecturepedia.in and you can purchase from our website, okay. In the next video, we will be starting with 600 series, okay. Take care, bye bye. Hi guys, this is CA Balakrishna from lecturepedia.in. In this video, we will be revising essay 600. By previous video, we have completed revision of entire 500 series, okay. As of now, we have completed 200 series, 300 series, 400 series and 500 series. Now we will be starting with 600 series, okay. Essay 600, using the work of another auditor. Who is meant by this another auditor? In order to understand who is another auditor, first of all, you need to understand who is principal auditor. Let's say there is a particular company A Limited. Now this A Limited is having, let's say, a branch, okay, branch 1, branch 2, Now A Limited has appointed Mr. Z as auditor. Okay, now A Limited is so huge that Mr. Z himself cannot audit these both branches. Okay, thereby what they have done is, for branch 1 they have appointed a separate auditor. Let's say Mr. X has been appointed as auditor for branch 1, Mr. Y has been appointed as auditor for branch 2. Now in this case, Mr. Z will be known as principal auditor and Mr. X and Mr. Y will be known as another auditor or other auditor. Okay, now here audit report will be given by, okay, the main audit report on A Limited will be given by principal auditor only. Okay, principal auditor gives the audit report. Now in this audit report he will also consider the financials of branch 1 and branch 2. Okay, now the work that has been done by these two branch auditors will be considered by principal auditor in his report. Now in this case, while using the work of another auditor, what are the audit procedures that this principal auditor has to perform? Okay, basically what would be the responsibilities of this principal auditor when he decides to use the work of other auditor? This will be dealt by this standard SA 600. Hope this is clear. In this 600 series we have SA 600 which deals with other auditor, work done by other auditor. We have SA 610 which deals with work done by internal auditor. Okay, and we have SA 620 which deals with use of auditors expert work, auditors expert. Okay, basically this entire 600 series will be dealing with the situation when the auditor uses work of some third party. Hope this is clear. Now entering into SA 600, as we have discussed, principal auditor, auditor responsible for reporting on financial statements as whole when one or more components audited by other auditor. Okay, now what will be included in this term component? Component means division or branch or subsidiary or joint venture or associate. Okay, all these will be covered under component. Auditors who are separately appointed for these components will be known as another auditor. Hope this is clear. Now when principal auditor decides to use the work of other auditor, what are the audit procedures that the principal auditor will perform in respect of that work performed by other auditor? Let us see. Principal auditor's procedures with respect to other auditors work. First of all, principal auditor will determine whether there is any necessity to visit that branch or to visit that component. Okay, visit component and examine books of account if necessary. Hope this is clear. Generally principal auditor can rely on the work done by other auditor. If necessary, if principal auditor feels necessary, then he can visit such component and can examine books of accounts of such a component. Hope this is clear. Next, consider professional competence of other auditor if other auditor is not a member of ICAI. Okay, if the other auditor who is appointed as a auditor of component is a person other than chartered accountant. Okay, in that case the principal auditor will consider the professional competence of such other auditor. Okay, whether such other auditor is capable of performing audit of such component, this will be decided by the principal auditor. If the other auditor is not a chartered accountant, okay, if other auditor is not a member of our institute. Hope this is clear. Next, perform procedures to obtain sufficient appropriate audit evidence that the work of other auditor is adequate for the principal auditor's processes or purposes. Okay, now other auditor has performed his procedures and he submitted his findings to the principal auditor. Now principal auditor will obtain sufficient appropriate audit evidence to decide whether the work that has been performed by such other auditor is relevant for the purpose of this audit which is being conducted by principal auditor. Okay, whether he can use that work of other auditor or not. Okay, whether the work that has been done by the other auditor is relevant for this purpose or not, that will be determined by the principal auditor. Next, review written summary of other auditors procedures. Okay, once the principal auditor comes to a conclusion that yes, the work that has been performed by the other auditor is relevant for the purpose, then he will review the written summary of audit procedures and findings that the other auditor has made. Hope this is clear. Next, those are the audit procedures that the principal auditor will perform in respect of the work performed by other auditor. Now, before starting the audit, principal auditor can give some suggestions to the other auditor. Okay, some communications can be sent by the principal auditor to other auditor. What could be those communications? Let us see. Principal auditor's communication to other auditor: areas requiring special consideration. Okay, considering the risk of material misstatement of the entity, principal auditor can give guidance to the other auditor of the areas in which there is high risk of material misstatement, and thereby the other auditor has to carefully check those areas. Okay, he will give areas requiring special consideration. Okay, procedures for identifying intercomponent transactions that require disclosure. Okay, he will also give guidance to the other auditor in relation to the procedures that the other auditor has to perform in order to identify any intercomponent transactions that have been taken place between components of the entity. Okay, timetable for completion of the audit. Okay, what is the time limit within which the other auditor has to complete the audit? Next, now other auditor has to coordinate with the principal auditor. How the other auditor has to coordinate with the principal auditor? First of all, other auditor has to confine to the timetable. Okay, he should try to complete his work within the time that is allowed, that is adhering to the timetable. Next, bringing to attention of principal auditor any significant finding. If the other auditor has found any significant finding during his audit, he must communicate such findings to the principal auditor. Hope this is clear. Compliance with relevant statutory requirements and response to detailed questionnaire. Okay, next, division of responsibility. Now the principal auditor in his audit report must clearly specify the division of responsibility between principal auditor and other auditor. Okay, he must specify in the audit report clearly by quantifying the financial information that has been audited by other auditor. Okay, see, principal auditor shall clearly specify division of responsibility in his audit report by indicating extent of, here you can write, financial information that has been audited by other auditor. Hope this is clear. and principal auditor shall not be responsible for work entrusted to other auditor. Hope this is clear. This division of responsibility must be clearly specified in the principal auditor's audit report. Next, write on working papers of other auditor. Obviously, while performing audit procedures, even other auditor will also gather his own working papers. Now, those working papers are property of such other auditor. The principal auditor is not having any right to access the working papers of other auditor. Hope this is clear. However, principal auditor can ask for any clarifications from the other auditor, or principal auditor can visit the component and can again perform audit procedures if necessary. But the principal auditor cannot ask for access to the working papers of other auditor. Hope this is clear. See, principal auditor does not have access to working papers of other auditor, but has right to seek clarifications and visit branch. Hope this is clear. By this, SS 600 has been completed. In the next class, we will be revising SA 610. And if you want to purchase classes, you can visit our website lecturepedia.in and you can purchase the classes from our website. Okay, bye bye, take care. Hi guys, this is CA Balakrishna from lecturepedia.in. In this class, we will be revising SA 610 using the work of internal auditor. Now, when external auditor decides to use the work of internal auditor, then what are the procedures that the external auditor will perform? We'll see that. First of all, what is the scope of this standard? Scope of this essay: external auditor using the work of internal auditor to obtain sufficient appropriate audit evidence. In that case, what will be the precautions or what will be the procedures that the external auditor has to perform? And this SA 610 will also deal with external auditors use of internal auditor to provide direct assistance. See, to provide direct assistance under direction, supervision and review of external auditor. What is this direct assistance? We'll also discuss that. Okay. Now, first of all, why external auditor will use the work of internal auditor? If you see the work performed by external auditor and work performed by internal auditor, there will be some common areas. Okay, or most of the areas that are covered by the internal auditor will also have to be covered by the external auditor. Now, here there will be duplication of work. In order to avoid this duplication of work, what the external auditor will do is, he will use the work that has already been performed by the internal auditor. Thereby, external auditor can focus his concentration on untouched areas. Okay, hope this is clear. This is the reason why external auditor will use the work of internal auditor. Now, before deciding whether to use the work of internal auditor or not, external auditor will consider certain factors. Okay, based on these factors, he will come to a conclusion whether to use the work of internal auditor or not. What are those factors? Let us see. Factors to be considered in determining whether to use the work of internal auditor. Firstly, restrictions on internal audit function by management. First of all, the external auditor will determine whether management has put any restrictions on the work of the internal auditor. If management has put restrictions on internal auditor, then the internal auditor would not have verified those areas. In that case, I being external auditor, I will verify those areas. Okay, management can put restriction on internal auditor, but management cannot put restriction on me because I am external auditor. Okay, thereby external auditor will first of all determine whether management has put any restrictions on the internal audit function of the entity. And status of internal audit function in the entity. Okay, whether these internal auditors are employees of the entity or they are some external consultancy firm which have been appointed by the entity on a consultancy basis, that will be considered by the external auditor. And to whom internal auditor reports, whether the internal auditor reports directly to the top management or there is any middle officer to whom the internal auditor will report. If the internal auditor directly reports to the management, then the external auditor will be able to rely more on the work of the internal auditor, because management is serious about internal audit function. That is the reason why internal auditors were given permission to directly report to the management. Thereby by this the external auditor will be able to confirm that management is more serious about internal audit function and he will rely on the internal audit function. Hope this is clear. Next, whether member of professional body, external auditor will also consider whether this internal auditor is a member of any professional body. Okay, whether he is member of our institute ICAI or he is member of our cost accountants institute or any other institute. Okay, this will also be considered by the external auditor. Next, technical training and proficiency, external auditor will also consider the professional competency and capability of the internal auditor to perform the work, and he will also determine compliance with standards on internal auditing. Okay, whether internal auditor is mandated to comply with standards on internal auditing. Okay, whether internal auditor has actually complied with those standards on internal auditing or not, even this will be considered by our external auditor. Next, policies for hiring and training of internal auditors. Okay, what is the policy that is being followed by the entity for the purpose of hiring and training the internal auditors, and whether activities of internal audit function are properly planned, supervised and documented. All these factors will be determined by the external auditor before deciding whether to use the work of internal auditor or not. Hope this is clear. Next, responsibility of external auditor. See, the fact that external auditor is using the work of internal auditor will not reduce the responsibility of the external auditor on the opinion that he has expressed. Okay, external auditor is solely responsible for the opinion that he has expressed. Hope this is clear. See, external auditor is solely responsible for the audit opinion expressed even if work of internal auditor is used. Hope this is clear. Next, coming to direct assistance. What is this direct assistance? Basically, till now we have discussed that internal auditor has already performed certain work. Now the work that has already been performed by internal auditor is being used by the external auditor. Example, watching. Internal auditor has already performed watching. Now external auditor again need not perform watching. Okay, external auditor is using the work of internal auditor. That is the first case. Now second case, direct assistance. Here external auditor will use internal auditor to perform certain procedures on behalf of external auditor. Okay, here the work that has been performed by the internal auditor is not being used. External auditor is asking the internal auditor to perform certain procedures on behalf of external auditor. Hope this is clear. This is the difference between direct assistance and use of the work performed by internal auditor. Hope this is clear. Now, why will external auditor will use internal auditor as a direct assistance? One reason could be the time period that is available for performing the audit might be smaller. Okay, in that case the resources that are available with the external auditor might not be sufficient to complete the audit within that time. In that case, he can use the internal auditors as direct assistants. That would be that could be one reason. Okay, now what is meant by direct assistance? Use of internal auditors to perform audit procedures under the direct supervision and review of external auditor. Okay, now prior to deciding, okay, prior to using internal auditor as direct assistance, there are two procedures that has to be performed by the external auditor. What are they? First of all, external auditor has to obtain a written agreement from the authorized representative of the management, okay, stating that management will not interfere in the work that is being performed by the internal auditor on behalf of external auditor. Okay, management should not give any directions or management should not intervene in the work that is being performed by internal auditor on behalf of external auditor. That is the first written agreement that the external auditor has to obtain from the management. Okay, next, second written agreement. External auditor has to obtain a written agreement from internal auditor stating that internal auditor will maintain confidentiality. Okay, he will not reveal secrets of external auditor to the management. Okay, internal auditor must maintain confidentiality. Regarding this, external auditor has to obtain a written agreement from the internal auditor. Okay, only then, only after obtaining these two agreements, external auditor can use internal auditor as a direct assistance. Hope this is clear. Let us see. Prior to using direct assistance, external auditor shall obtain written agreement from authorized representative of entity that internal auditors will be allowed to follow external auditors instructions and entity will not interfere in the work that is being performed by internal auditor. Okay, next, written agreement from internal auditors that they will keep confidential of specific matters as instructed. Hope this is clear. Next, there are certain areas in respect of which external auditor cannot obtain direct assistance. What are those areas? Let us see. Areas in which external auditor cannot use direct assistance. First one, areas which involve making significant judgment. Okay, the areas in which significant judgment has to be made. Okay, those areas must be, in those areas audit procedures must be performed only by the external auditor, but external auditor cannot use internal auditor to perform audit procedures in those areas where significant judgment has to be made. Okay, examples of such areas: assessing risk of material misstatement, evaluating sufficiency of test performed, evaluating appropriateness of going concern assumption, evaluating adequacy of disclosure in financial statements, evaluating significant accounting estimates. Okay, these are some of the areas which will involve exercise of significant judgment by the auditor. Thereby, in these areas, external auditor cannot use direct assistance of internal auditor. Hope this is clear. What happened to this pen? Yeah, that is the first area in which direct assistance cannot be used. Next, related to higher risk of material misstatement. If there is any area which has been identified as high risk of material misstatement by the external auditor, then in respect of that area, he cannot use direct assistance. Hope this is clear. Next, relate to work with which internal auditor has been involved. Let's say, for example, for the entity in designing and implementing internal controls, internal auditor has helped the entity. Okay, now this work has been performed by internal auditor. Now, in order to verify the internal controls, this external auditor cannot use direct assistance of internal auditor, because with that work internal auditor is directly connected. Hope this is clear. Next, relating to decision external auditor makes in accordance with this standard on auditing regarding internal auditor function and use of its work of direct assistance. What is this point? See, basically as per SA 620, external auditor will decide whether to use the work of internal auditor, okay, or whether to take direct assistance from the internal auditor or not. Okay, this decision will be made by the external auditor. Okay, based on certain considerations, external auditor will make this decision. Now this decision of whether to use the work of internal auditor or not has to be made by the external auditor only. Okay, he cannot ask the internal auditor himself to take a decision whether to use the work of internal auditor or not. Hope this is clear. Okay, this is SA 610. In the next video we will be revising SA 620, and if you want to purchase classes, you can visit our website lecturepedia.in and you can purchase the classes. Okay, bye bye, take care. Hi guys, this is CA Balakrishna from lecturepedia.in. Now in this class we will be revising SA 620, last standard of 600 series, using the work of auditor's expert. Now first of all, who is this auditor's expert? Basically, auditor's expert means a person or an organization who is expert in the fields other than audit and accounts, because in the areas of audit and accounting, auditor himself is expert. Thereby in those areas auditor need not need another expert. Okay, thereby auditor's expert means a person who is expert in areas other than audit and accounts. Hope this is clear. Now first of all we will see who is audit expert. An individual or organization having expertise in field other than accounting and auditing, whose work is used by the auditor. Hope this is clear. Now before auditor, in which areas auditor can use the work of auditor's expert? There are certain areas in which auditor can use work of auditor's expert. Let us see what are those areas. Okay, these are examples of areas in which auditor can use auditor's expert work. This is a very important question. Let us see. Matters where auditor can use experts work: actuarial calculations, estimation of oil and gas reserves, valuation of environmental liabilities, interpretation of various contracts, analysis of complex or unusual tax compliance issues, valuation of complex financial instruments, land and building, plant and machinery, and etc. Okay, you can also find this question in the question bank, which is very important. You can just remember these areas in which auditor will use auditor's expert work. Now before auditor decides whether to use auditor's expert or not, auditor will consider certain factors. Okay, based on these factors, auditor will come to a conclusion whether to use auditor's expert work or not. What are those factors? Let us see. Considerations when deciding whether to use work of auditor's expert. First of all, risk of material misstatement in that matter. Okay, the area in which auditor wants to use the work of auditor's expert, whether in such area there is a high risk of material misstatement. Okay, that will be considered by the auditor before deciding whether to use the work of auditor's expert or not. Hope this is clear. Next, nature of procedures to respond to the risk. Okay, what are the type of procedures that have to be performed in order to respond to the risk? See, if a risk of material misstatement in a particular area is determined as high, okay, and in that area auditor is not having expertise. Okay, now since the risk of material misstatement is very high and in that area auditor is not having expertise, it is mandatory that auditor has to use the work of an auditor's expert. Hope this is clear. Since the risk of material misstatement in that area is very high, and what are the types of procedures that have to be performed in relation to that assessed risk of material misstatements? If the procedures that have to be performed are complex in nature, okay, in that case auditor will use auditor's expert, because auditor is not having expertise in that area, and the procedures that have to be performed in order to obtain audit evidence are very complex in nature, okay, and auditor is not having any idea relating to that procedures, then he will employ auditor's expert. Hope this is clear. Next, whether management has used management experts work, okay, auditor will also determine whether management has used management experts work in respect of that area while preparing financial statements, okay. Basically we have decided, we have seen this management's expert, we have discussed this in SF 500 audit evidence, okay. There we have discussed, if management uses work of management's expert, then what are the audit procedures that the auditor will perform. Now here, since the management has used the work of management's expert, that means in that area even management is not having expertise, thereby management has used management's expert. Now considering this, auditor will decide whether to use auditor's expert to verify this area or not. Hope this is clear. Nature, significance and complexity of the matter, okay, auditor will also consider this point before deciding whether to use the work of auditor's expert or not. Hope this is clear. Now there are certain specific considerations that the auditor will consider if the management has used management experts work. See here, in this case, factors influencing auditor's decision. When management used management's expert work, if auditor finds that management has used management's expert, then apart from these factors, auditor will also consider following factors in deciding whether to use auditor's expert or not. What are they? Nature, scope and objectives of management experts work, okay, whether management expert is employed by the entity or is a external party, okay, whether the management expert works within the entity or he is some external party who has been appointed by the management only for performing this work, okay, and what are his competence and capabilities, okay, competence and capabilities of management experts work, extent to which management can exercise control or influence over experts work, and any controls within the entity over management's expert work. These are the additional factors that the auditor will consider in determining whether to use the work of auditor's expert or not. Hope this is clear. Next, agreement with auditor's expert. Now after considering all the above factors, auditor has come to a conclusion that yes, in respect of this area I have to use auditor's expert work. Now auditor will enter into an agreement with the auditor's expert. What should be included in this agreement? First of all, nature, scope and objective of the auditor's expert work, okay, this will be included in the agreement between auditor and auditor's expert. Respective role and responsibility of auditor and auditor's expert, okay, what is the division of roles and responsibilities of auditor and auditor's expert will be clearly mentioned in that agreement. Nature, timing, extent of communication including form of the report of auditor's expert, okay, confidentiality to be observed by the expert, okay, since expert will be having access to some confidential information of the auditor, expert need to maintain confidentiality. Hope this is clear. Evaluating the adequacy of experts work, okay, auditor's expert work. Auditor has entered into an agreement and the auditor's expert has performed his work and found some conclusions. Now, while evaluating the work of auditor's expert, what will be considered by the auditor? Let us see. In respect of findings and conclusions that the auditor's expert has made, auditor will consider whether those findings and conclusions are relevant for the purpose of auditor, and whether those findings and conclusions are reasonable, and whether they are consistent with other audit evidence. Okay. Now, assumptions and methods that the auditor's expert has used. See, for performing the work, auditor's expert might have used some assumptions and might have followed some methods. Now, auditor will determine whether those assumptions and methods are relevant for the purpose of audit and reasonable. Okay. Source data, whether source data is reliable, complete and accuracy. These will be evaluated by the auditor. Okay. Next, after using the work of auditor's expert, auditor will obtain sufficient appropriate audit evidence regarding that area. Finally, auditor will give audit report. Now, while reporting, whether auditor can refer the work performed by the auditor's expert or not. Let us see. Reference to auditor's expert in the audit report. Basically, if the auditor wants to give unmodified opinion, in that case, no reference can be made to the auditor's expert in the audit report. Hope this is clear. No reference is required. Okay. Since the auditor is giving unmodified opinion, there is no requirement of referring to the work performed by the auditor's expert in the audit report of the auditor. Hope this is clear. Now, what will be the case if a auditor is giving a modified opinion? Let us see. Modified opinion. It may be appropriate to refer to auditor's expert in order to explain the nature of modification. Okay. Now, if the auditor is modifying the opinion based on the work performed by the auditor's expert, okay, based on the conclusions that have been reached by the auditor's expert, auditor is giving a modified opinion. Now, in this situation, it is necessary to refer to the work performed by the auditor's expert, because based on the conclusions that have been reached based on the work performed on the auditor's expert only, auditor is giving modified opinion. Thereby, it is very much necessary to describe why the auditor is giving a modified opinion. In this situation, auditor will refer to the work that has been performed by the auditor's expert. Hope this is clear. In such case, take permission of auditor's expert. Okay, while you are referring to the auditor's expert in the audit report, you please once take permission of the auditor's expert. Hope this is clear. And another important point to be remembered is that in both the cases, the responsibility of the auditor in respect of opinion that is expressed in the audit report will not be auditor is solely responsible. Okay, for the opinion that the auditor has given in the audit report, auditor is solely responsible. Okay, he cannot divert the responsibility to the auditor's expert. Hope this is clear. See, note, in both the cases, auditor's responsibility with regard to the opinion will not be reduced. Hope this is clear. By this, revision of SS 620 has been completed. Okay, and if you want to purchase classes, you can visit our website lecturepedia.in and you can place the order. And in the next class, we'll be starting with 700 series. Okay, bye bye, take care. Hi guys, how are you? Hope you people are doing well. Even I am fantastic. In this video, we will be starting with revision of 700 series. Till now, we have completed all the standards till 600 series. Okay, 200 done, 300 done, 400 done, 500 done, 600 done. We are left with 700 that will be completing. Now, this SS 700, basically this entire 700 series will be dealing with reporting aspect. Okay, now SS 700 specifically deals with format of audit report. Okay, what would be the format of audit report? That will be just going through in this SS 700. Basically a simple standard. SS 700, forming an opinion and reporting on financial statements. Now this standard deals with form and content of auditor's report. Basically we have modified opinion and unmodified opinion. In case unmodified opinion is given, then what would be the format of the audit report? Okay, in case of modification we have SS 705. Okay, now firstly report will be having a title as independent auditor's report. Okay, then we have addressee. Generally in case of companies, addressee would be members of the company. And then we'll have auditor's opinion. What should be covered in this auditor's opinion paragraph? First of all, auditor has to identify the name of the entity whose financial statements are being audited. Okay, the name of that particular entity must be identified in this paragraph. After that, auditor has to state that we have conducted the audit of these financial statements. Okay, state that financial statements have been audited. Okay, we have actually audited these financial statements as per SS. Such a fact has to be stated in the opinion paragraph. After that, auditor has to identify each statement of financial statement. Okay, we have balance sheet, profit and loss, cash flow statement, changes, statement of changes in equity. All these items of financial statements has to be identified in this opinion paragraph. Okay, balance sheet as on 31st March 2022, profit and loss, cash flow statement, and changes, statement of changes in equity for the year ended. Okay, like this he has to identify the statements forming part of financial statements. Next, he must give a reference to the notes and specify date of period covered by the statement. Okay, for which period these statements are covered. This has to be present in the auditor's opinion. And auditor's opinion, okay, what is his opinion on the financial statements, even that has to be stated in the auditor's opinion paragraph. After that, basis for opinion paragraph. Okay, in the opinion paragraph, auditor has given a particular opinion. Okay, now what is the basis, okay, on which he has arrived at such opinion has to be mentioned in this basis of paragraph, basis of opinion paragraph. What will be stated here? First of all, he has to state that audit was conducted in accordance with standards on auditing. Okay, we have conducted our audit in accordance with applicable standards on auditing that were issued by ICAI. Okay, that has to be mentioned. Then refer to auditor's responsibility section of the report. In the ending of the report, we will be giving auditor's responsibility. This basis for opinion paragraph has to refer to that paragraph of responsibility, auditor's responsibility that has been given. Then include a statement that auditor is independent. Okay, he must state that he has followed all the ethical requirements and he is independent of the entity. Then he should also state that sufficient and appropriate audit evidence has been obtained. Okay, this has to be stated in the basis for opinion paragraph. After that, in case there is any material uncertainty related to going concern of the entity, then we will be including going concern paragraph. Okay, in accordance with SF 570, we have discussed it there. Next, key audit matters. Basically these key audit matters are mandatory only for listed entities. We will be discussing this key audit matters in SS 701. Okay, SS 701 is specifically delegated to key audit matters that will be covering under SS 701. After that, we have management responsibility paragraph. Okay, in this management responsibility paragraph, auditor has to mention what are the responsibilities of management. First of all, management is responsible for preparation of financial statements. Okay, preparation of financial statements in accordance with applicable financial reporting framework. After that, establishment of internal controls relating to preparation of financial statements. Establishing internal controls in relation to preparation of financial statement. After that, management is responsible for assessing the entity's ability to continue as a going concern. Okay, assessing entity's ability to continue as a going concern. After that, it has to maintain a oversight over this financial reporting process. Okay, oversight of financial reporting process. All these are the management's responsibility, which has to be specifically mentioned in the audit report. Next comes auditor's responsibility. Okay, now in this auditor's responsibility paragraph, what has to be mentioned by the auditor? First of all, he has to mention that our responsibility as auditor is to identify and assess the risk of material misstatement as per SA 315, then design and perform audit procedures as per SA 330, then obtain sufficient appropriate audit evidence, SA 500 series, obtain understanding of internal controls. Okay, we will not give any opinion on internal controls, but we only obtain understanding of internal controls. Here you might get a doubt that, sir, we are giving a report stating that internal financial controls over financial reporting process. Okay, though there our opinion will be only on those internal controls that are relevant for preparation of financial reporting, financial statements, but not on other internal controls. Okay, there in that report, which is dealing with internal controls over financial reporting process. Okay, ICFR, that is related only for internal controls that are established around the financial reporting process. Okay, only on that we will be giving opinion in that report, but not on other internal controls. Hope this is clear. Next, evaluate appropriateness of accounting policies that the entity has used and conclude appropriateness of management use of going concern assumption. Okay, in the management responsibility paragraph, we have said that management is responsible for assessing the going concern assumption of the entity. Now in this auditor's responsibility statement, auditor has to determine whether management's use of going concern assumption is appropriate or not. Okay, that will also be the responsibility of the auditor. Next, there are some additional responsibilities. What are those additional responsibilities? Okay, additional matters to be included in auditor's responsibility paragraph. There are 3 additional matters that has to be included. First one, auditor has to state that auditor communicates with those charged with governance about planned scope, timing of audit, and significant deficiencies in the internal control. Okay, auditor must say that auditor will communicate with those charged with governance relating to 3 aspects. What are they? Planned scope and timing of audit, and in case there are any significant deficiencies in the internal controls, even that I will communicate with the management. This has to be mentioned as one of the responsibility. Okay, next, auditor has to provide those charged with governance with the statement of compliance with ethical requirements. Okay, code of ethics has prescribed certain ethical requirements, 5 ethical requirements: integrity, objectivity, confidentiality, professional behavior, and professional competence and due course. These 5 are the ethical requirements that I will comply with. Okay, relating to that, a statement has to be given to those charged with governance. And in case key audit matters are given in the audit report, then auditor must state that those key audit matters were the matters that I think, okay, that in my view are significant in the audit of a current period. Okay, such a statement has to be given. Okay, in case key audit matters are communicated, state that those matters were most significant in the current period. Hope this is clear. Then that is the auditor's responsibility paragraph. Now, where should this auditor's responsibility paragraph has to be included? This can be included either in a audit report itself. Okay, in the audit report, body of the audit report. Okay, within body of audit report, or it can be given as an appendix to the audit report. Okay, as an appendix to the audit report. If it is given as an appendix to the audit report, then the audit report shall make a reference to that appendix. Okay, stating that refer to the auditor's responsibility given as an appendix. And it can also be, the auditor's responsibilities can also be placed on website of appropriate authority, provided the respective law or regulation requires such mentioning of auditor responsibility on those website, and standards on auditing specifically permits that. Okay, only in that case they can be mentioned on the website, the respective website. We also have report on other legal and regulatory requirements. Okay, basically as per Companies Act we need to give CARO. Okay, basically we will be giving CARO as a annexure, and Companies Act section 143 subsection 3 requires reporting on certain 6 aspects. Okay, we will also be reporting on that 6 aspects. Okay, those will be covered under report on other legal and regulatory requirements, which has to be bifurcated in the audit report. Okay, there should be clear bifurcation between auditor's responsibility paragraph and a report on other legal and regulatory requirements. Hope this is clear. After that we'll be having signature, place of signature, and date of auditor's report. Okay, by this revision of SS 700 has been completed. In the next class we'll be meeting with SS 701. Okay, and if you wanted to purchase any classes, you can visit our website lecturepedia.in and you can place your order. Okay, take care, bye bye. Hi everybody, how are you? Hope you people are doing well. Now in this class we will be revising SS 701, communicating key audit matters. Okay, we'll just quickly revise this standard. First of all, this standard will be mandatory only for listed entities. Okay, for the audit of unlisted entities, auditor need not communicate key audit matters. Hope this is clear. Now, what are these key audit matters? Key audit matters are those matters that the auditors feels that they are significant in the audit of financial statements. Okay, and auditor will select these matters from the matters that are communicated to those charged with governance. Okay, auditor during the audit would have communicated certain matters to those charged with governance. Now, from those matters which were communicated to those charged with governance, auditor feels that certain matters are significant for the current period audit. Okay, now these matters will be communicated to the users in the audit report as key audit matters. Hope this is clear. Now let us see, communicating key audit matters in the independent audit report. It is mandatory only on listed entities. Now, definition of key audit matters: those matters that in the auditor's professional judgment were of most significant in the audit of financial statement of current period. Okay, how the auditor will select these matters? From those matters that are communicated to those charged with governance. See, key audit matters are selected from those matters communicated to those charged with governance. Hope this is clear. Now, why to give key audit matters in the audit report? Auditor is giving audit opinion. Okay, then why again, apart from audit opinion, he should also give key audit matters? There are certain reasons why he should give key audit matters. First reason is to increase the communicative value of the audit report. See, purpose of communicating key audit matters: enhance communicative value of audit reports. Okay, to give some additional communications to the users of the financial statements or users of the auditor report. Okay, next, provide additional information to the users, assist users to understand the entity. Okay, to help the users in understanding the entity and the audit that has been conducted. Provide basis to further engage with management and those charged with governance. Okay, now in order to when these key audit matters are communicated in the audit report, then the users, by reading these key audit matters, they will have a chance to communicate with those charged with governance. Okay, regarding these key audit matters. Now, another important point that has to be remembered is this key audit matters. Okay, the key audit matter paragraph that the auditor is giving in the audit report is not substitute for any type of modified opinion that the auditor gives. Okay, key audit matter is not substitute for modified opinion by the auditor, and also it is not substitute for management disclosure in the financial statements. Okay, auditor should not feel that okay, I have communicated certain matters to those charged with governance. Of these matters, there are certain matters which I feel as per my professional judgment, these are significant. Okay, there are some matters which are significant for the current period audit, but of these matters, certain matters are already disclosed by management in the financial statements. Even though management has disclosed these matters in the financial statements, if the auditor feels that these matters are significant for a current period audit, he must communicate them in the key audit matter. Hope this is clear. Okay, thereby key audit matter is neither a substitute for disclosure in the financial statements, nor substitute for modified audit opinion, nor substitute for reporting on going concern as per SA 570. Okay, even though all these three are present, or any of these three is present, auditor can give key audit matter paragraph in his audit report. Hope this is clear. Next, determining key audit matters. How the auditor will determine key audit matters? First of all, what the auditor will do is, auditor will prepare a list of all those matters that are communicated to those charged with governance. Okay, he has taken list of all those matters that were communicated to those charged with governance. Now, for this list, he will apply 3 factors, okay, to pick some of the items. See, this is a list of matters communicated to those charged with governance. Now, to this list, he will apply 3 factors. First one, risky areas. Second one, uncertainty, estimation uncertainty. Estimation uncertainty. And significant transactions. These are the keywords. Okay, now to this list, he will apply these 3 factors. Based on these 3 factors, he will pick certain items. Okay, he will pick certain items from the main list. Okay, by applying these factors, okay, of this main list, what are the communications which are having high risk, okay, and what are the communications which are having high estimation uncertainty, and what are the communications which are significant transactions that has taken place in the during the current year. Okay, by applying these 3 factors, auditor will prepare a sub list. Okay, these are the communications that the auditor has sorted out from the main list. Now, from these communications, those matters that the auditor feels significant, okay, most significant from these matters, significant from these will be communicated as CAM. Okay, this is how auditor will determine key audit matters. Let us see, the same has been explained here. Determining key audit matters, what he will do: from matters communicated with those charged with governance, taking into account following factors. What are those 3 factors? Areas of higher assessed risk, areas having higher estimation uncertainty, significant events or transaction occur during the current period. Okay, by applying these 3 factors, auditor will determine some matters. Now, of these matters, determined based on above criteria, identify most significant matters, and those most significant matters will be communicated as key audit matters. Hope this is clear. Next, how the auditor will present this key audit matter paragraph. First of all, he should give the heading key audit matter paragraph. Okay, list them under the heading key audit matters. This should be the main heading of the paragraph. Now in this main heading he should give appropriate subheading for each key audit matter. Okay, auditor can communicate how many key audit matters he want. Okay, there is no limit. Now for this each key audit matter, a separate subheading which is apt to that key audit matter will be given. Okay, use appropriate subheading. After that, now the introductory language of this paragraph should be like this. Introductory language shall state that these were most significant in audit of financial statement. These were addressed in the context of audit, and auditor does not provide separate opinion on these matters. Okay, these matters which I am communicating in the key audit matters are those matters which I have felt most significant for the audit, but I am not giving any opinion on these matters. Okay, you don't consider that this communication which I am making in the key audit matter is my opinion on these matters. I am just communicating you so that I'm communicating you which I have felt as significant for the audit. That's it. I am not giving any opinion on these matters. Okay, this has to be the introductory language of this key audit matter paragraph. Hope this is clear. Two matters has to be specified in the introductory language. First one is these were of most significant in the audit of financial statements, and the second one is these on these matters I am not giving any opinion. Okay, these are the two matters that has to be specified in the introductory language. After that, now the format of each key audit matter is divided into two types. Firstly, what he will do is, okay, individual key audit matter shall address why matter was considered most significant in the audit. Okay, he will give subheading. Under this subheading he will describe the key audit matter. In this description he should specify first of all why did auditor felt that these matter is significant for the audit. Okay, the reasoning he has to provide, and beside to that how the auditor has addressed this key audit matter in the audit. Okay, how matter was addressed during the audit. Okay, this is how the key audit matter has to be presented. Next, circumstances in which key audit matter is not communicated. Okay, there are basically two circumstances. Law or regulation precludes public disclosure. Okay, law or regulation does not allow disclosure of such matter. In that case, auditor should not communicate that matter as key audit matter. And the second situation is when auditor feels that the loss or the negative effect of communicating key audit matter is more than the benefit that will be derived from the communication of key audit matter. Okay, even in this situation auditor should not communicate key audit matter. See, in extremely rare circumstance, auditor determines that adverse consequence of doing so means communicating key audit matter would outweigh the public interest benefits. Hope this is clear. In these two situations auditor can decide not to communicate key audit matter. Hope this is clear. By this, SS 701 revision has been completed. In the next class we will be revising SS 705. Okay, and if you want to purchase classes you can visit our website lecturepedia.in and you can place your order. Okay, take care. Bye bye. Hi everybody, this is CA Balakrishna from lecturepedia.in. Now in this class we will be revising SS 705 modification of audit opinion. Okay, now in SS 700 we have seen what would be the format of audit report if auditor gives unmodified opinion. Here we will be seeing what will be the format if the auditor gives modified opinion. Okay, basically here we will be discussing the types of modified opinions and what are the situations in which modified opinion will be given by the auditor. Okay, if you are done with this, this standard gets completed. Now first of all, as you all know, opinions will be majorly of two types: unmodified, modified. Unmodified will not be discussing here. Coming to modified, in modified opinions there will be three types of opinion. One is qualified opinion, adverse opinion, and disclaimer of opinion. Now in which situations auditor will give these three types of opinions, that we will be seeing. Before going into the situations in which the auditor gives these types of opinion, we will understand one concept known as pervasiveness. What is meant by pervasiveness? Okay, now let's say for example in the financial statements there is only one item that is misstated, okay, or there are two items that are misstated, then that will not be pervasive, okay, because there are only minor misstatements and only one or two items affected. That is on one hand. On the other hand, there are many misstatements, okay, cash is affected, debtors are misstated, sales are misstated, assets are misstated. Entirely auditor is finding a lot of misstatements in the financial statements. This will be pervasive because various accounts are affected, okay, there are misstatements in various accounts. This will be pervasive effect. Hope this is clear. This is the difference between pervasiveness, not pervasiveness. Now the auditor's opinion, this qualified, adverse, disclaimer, will be based on pervasiveness of the misstatement. Hope this is clear. Now this is meant by pervasiveness. Now first of all, another thing is misstatements. Misstatements could be of material and immaterial. Now if there are immaterial misstatements, auditor is not concerned about them. Auditor is concerned only about material misstatements. Keep this in mind, okay. Thereby only when there are material misstatements, auditor will give this modified opinion. Hope this is clear. Now we will see what are the situations in which qualified, adverse and disclaimer opinion will be given. Firstly, auditor is conducting the audit. During the audit he found misstatements and these misstatements are material misstatements. Then he will check whether these material misstatements are pervasive or not, okay. Now he feels that these are material misstatements but not pervasive, okay. Yes, these are material misstatements but these are not pervasive, okay. These are not affecting entire financial statements, okay. There is only one or two items that are misstated. Apart from those one or two items, everything is okay, okay. Thereby these are not pervasive. In that case auditor will give qualified opinion. Hope this is clear. Whenever the material misstatements are not pervasive, auditor will give qualified opinion, okay. It is secondary whether auditor is able to obtain audit evidence or not able to obtain audit evidence, okay. Once the misstatements are not pervasive, even though auditor is able to obtain audit evidence or not able to obtain audit evidence, auditor will give qualified opinion. Hope this is clear. Now coming to the second case, auditor found material misstatements, but here these material misstatements are pervasive. Once the misstatements are pervasive, then the auditor cannot give qualified opinion, okay. Here the matter is becoming somewhat serious. The material misstatements are pervasive, then he has to give adverse opinion or disclaimer of the opinion. From these two he has to select. How he will select? Let's see. Misstatements are material and they are pervasive, then he will check whether he is able to obtain audit evidence regarding those misstatements, okay. Auditor says that yes, I am able to obtain sufficient and appropriate audit evidence that these material misstatements are pervasive. I am having audit evidence. Then you give adverse opinion, okay. You are having audit evidence that these misstatements are pervasive and these misstatements exist. Thereby, since you are having the audit evidence, you can happily give negative, that is give adverse opinion. Hope this is clear. And the second situation, auditor is not able to obtain audit evidence, okay. Misstatements are material, they are pervasive, but auditor not able to obtain sufficient appropriate audit evidence, okay. If auditor is not able to obtain sufficient appropriate evidence and auditor feels that the misstatements could be material and also pervasive, in that case auditor will disclaim the opinion. See, if he is not able to obtain audit evidence, then on which basis he will give the opinion? Thereby he will not give the opinion, that is he will disclaim the opinion. Okay, disclaimer of opinion means not giving any opinion. Why not giving any opinion? Means auditor is not able to obtain any audit evidence. Hope this is clear. Here you will get a doubt, sir, in the first case also, in the qualified opinion portion also, you said that once misstatements are not pervasive, you give qualified opinion whether auditor is able to obtain audit evidence or not able to obtain audit evidence. Here in the first situation, even though auditor is not able to obtain audit evidence, but since the misstatements are not pervasive, okay, since the misstatements are not pervasive, there are only one or two misstatements, why to disclaim the opinion? Okay, let me give qualified opinion even though I am not having audit evidence. Okay, thereby in that case, even though auditor is not having audit evidence, since the misstatements are not pervasive, auditor will give qualified opinion. But here auditor is not able to obtain sufficient appropriate evidence, and the misstatements, if at all there, could be having pervasive effect, thereby auditor will disclaim the opinion. Hope this is clear. Okay, this is how you need to check whether to give qualified, adverse or disclaimer of opinion. Hope this is clear. Once I'll just summarize it to you. First of all, in order to give first of all the audit basically you remember this in the form of 3 points. Firstly, check whether misstatements are material or not. Secondly, check whether they are having pervasive effect or not. Thirdly, check whether auditor is able to obtain sufficient appropriate audit evidence or not. Now, firstly, checking whether misstatements are material or not. If they are immaterial, then why to modify the opinion? Auditor is concerned only with material misstatement. Thereby, if misstatements are immaterial, then give unmodified opinion. If misstatements are material, then yes, come to modified opinion. Next step, in this modified opinion of these three, which one to give? Check whether these material misstatements are pervasive or not. Now, if material misstatements are not pervasive, then close your eyes and give qualified opinion, because material misstatements are not pervasive. In case they are pervasive, check whether auditor is able to obtain sufficient appropriate audit evidence or not. If auditor is able to obtain sufficient appropriate audit evidence, then give adverse opinion. If auditor is not able to obtain sufficient appropriate audit evidence, then disclaim the opinion. Hope this is clear. This is how you need to check. Now once we'll go through this. SA 705, modification of opinion in the independent auditors report. Types of modified opinion: qualified opinion, adverse opinion, disclaimer of opinion. Qualified opinion, when we'll give material misstatements but not pervasive. Okay, whether the auditor is able to obtain sufficient appropriate audit evidence or not able to obtain sufficient appropriate audit evidence. Next comes adverse opinion. These material misstatements are pervasive and sufficient appropriate audit evidence is obtained, then you will give adverse opinion. Next, disclaimer of opinion. Material misstatements and they are pervasive, but the sufficient appropriate audit evidence is not obtained. In that case, disclaim the opinion. Now, how these paragraphs will look? Basically, in the opinion paragraph, in case of unmodified opinion, what will be the name of the paragraph? Auditor's opinion. But here, the name of the paragraph should be qualified opinion. You should include this term qualified if you are giving qualified opinion, and you should include this term adverse in the name of paragraph if you are giving adverse opinion. In the same way, disclaimer. Hope this is clear. Now, how this paragraph will look like? In case of qualified opinion, except for the effects of matters described in basis for qualified opinion, financial statements give true and fair view. Okay, except for some matters that we have specified in our basis for modified opinion, okay, basis for qualified opinion, except for those matters, for entire matters, the financial statements are giving true and fair view as per applicable financial reporting framework. Okay. Next, coming to adverse opinion. In the auditor's opinion, because of the significance of matter described in the basis for adverse opinion, adverse opinion section, financial statements do not present true and fair view. Okay, this entire financial statements do not present a true and fair view. Why? The reason we have given in the basis for adverse opinion. Because of that reasons, financial statements do not present true and fair view. Okay, next, disclaimer of opinion. You need to state that we are not giving any opinion on these financial statements here. We are not able to obtain sufficient appropriate evidence, and in case there are any misstatements, those misstatements will be having a pervasive effect. Thereby we are not giving any effect. Okay, that has to be not giving any opinion, that has to be stated. State that auditor does not express opinion. Hope this is clear. Next, there is another aspect. Now what if management puts a limitation on your scope? Okay, after accepting the audit, you are conducting the audit, then management comes, auditor, you should not attend physical verification, you should not check the fixed assets, you should not check the cash. Like this, management is implementing some limitations on the auditor. Then what the auditor has to do? See, limitation of scope by management after acceptance of engagement. Auditor concludes possible effects of undetected misstatements could be material but not pervasive. Okay, auditor feels that okay, management is not allowing me to do this thing. If at all there are any misstatements in those items, those misstatements will be material but not pervasive. Okay, in that case I will give qualified opinion. In case I feel that the misstatements that could be present in those items could be pervasive, okay, could be pervasive, in that case whether withdrawal is possible, I will check. Okay, management is not allowing me to check those items, and if at all there are any misstatements in those items, those misstatements would be pervasive, then I will check whether I can withdraw from this engagement. The answer is yes. If I can withdraw from this engagement, yes, I will withdraw. If withdrawal is not possible, in that case disclaimer the opinion. Hope this is clear. By this essay 705 has been completed, and in the next class we will be revising essay 706. Hope this is clear. And if you want to purchase classes, you can visit our website lecturepedia.in and you can purchase classes. Okay, take care. Bye bye. Hi everybody, this is CA Balakrishna from lecturepedia.in. Now in this class we will be revising essay 706, emphasis of matter paragraph and other matter paragraph, a very small standard which will be completing if we just discuss what is this emphasis of matter paragraph and when it will be used, and what is this other matter paragraph and when it will be used. Okay, now before entering into the standard, we just keep a single point in mind, that is this emphasis of matter paragraph is there na, it is something that is related to financial statements. Okay, in the emphasis of matter paragraph we will be discussing something that is related to financial statements. Okay, now other matter paragraph, in the other matter paragraph is something that is related to audit. Okay, thereby whenever you see the term emphasis of matter paragraph, you should remember financial statements. Okay, it is related to financial statements. Okay, however these both paragraphs will be present in audit report only, but emphasis of matter paragraph will be dealing with aspects of financial statements. Okay, so whenever you see emphasis of matter paragraph, you should remember financial statements. Whenever you see other matter paragraph, you should remember audit report, audit that has been conducted. I hope this is clear. This you keep in mind. Now we'll discuss what is this emphasis of matter paragraph. See, now management has prepared the financial statements. Okay, and in the financial statements management will give various disclosures. Now there is one particular disclosure. Let's say for example, during the year management has changed the accounting policy for certain item. Okay, thereby management has given a particular disclosure in the financial statements saying that related to this item, due to so and so reason, we have earlier we were following this type of policy, now we have changed it to this type of policy. Like this, management has given some disclosure. Now auditor wants now auditor feels that this disclosure which the management has given in the financial statements is there na, it is very significant for understanding the financial statements. Okay, thereby auditor wants to communicate this to the users of the financial statements. Okay, he wants to say users that, hey users, in the financial statements, in the so and so point, management has given some disclosure, you please go and read that disclosure. Like this, auditor wants to communicate to the users. To make this type of communication, auditor will use emphasis of matter paragraph. Hope this is clear. Okay, here that the name of the paragraph is emphasis. Okay, he is emphasizing on something that is disclosed in the financial statements. Hope this is clear. If something is not present in the financial statements, he cannot disclose it in the, or he cannot emphasize it in the emphasis of matter paragraph. Okay, he can emphasize in the emphasis of matter paragraph only those disclosures or those items which auditor feels that necessary for purpose of understanding the financial statements and that are already disclosed or presented in the financial statements. Hope this is clear. This is what emphasis of matter paragraph means. Hope this is clear. Now coming to other matter paragraph. In the other matter paragraph, auditor wants to communicate to the users. Okay, here also auditor wants to communicate to users something that is related to the audit. Okay, here it is not related to the financial statements, it is something that is related to the audit. Let's say for example, the entity that the auditor has audited is having some 4 or 5 branches. Now in the financial statements of the entity, the respective financials of those branches will also be included, but the audit of those financials of those 4 branches of the entity were audited by some other auditor. Okay, our auditor, okay, has not audited the financials of those branches, but he just relied on the audit report that has been given by those other 4 auditors. Now the auditor wants to communicate this aspect to the users which is related to the audit. In that case, auditor will use other matter paragraph. Hope this is clear. Okay, he will say to the users, hey users, in the financial statements there are certain 4 branches that the entity is having. Okay, the financials of those 4 branches are also included here, but the thing is I have not audited those financial statements of those 4 branches. There are separate auditors that were appointed. Okay, those auditors have audited those financial statements and they have given me the audit report of those branches, and I have relied on those audit reports of that other auditors. Like this he can communicate in the other matter paragraph. Hope this is clear. Okay, that's it. The standard is completed. Now we'll just read it. What happened to this? Yeah. SS 706, emphasis of matter paragraph and other matter paragraph in the independent auditors report. Emphasis of matter paragraph. It is something related to understanding the financial statements. Other matter paragraph related to understanding the audit. Okay. Now, emphasis of matter paragraph refers to a matter appropriately presented or disclosed in the financial statement that in the auditor's judgment is of such importance that it is fundamental to users' understanding of financial statements. Now here you will get a doubt, sir, this is something similar to definition of key audit matters. Yes, it might be similar to definition of key audit matter, because in the key audit matters also auditor will communicate those matters that the auditor feels significant for the audit of the current period financial statements, but those key audit matters will be selected from the communications that were made to those charged with governance. Hope this is clear. Thereby here there is a specific point which says that in case there is any matter which has been communicated as key audit matter, then relating to that matter you cannot give emphasis of matter paragraph. Okay, matter should not be determined as key audit matter. Hope this is clear. Next, refers to coming to other matter paragraph. Other matter refers to matter other than those presented or disclosed in the financials that in the auditor's judgment is relevant to users' understanding of audit, auditor's responsibilities or auditor's report. Hope this is clear. This is SS 706. In the next class we will be revising SA 710. Okay, and if you want to purchase classes, you can visit our website lecturepedia.in and you can place your order. Okay, take care. Bye bye.